But I still say Please could we settle down so we could start today's proceedings.
Make your way to your seat.
For decades, the world spoke about Africa's potential. Today, Africa is defining its power. Last year, leaders from across the continent gathered with a shared conviction. Africa's trade future must be shaped by Africans themselves. At the Africa Trade Conference 2025, one message became clear. Africa must trade more within itself and more boldly with the world. When Africa trades, Africa rises. Across the continent, a new trade momentum is emerging. Digital payment systems connecting markets, trade corridors expanding across borders, African businesses scaling from local markets to continental players. The foundations of a new African trade ecosystem are taking shape. Last year, we asked a critical question: what will it take to unlock Africa's trade potential? Today, the question has evolved. Because the vision is clearer, the partnerships are forming, and the tools are emerging. Now the challenge is speed, moving from possibility to performance, from ambition to execution, from conversations to coordination, from vision to velocity. The future of African trade will not be written by circumstance. It will be written by courage, by collaboration, by leadership, and by the decisions we make together, starting today. Because the next chapter of Africa's trade story is not waiting to be discovered, it is waiting to be built. And the builders are in this room. Welcome to the Africa Trade Conference 2026, turning vision into velocity.
I don't know about you, Nzinga, but I expected a round of applause. You guys not see us in that video? Wow, okay. Thank goodness. We were in that video too, so that's a good look.
Excellencies, ministers present, members of the business community, members of the media, distinguished guests in the room and joining us online, a very good morning and welcome to AfCFTA's Africa Trade Conference 2026. My name is Nzinga Qunta, and I'm so pleased and privileged to be one of your hosts for the day.
Yeah, thank you so much, Nzinga. My name is Arabile Kumete. Ladies and gentlemen, my incredible host, please would you just look at how incredibly wonderful she also looks? A round of applause, please, for Nzinga Qunta. As I said, my name is Arabile Kumete as well. We'll also be your host for today. It's our second time doing this, Nzinga, so
such
a lot of excitement. Thank you to all of you for allowing us to be a part of ATC 26. This year, under the theme of turning vision into velocity, building Africa's trade ecosystems and ensuring that they're ready for real-world impact. As one can imagine, even just under that theme, we're trying to bring together some of the brightest minds, whether it be from banking, whether it be from business, government, civil society, even academia. All of those will be so important for us to try and take this discussion forward beyond just even our own shores in Africa and beyond.
Absolutely, Arabile. Before we begin the formalities, please may I ask that we put our phones onto silent so we're not disturbed by any noises when we are on stage. Speaking of phones, there's an app that we'd like you to please download to enhance your conference experience. The app is on Apple Store or Google Play Store. It's called Event Mobi. You can download it and enter the code ATC 2026.
Yes, delegates will then be asked to enter their email addresses, choose a password from that too, and then sign in. You can also use that opportunity to actually send in your questions to us if you'd rather prefer not to ask them from the floor especially, or you can even set up network meetings with a few delegates from that. Create a community, particularly of trade experts today and beyond, particularly on that app. Networking, of course, will take place as well in the room next door us. So you'll exit this room, turn to your left, and the room next door is where the networking will take place. All of our sponsors and partners are waiting to interact with you. So please do take part in that.
Absolutely, Arabile, and it's now our great privilege to introduce Mr. Roosevelt Ogbonna, the CEO of AfCFTA PLC. A round of applause, please, for him as he makes his way to the stage to welcome us. Thank you.
Good morning, ladies and gentlemen, and welcome to AfCFTA's Africa Trade Conference 2026. We're really excited to see many of our friends and partners joining us on what is the second of our trade conference out here in Cape Town. Last year in 2025, we had an interesting conference. We had deliberations around how we could transform Africa trade from where it is to the vision that we have created for the continent. We were brutally honest with ourselves. We asked ourselves one simple question: how can Africa trade with itself and with the rest of the world, and through that create shared prosperity that went beyond just a number? The facts that stared at us last year were sobering. The reality is that Africa still controls a small share of global trade. We understood clearly that the corridors were still fragmented and were more aspirational than functional, and that too many small businesses were export-oriented or Africa trade in spirit, but in reality, they were constrained. Even with all of those challenges, we gave ourselves 3 charges last year. Firstly, following all the discussions we had, that we're going to break the silos between policymakers, finance, and businesses. We're going to ensure that across the continent, we build an Africa trade that is built on data and information and analytics that allows businesses to be able to take informed decisions. And ultimately, we're going to ensure that across the continent, we had a system that worked not just for the largest of corporates, but even the smallest who aspired to do business. ATC 2026 is therefore not a new beginning. It's not a restart. It's a continuation of the conversations we had last year, acknowledging that the market is shaping up, the actions that we're taking are having impact, and we can do a lot more. So where are we today? We've made progress. But the reality is still there are many challenges that we face. We've seen value chains emerging across agriculture, manufacturing, services, and many of those value chains are led by many people in this room. We've seen cross-border brands and Africa brands going across the border, building themselves across the globe, and leveraging what it is that Africa has and the rich resources to build a name and a presence for themselves. We've seen platforms, technology platforms, that have broken the friction that exists in payments, in logistics, and in access to markets. But with all of those progress, we understand that this has been uneven. They've been concentrated in markets, certain markets where policy formation has moved faster than the others. They've been concentrated in specific segments and in corridors. And that's not good enough. So in ATC 2026, our conversation is how do we change this narrative? We also understand that across the continent, we still have challenges. Access to finance and the cost of finance is still really expensive for many businesses. We also understand that payments remain fragmented as they move from one platform to the next. We understand that the infrastructure gap creates delays and cost in every shipment that happens across the continent. We also appreciate that the information gap makes it difficult for trust to be built by buyers and sellers who seek to do business across our various markets. These challenges are real, but they won't stop us from driving the Africa trade that we desire. I guess the question for us in 2026, therefore, will be that this conference will not end as yet another talking shop. Will we make this conference a smart conference where a lot of engagement and innovation happens, and on the back of it, make it the birthplace of a movement that will add its voice in the transformation of the Africa trade that we desire? My charge is simple. The Africa continent can be all that we desire it to be. The actions of every one of us in this room post this conference is what is going to determine how Africa trade evolves. Let us do more business with each other. Let us trust more in each other. Let us build an Africa that is not just open for business, but is uniquely open for Africa business. And at AfCFTA, we're very glad to be part of this journey, and I encourage all of you to join us as we build the Africa of our dream. Thank you very much.
Mr. Ogbonna, thank you so much for that. Really appreciate it. And I think there's so many important segments that you alluded to as well. And I think even just the access to finances you made note of, still being so expensive. Being able to trade across the continent still seems like such a far-fetched illusion for some. We've had the African Continental Free Trade Area Agreement in place for at least 5 years. Ratification has happened for a lot of the countries across the continent. And yet, to be able to see how much it has worked, you'd have to look really deeply. So this is where we're going to try and take everything we took last year, that vision that we had last year, we're going to put it into action. And that's why it is turning vision into velocity. And I think that's going to be so important for us to be able to do. And thank you so much for that. And I think it really shares that message really well. So I'm usually the numbers guy. And I absolutely love graphs. I love numbers on a daily basis. And so the next part of today's proceedings is really one of those. It's a part that we get to really get into the data just a little bit more. So I'd like to ask for the data-driven insights into the trade landscape across our continent and beyond, Mr. Tolu Oyekan, the Managing Director and Partner for Boston Consulting Group.
Good morning, everyone. I think I will need a clicker to share some of the data that was referred to. Or maybe I'll be helped with it. So, good morning, Roosevelt. It's really nice to come after you. I think you already talked about some of the things. You teed us up, and in terms of some of the things I wanted to talk about. So, thanks for that tee up. Thank you very much to AfCFTA for convening this conversation and for bringing together the leaders, all of us in this room, from across the continent, so policymakers, regulators, financiers, infrastructure players, exporters, manufacturers, entrepreneurs, everyone that's trying to move the continent forward on this topic of trade. I've been asked to set the tone for today's conference with a forward-looking overview of Africa's trade landscape. The moderator said I would present a ton of data. My intention today is not to bore you and share too much data with you. In fact, My objective this morning is simple. It's to frame the trends that are shaping African trade in 2026, to surface some of the real risks that we must navigate, and to clarify the strategic opportunities, if you will, that shape the continent's economic trajectory. My intention, as I mentioned, is not to bore you with a lot of data and make this too technical. Instead, I want to provide us with a lens through which the rest of today's conversation can be focused on execution. The theme this year is turning vision into velocity. That theme assumes something very, very important. It assumes that Africa already has vision, whether that's vision that we defined last year or vision that we've always had. It assumes that we have vision. The question is whether we're building velocity with that vision. And I would attempt through this presentation to frame 3 questions for us, 3 questions that I hope we can answer through this conference to support the process of turning our shared vision into velocity. On the next page, there we go. So we may assert that Africa lacks sufficient trade velocity, but I think we mustn't confuse that lack of velocity, if you will, with lack of potential. We have a ton of potential. Africa does not lack potential. We're a market of 1.5 billion people. The size, it's not just about scale. That's demand, it's labor, it's opportunity. We have the youngest workforce in the world with the median age of under 20. And so when many regions of the world are going through contractions, Africa is expanding its productive base. We're home to significant shares of the critical minerals that will power the global energy transition. All of these are inputs that underpin the modern industry. And of course, the moderator mentioned the Africa Continental Free Trade Area. We have this. It's the largest free trade area in the world by number of participating countries. So the ingredients exist. Velocity is about whether these ingredients that exist, we can get them to compound, whether population can translate into manufacturing depth, whether the resources we have can translate into regional value chains, whether AfCFTA itself can translate into shipments, invoices, and repeat transactions. So the difference, this translation is really the difference between potential and performance. So let's look at the trends, and I'm only going to present very simple trends, 2 slides of trends, so it won't bore you too much with data. On this page, we see that Africa trades, right? Africa trades, but too often we capture too little value from that trade. A lot of us in the room probably know some of this data. A large share of the exports remain primary commodities. Trade volatility remains high relative to our GDP. Our share of global trade remains very modest. These have real implications. When our exports are concentrated and lightly processed, that means that value addition occurs elsewhere. When value addition occurs elsewhere, it means that learning, industrial learning, occurs elsewhere. When learning occurs elsewhere, it means that productivity actually compounds elsewhere. It also means exposure. We're exposed to currency volatility, fiscal volatility, investment cycles that follow other people's global price swings. These are, really challenging things that we need to deal with. Of course, it's not all negative. There are early signs, as Roosevelt mentioned earlier, of diversification. We're beginning to see that light manufacturing is beginning to expand in select corridors. We're beginning to see that regional food processing is increasing. Consumer goods production is beginning to deepen. Pharmaceutical capacity is beginning to emerge. Services, the exports of these services begin to rise in digital and business process segments. The question, though, is scale. Can these pockets of progress that we're beginning to see, can they become platforms? If we take a look at the external environment, global trade itself has actually slowed compared to pre-2011 period. Some may argue that we've not returned to the levels that we were at even before COVID. Trade is becoming more standards driven, it's more demanding. We're beginning to have a lot more risks that we need to navigate. I talked about currency volatility. That affects pricing, it affects margin, it affects financing costs. Logistic costs remain elevated, which erode our competitiveness. Geopolitical tensions, my goodness, geopolitics are beginning to shape supply chains and creating uncertainties in global corridors. Climate risks, that used to be something we spoke about a lot. We're talking about it increasingly less, but that affects agriculture, infrastructure resilience, insurance pricing, our energy systems. So in this environment of increasing volatility, increasing tension, predictability matters, transparency matters, reliability matters. And so we need to continue to think about how do we navigate. In these environments, with all of these trends, fragmentation can be very, very costly for us as a continent. But we'll begin to see opportunities again. Don't want to be a Debbie Downer. Many of the systems that are required for modern trade can be built deliberately if we coordinated and collaborate. Whether we're talking about digital documentation, interoperable payments, streamlined corridors. The environment indeed, externally, internally, is very, very demanding, but it is very, very navigable. So I think, we already have this answer that I'm presenting on this page, but I'm presenting nonetheless. If global trade is becoming less predictable, and if our current structure limits a lot of value capture, then the most practical resilient strategy for us as a continent is deeper intra-African trade. We already begun talking about this today. And it's not ideological, it's just structural. Trading more with ourselves builds regional value chains. It thickens supply networks. It allows firms to scale across African markets before they can compete globally. And the growth from deeper intra-African trade will not necessarily occur uniformly. Roosevelt talked about corridors. The idea is not for us to sort of be everything in 54 markets all at once. It needs to be corridor-driven. And corridor-driven allows corridor-specific competitiveness. So whether it's West Africa, it's linking our coastal markets with inland demand, or East Africa is strengthening the ports to hinterland integration, or Southern Africa is deepening industrial and mining corridors. Trade growth will be corridor-driven. It needs to be focused, sequenced, and scaled. And if we do this, the potential is quite measurable if we deepen inter-African trade. A lot of analysis suggests that under full implementation of AfCFTA, we expect significant increases in total exports. So not just the exports to the African continent itself. We expect meaningful real income growth across the continent. We expect tens of millions of people lifted out of extreme poverty by 2035. So this is the upside. But this upside is conditional, right? A trade agreement such as AfCFTA itself does not move goods. It's execution that actually does. We think about AfCFTA as a platform, and platforms create value when they are used consistently at scale. So for years, we have heard that Africa cannot deepen trade because our infrastructure is not ready. Infrastructure is often the limiting factor always, and everybody always focuses on infrastructure. I would suggest to us in this room that we start to think about this a bit in the reverse. And I hope there are no econ professors in the room to debate with me, but I think we should think about this a bit in the reverse. Infrastructure shouldn't lead trade. Trade should lead infrastructure. When trade volumes rise, firms invest. When firms invest, throughput becomes credible. When throughput becomes credible, infrastructure becomes bankable. When infrastructure improves, capital flows more confidently. And when capital flows, trade deepens further. So this is perhaps how we should be thinking about this in this room. Trade creates the economic case for infrastructure. Trade generates the revenue base that sustains it. Trade attracts the capital that finances it. When we argue about insufficient infrastructure, let's think about all of the resources that are taken out of the market, even in places that have limited infrastructure. So that is the argument for why we should sort of think about trade attracting the capital that needs to finance our infrastructure. And so the trick is not for us to wait for perfect infrastructure. It's to create sufficient trade density in select corridors and sectors so that the infrastructure investments become inevitable. Trade then is not the outcome, it's the catalyst. Trade becomes the catalyst for the Africa that we want to see. So then you go, well, Tolu, if this, crazy flywheel that you're suggesting is clear, if this logic is clear that trade is the catalyst, why isn't the flywheel spinning faster? Why aren't we seeing more trade and better infrastructure as a result? I would argue that it's because execution slows when we see three frictions: capital, information, trust. So first, capital. Africa is not capital poor. Maybe we were before I was born, but for sure we're not capital poor today. Domestic savings pools are expanding. Pension funds, insurance companies, sovereign wealth funds, and development finance institutions across the continent now manage well over $1 trillion in assets. In several markets, pension assets have multiplied over the past decade. Certainly in Nigeria, where I live, this has happened. Yet there remains a substantial trade finance gap. For many firms, particularly the small and medium enterprises, financing remains expensive and documentation intensive. So capital exists, but it does not always flow efficiently to trade. Second, information. A trade requires visibility. It requires clear standards, reliable documentation, shared data across borders. And when information is fragmented or is opaque, risk premiums rise and transactions slow. Third, trust. You can think of trade like a promise that we're making across borders, right? A promise that's made between, a music label in Lagos with, a distributor in Lusaka, perhaps. It's a promise across these distances. And when trust in our institutions is weak, compliance costs increase and deals shrink. So this is why trust is very important. So capital, information, and trust. These, I would argue, are the execution challenges. They're solvable, but they require all of us in this room to coordinate. So I believe there's real optimism. Roosevelt mentioned that we defined a vision last year. We talked about, some of the things we wanted to do last year. I would argue that there is no better time than now to address these three frictions that I mentioned. AfCFTA has provided the shared direction. African financial institutions such as Afreximbank and others are more capable and more regionally integrated than a decade ago. Regional champions are now scaling their cross-border operations. Technology is reducing transaction costs as well and improving transparency. Actors are also gathering. The actors that are required to build this velocity that we aspire to are increasingly aligned. They're beginning to convene in rooms such as this one. So how do we coordinate? What exactly does coordinate execution truly mean? It means mobilizing capital at scale, including domestic savings, into trade-enabling instruments and risk-sharing structures. It means making trade information transparent, digitized, and interoperable. It means earning trust across borders through predictable enforcements and focusing on priority corridors. There could be a tendency for us to try to do everything, but we need to prioritize, focusing on priority corridors and sectors where progress can be measured and scaled. It's not about 50 or 100 initiatives. It's about disciplined, prioritized sequencing. So my objective was to sort of set the scene, set the stage, set the discussion. So let me frame the mandate for this room for today. I promised I would do that, so let me do that. If this conference succeeds, in my opinion, what will be different? What would we have achieved together? I think there are 3 questions we must answer before we leave today. First is, how will we mobilize capital at continental scale in ways that reach firms beyond the largest corporates? How will we mobilize capital at continental scale in ways that reach firms beyond the largest corporates? Second, how will we simplify and digitize trade information so that cross-border transactions become faster and cheaper? Third, how will institutions earn confidence quickly enough to enable execution? I believe that if we leave here with clearer answers and concrete commitments, I think this is our action conference. If we leave here with clearer answers and concrete commitments that can be tracked over the next year, such that when we come back here next year, we can look at the commitments we made and see the progress against them, then this conference, my friends, would have built velocity. So I close with this famous African proverb. It's probably my favorite saying of our people. It's one of my favorite because I actually kind of disagree with it in a way. So it says, if you want to go fast, you go alone. If you want to go far, go together. So I want to assert that we cannot afford the trade-off of between fast and far. You know, Africa needs to go fast, and Africa needs to go far. And I think the way we do both is by aligning our action. You know, Africa does not need more belief. The vision of a stronger, healthier, more developed, peaceful Africa has been known for a very, very long time. The role of trade in enabling this vision is also quite compelling. So what we need now is aligned action. I think velocity is built when many actors, all of us in this room, move together consistently. No slogans, no applause lines, just quiet confidence. Thank you.
Thank you, Mr. Oyakan, for those insights. I know you just shared the proverb about if you want to go fast, go alone. If you want to go far, go together. Another proverb that we have on the African continent is if you want to know where you are going, you need to look behind you to see where you've come from. That's from Ghana. And what we're going to do now is going to continue looking forward. Up next, we've got a keynote address that focuses on unlocking Africa's intra-regional trade potential with 2 incredibly distinguished speakers who will address regional integration, trade finance, financial connectivity, and the future of African trade. If I can ask Mr. Kwabena Airebi, the Managing Director, Banking Operations at Afreximbank, to make his way to the stage, please, and a round of applause for him as he does that. Thank you.
Thank you. Roosevelt, thank you, distinguished ladies and gentlemen. It is a pleasure to be here. When you leave a country like Egypt and you come somewhere else, the last thing you want to hear is that temperatures are hitting 40 degrees plus. But hey, that's the world in which we live. I bring you greetings from the President and Chairman of Afreximbank, Dr. George Elombi, who couldn't be here because he's in Lagos this week, signing the hosting agreement for the 5th Intra-African Trade Fair, which takes place in Lagos in November 2027. So please allow me to invite everybody here to join us in Lagos as we celebrate everything Intra-African next year. Distinguished ladies and gentlemen, it is a real honor to address you today at this second Africa Trade Conference 2026 on behalf of Afreximbank. I must commend our partner and sister institution, AfCFTA, for bringing together such a diverse and auspicious group of stakeholders who together recognize that Africa's integration will not be achieved by intention alone, but by the financing, settlement, and execution of trade flows across our continent. We are all too familiar with the statistics, and we saw a few from my colleague, the previous speaker. Depending on the source, the percentage of Africa's intra-African trade lies somewhere between 15 and 17% of the continent's total trade. Contrast this with how much other regional counterparties trade within themselves. Asia is cited sometimes at 59%, Europe, we saw previous slide, at 62%. For Africa, this is not due to a lack of demand or capability, but due to constraints, financial, regulatory infrastructure, that slow the movement of goods, raise the cost of capital, and reduce competitiveness. Across the continent, billions of dollars in trade finance demand go unmet every year. Risk perception is often higher than actual risk, driven by limited information and insufficient cross-border transparency. Correspondent banking relationships that we have relied on historically to drive trade have thinned, raising costs and increasing settlement times. FX liquidity pressures continue to slow deal completion. But trade cannot grow without financing, as we continue to hear. And with the right structures, risk mitigation, and liquidity support, financing will flow. It is now known that the key to the transformation of successful Asian economies was control over their domestic financial systems. We can no longer rely on foreign banks, whose primary goal in any economy is largely to support the businesses of their home countries. That is why we in Afreximbank continue to push for and support the growth of strong financial institutions on the continent, us, other regional DFIs, and indigenous private sector banks such as our host, AfCFTA. As we strengthen our balance sheets, our impact and relevance for our member countries increase, with interventions spanning trade finance, trade facilitation, and trade enabling infrastructure. For over the last decade, Afreximbank has created a dedicated business line focused on intra-African trade. This we call our Intra-African Trade and Export Development Bank, has ensured that today, up to 32% of the bank's financing is directed at intra-African trade. As an example, in trade facilitation, we have piloted a transit guarantee scheme that is intended to ensure seamless movement of goods across the continent from the coastal areas into the inland, or what sometimes referred to as landlocked countries. This is now operational in the EAC region, and in the few months of going live, has facilitated over $200 million in transit bonds and guarantees. We also set up correspondent banking business to look at how we address the perennial lack of access to global financial systems by our banks and our economies. That intervention today provides LC confirmation lines to over 350 banks across the continent through the various economic cycles. We do not shut that tap when things go bad. Actually, we will come in to make sure that our banks and our countries have access to the critical risk mitigation tools to support their trade. Beyond financing, we also recognize the fact that sometimes it is not access to financing, but simply the inability of our countries, of our businesses to actually make payments. And that is why we set up what we call a trade payment solutions that today provides payment services to over 200 banks across the continent, giving them the ability to deliver cross-border payments for their top corporate clients. We have, over this period, supported about $30 billion in documentary trade confirmations and facilitated over $100 billion US dollars in trade payments since 2021. The interesting thing is not just about these interventions on a standalone basis, but just think about it for a second. What we have created is an ecosystem with relationships spanning over 400 banks in 53 African countries. And together with the Pan-African Payments and Settlement System, we have arguably created the largest such banking network for the continent. Just imagine the possibilities of what you, our partners, and us can do for intra-African trade if you take advantage of this network that we have created. Instant payments across the continent for our banks and countries, irrespective of currency, seamless visibility of trade finance flows, regional collateral registries, and more importantly, the confidence to materially transform how we fuel trade across the continent. Afreximbank's trade gateway is delivering a digital ecosystem that brings together our payments, settlement, customer due diligence, trade information, and e-commerce capabilities to support intra-African trade. The previous speaker talked about lack of information, and that's why we've ensured that we've brought together information on regulations across our countries, information on the different goods and services that our various countries offer, all in one place, giving you and your customers the ability to access this critical information to actually de-risk this perception on the continent. For the SME population, who we recognize as the engines of this growth, our SME development interventions provide the necessary liquidity and capacity building through our trade finance intermediary banks to ensure that this critical sector of economies can scale production and participate effectively in intra-African value chains. At Afreximbank, we have discovered that the most successful private sector partnerships happen when African financial institutions can co-invest and share risk alongside each other, and where African DFIs are trusted to deploy resources to the continent's most critical needs. And I'll give you a couple of examples. At the height of the COVID-19 pandemic, when none of the major vaccine manufacturers was willing to even discuss with African countries, Afreximbank provided an innovative $2 billion US advanced procurement commitment guarantee to Johnson & Johnson through the African Vaccine Acquisition Trust Vehicle to secure access to 400 million doses of vaccines for the continent. Further, the bank put in place a trade impact mitigation facility under which we disbursed over $8 billion US to assist our member countries to adjust in an orderly manner to the financial, economic, and health service shocks caused by the pandemic. Let me also point you to the Dangote refinery and petrochemical plant, which today is operating at full capacity, incorporating the largest single train refinery in the world and one of the largest nitrogen fertilizer and petrochemical plants globally. Afreximbank is the largest financier of this project, and we provided billions of dollars of financing directly and indirectly. But even more important is the fact that much of the financing balance came from our partner banks that are owned and controlled by Africans, a key one being our host, AfCFTA. Similarly, the bank played a critical role in arranging the $2.9 US financing towards the development of a hydroelectric dam project in Tanzania. The Julius Nyerere Dam project, which is the largest intra-African EPC project, is being developed solely by African contractors and financed by African banks. The project is expected to generate over 2,000 megawatts of electricity and create a reservoir with an area of about 914 square kilometers. This is exactly what we must aspire to do more of, to have African financial institutions funding critical projects on the continent and bridging the trade finance gap. Excellencies, the next chapter of Africa's integration is not yet written, but it can be a story of growth. Growth driven by the engine of regional trade, with African financial institutions working collaboratively to provide the needed trade finance, payment systems, and risk mitigation to fuel intra-African flows. And in this room are the people who will make it happen. Thank you for listening.
Mr. Irabi, thank you so much for that. Really appreciate it. And I think it again speaks so much to what can be done, what needs to be done. And I think when you were speaking so much about the public-private partnerships and how that could ultimately help, and the success thereof is going to be fully dependent on how governments play a critical role in policy, for one, but then how business and ensures, and the private sector ensures that it is all followed through upon. There's so much investment that needs to go in through all these pipelines, and being able to trade across borders is going to require more than just speaking. It's going to actually require a coordinated effort. What that pretty much looks like from today moving forward is going to be up to the hands. The hands will have to do all the work. It's no longer just going to be about us speaking. But my job is to speak, so I will continue to do so as well today. So with that, ladies and gentlemen, we continue with our keynote addresses this morning, and want to again remind you that we do have the app that we would really like you all to engage with. Please, if you do go onto your iOS store or your Google Play Store, you can download that app. It is Event Mobi. EVENTMOBI, and you can download that, and then you'll be asked for a code which will be ATC 2026, and that will ensure that you then have access to the app for this year. You can then see all your delegates, organize meetings, and of course even ask questions that you would like to pose to any of our panelists, and even organize any of those networking sessions which we'll be having in the room across. Ladies and gentlemen, if we continue with our keynote addresses then this morning from the AFDB's Southern Africa region, the Director General, Dr. Kennedy K. Mbekini, joins us now. Ladies and gentlemen, a round of applause.
Good morning, distinguished participants. It is a great honor to be invited to this prestigious event. On behalf of the African Development Bank, I also would like to thank Afreximbank for the invitation. I would like to focus more on the role of infrastructure in accelerating regional integration, and in the process promoting sustainable economic development, and most importantly, how to finance the required infrastructure. This is not a new topic, but we are operating in a different environment where we need to ask ourselves very difficult questions. And between ourselves and the policymakers, we need to provide answers to the African citizens that we present. There is no stronger indicator of the need for accelerating regional integration than the indicators we have experienced in the last couple of years, and the ongoing developments, be it tariffs or be it wars. Why should face the question we have to ask ourselves? Why should the challenges in Europe, in Ukraine, lead to higher food prices in Africa? Is it not an embarrassment? Why should the ongoing war in the Middle East lead to higher food and fuel prices in Africa, when we have Nigeria, when we have Angola, when we have a lot of other countries producing oil? Why should higher tariffs on our exports to the US create anxiety to us, when we have heard that we have the largest market in the world? So these are the questions that we need to interrogate. We need to examine ourselves and ask why. Perhaps one of the reasons is that because we are fragmented, we are small, and we have underdeveloped markets. The question is, why are we fragmented? Why are we small? Why do we have underdeveloped markets? I think we are fragmented and we are small by choice, because we choose the neighbor to remain small when we can integrate and become bigger. And that is a choice that we've made as Africans, and that is a choice that we can make as Africans to make ourselves big. We can make ourselves big by breaking down the borders, by facilitating the markets, and then allowing our people to move freely. But let me recap at the risk of sounding redundant. Regional integration has been the central vision of African leaders since the early years of independence. It is key for Africa to meet the competitive challenges of globalization and improve the welfare of its people. In the case of landlocked countries, integration with neighboring countries can help reduce trade transaction costs and expand the effectiveness of size of markets, enhancing the potential attractiveness of investment. Regional integration boosts economic growth by expanding markets, lowering trade barriers. It also enhances regional stability and peace. It's common that when there's a market and you have something to sell, you will be, as a wise person, the first person to protect the market, not to burn it. And as a fool, you'll be the first one to burn it because you have nothing to sell. So regional integration brings in stability. Most of the conflict we see on the continent, perhaps if we're integrated and there was something to hold on to, our people will not be fighting with each other. They will not be encouraged to fight at all. It also facilitates, regional integration facilitates infrastructure development. Regional cooperation facilitates the development of joint infrastructure. Those with a surplus capacity will share with those with deficit. And those that have too costly infrastructure will benefit from those that have cheaper infrastructure. We have seen it, for example, in the aviation. The expansion of Ethiopian Airlines has solved most of our problems. But you can imagine if we had 3 or 4 Ethiopian Airlines operating efficiently, we will solve most of the problems that we have. So these are things that are within our control. Why is it that we are not trading? Perhaps I may differ a little bit with my previous colleague. I think infrastructure is fundamental. Infrastructure is fundamental for us to be able to produce and to be able to move from point A to point B, and in order to be able to trade. I remember in my mother's village, my grandmother used to make what they now call fat cakes, but she was just making it for the family. She could not have any idea, she had no reason whatsoever to think of selling it to the other village, because there was a big river in between and there was no bridge. So with time, roads were constructed, a bridge was constructed, we saw people trading, and of course in the process she lost her business because there were better producers of that fat cake. But there are winners and losers, but we can end up with a win-win situation. But that's what trade is all about. It's about learning from others and producing and improving the quality of your product. Now, on the issue of infrastructure, I'm just repeating for the converted. Whether it's energy, for example, whether it's road infrastructure, whether it's port infrastructure, we can talk about the Continental Free Trade Agreement. We can talk about the policy harmonization. But if infrastructure is not improved, we will not be able to trade. So, for example, if you are in Togo and you want to export to Namibia, you have to ship to Morocco or Spain before it goes to Namibia. The reason is there is port infrastructure, but we don't have shipping lines as Africans. So we rely on European shipping lines or the bigger shipping lines that will carry the load from Togo to Spain, and then they offload into smaller shipping lines that will take you to Namibia. That is costly. So there are opportunities, but some of these opportunities are opportunities that become difficult because of the policy environment. So the policy environment is retuning the thinking of government, because as private operators, you are sitting on a lot of assets, more than 4 trillion in assets that pension funds and banks are sitting on. And they are ready to work with governments, but the government thinking is different. The government thinking on the services is, which we all understand, government responsibility is to provide service to the people. But the thinking has been that the government should also own the infrastructure that provides service. So if the government responsibility is to provide water to the people, they also want to own the infrastructure that provides water. But maybe we can work with them to retune to say, your responsibility should be to ensure that people receive water. Who is going to provide the water is irrelevant, but you can regulate and ensure that people are receiving water. So you can work with the private sector so that the private sector can provide the infrastructure and the government will buy the water from the private sector. It can be a concession. In that case, then they don't have to use the balance sheet, because most of the financing on infrastructure, even for us private sector is there to make profit. So they ask the government, we need a guarantee. But there are some economically viable, most economically viable infrastructure that the private sector can be able to develop if the government would allow that environment. They can develop without a government guarantee. But what you need is an enabling environment that will protect the money, the mandate that you are given by your shareholders. And that's where the likes of African Development Bank come in. You have to ask us, you are a AAA rated institution. How can you be able to de-risk? How can you help us de-risk? So that as a private bank, Access Bank, I want to invest in Malawi. I keep mentioning Malawi because I'm from Malawi, so I'm hoping that Access Bank will think about that bridge that is missing in my mother's village. But Access Bank says, we are ready. We have $4 billion. We would like to invest in Malawi. Malawi is in need of road infrastructure. But Malawi is highly indebted. But you see that people will be willing to pay for the tolling. Or Malawi is in need of energy. We can finance, we know that people are in need of energy. But we're not sure about government. We're not sure about policy consistency. Because when there is a change of government, maybe they will not want to pay us. And that's where the likes of African Development Bank come in, because we are AAA rated. We provide the security. We provide the risk to say, we can take this risk. You invest, government sign in as a concession to Access Bank, whether it's 20, 25 years, and the government will pay. And Access Bank would have the confidence, because to default on ADB, it's suicide. You are killing yourself, because you will not get any financing anywhere. So the governments are committed to provide, to honor the contract. So as a collective, is to look at how we can mobilize the resources we have, how we can bring a platform for this disintegrated, fragmented financial system and the standards, so that when we mobilize the capital, who can come in at upstream in terms of project preparation, who can take upstream risk. And as African Development Bank, we are saying we can take that upstream risk so that you can now decide where you enter. And we can mobilize and work together, whether it's Afreximbank, Access Bank, Standard Bank, ABSA, or any other bank. So in that way now, we have been able to mobilize the resources for the infrastructure that is needed for the entrepreneur to be able to produce and able to trade. So for example, in a free trade agreement, something that we try to avoid, there are winners and losers in a free trade agreement, no matter what they're going to tell you. Somebody is going to win, somebody is going to lose. So I use the example of South Africa, for example. There's a SADC free trade agreement. I still use the example of my mother's village. There used to be a bottle store owned by a cousin. So with the free trade agreement, a South African supermarket came in. That bottle store disappeared. So the 3 or 4 workers who used to work in that bottle store, have no job. They have to go somewhere look for the job. So the immediate loser in this free trade agreement is Malawi. Now, Malawi has a low cost of labor compared to South Africa, perhaps more predictable because they don't normally go on strike. So it's more predictable. So as a producer, that's a market to go to produce. But you're saying, but Malawi doesn't have energy. The borders are so difficult to bring goods from Malawi to South Africa, which is the largest market. So I can't go and produce in Malawi. I'll still produce in South Africa. Now the question we're asking now as a region, as a continent, how do you help the low-income countries to build the necessary infrastructure so that they can benefit from this Continental Free Trade Agreement? If the Continental Free Trade Agreement is not going to look at the infrastructure of low-income countries, it will be a failure. Because the ones that will perceive as losing would hold on. They were not going to open the market. But if you bring the infrastructure, if we find a mechanism to fund the infrastructure in those low-income countries, it's going to be a win-win. So what the low-income countries can produce, what the high-income countries can produce, the low-income countries will consume. The low-income countries in the first round are going to be the providers of low-cost labor. But if labor is not allowed to move, then, as you know, all politics is local. So the politicians will ring fence, and they will not allow this Continental Free Trade Agreement to succeed. So what we need also to go back to the policymakers is how do we ensure that this Africa Continental Free Trade Agreement is a win-win, even to the low-income countries. But the biggest engine that we need to work on is the mobilization of these resources at scale to provide financing even to low-income countries. Because if we go the traditional route, then they would say, is this country investment grade? Then we'll say, no, it's not. I keep going back to Malawi. Somebody said, oh, Malawi is not investment grade. I said, yeah, but Standard Bank in Malawi is participating in the financing of road infrastructure. So this investment grade and the risk perception is something that is scaring other investors. But you know that the risk is a perception that is given to African countries. That perception that says that in Africa, government can just wake up and take away your asset. But you know the story, that it's not true. But they still increase risk, and the premium is high for financing in Africa based on the perception. And that perception, sometimes, it's intentional. I once lived in Uganda. There was a very good, famous Italian restaurant which was always busy. So I asked the owner, the restaurant is always busy. Why don't we have more Italian restaurants in Kampala? He says, I keep telling them it's bad for business. Because he wants to be the only one. So they will continue to tell us that Africa is risky so that they can yield as much as they can from us. And then they will be charging 400, 500 basis points beyond what they are charging in other continents. But the responsibility is ours to shape the African narrative on the Continental Free Trade Agreement, on the risk that it's just a perception, and then to mobilize these resources that we have as Africans. We don't need to go to New York, we don't need to go to London because we have our own banks, we have our own capital. Now, as the DFIs with Afreximbank, African Development Bank, the other regional development banks, we come together and ensure that we are providing you with the protection so that you can be able to convince your shareholders that we have these other banks supporting us, and then they are taking the upstream risk. So the mobilization of capital, of private capital, is something that we need to work on, but we also need to work on government in terms of thinking. Because we know that government balance sheet is stretched. but we also have to retune the government thinking that they don't need to own the infrastructure to provide a service. They've done it with buses. Private operators are operating buses, they just regulate, and government is happy. They can do the same with water. They are doing the same with universities. In some cases, they are doing the same with energy. But it's just that partnership that we need to manage. So I'm repeating what you already know, but I thought I should share with you. I should share with you the frustration and lack of understanding as to why every time there's a global conflict, we get nervous. We get nervous because we are fragmented. As they said, in this case, we are the largest continental free trade agreement, the largest market in the world, but that largest market needs infrastructure, needs to improve our income in order to be able to consume, so that whatever we are exporting and processed, we can be able to process and we can be able to consume ourselves. And perhaps that explains why China is a superpower, because they have the market, they're able to produce. We have the market, we are not producing, we are not consuming. So I'm hoping that, as indicated by the previous speaker, I think it's Tolu, saying that one of the questions that we need to work out in this conference is how do we mobilize capital at continental scale? So this is one of the proposals that I'm sharing with you, that the money that you have, the money that you are sitting on, is the money that is needed for development. Let's engage governments aggressively. Let's have some confidence in government. I know that we are entitled not to trust them because they can be crazy sometimes, but it's our government, we are part of the government. So we need to talk to them, we need to impress on them, and we need to give them examples that have worked, because you have done tremendous work in other countries. We need to bring in those stories to government so that government now can have the confidence to say, we leave it to you, we are only going to regulate, but we are going to create an enabling environment for you to participate in the provision of infrastructure that will promote Africa's regional integration and therefore make the Continental Free Trade Agreement a success story that our forefathers were preaching so many 60 years ago, 50 years ago. But at some point, we need to stop preaching. We need that action. We need to have a sense of agency. I'm hoping that when we come here next year, we come year after, we are not going to be nervous about a conflict in Ukraine, about a conflict in the Middle East. Because if oil is not moving in the Middle East, our oil from Nigeria, from Angola, from wherever it may be, or Uganda, will be moving across the continent. And that's what we are looking for. And that's what this provision, the platform that AfCFTA has provided, it's a very critical platform. It's a platform that is opening us, it's opening our eyes to say we can do as African. A couple of years ago, it was other institutions from other continents that were bringing a forum like this to discuss our issues. Now we have our own institutions taking a lead. Let's support this initiative, let's ensure that it has success, and then let's quantify, let's monitor those results and share across the continent. I thank you for the opportunity. Thank you very much.
Thank you, Dr. Mbekiani and Mr. Irebi, for highlighting the core systems required to turn ambition into actual trade flows and vision into velocity in your keynote presentations. We will, throughout the day, continue to interrogate these themes, but thank you so much for your contributions.
Yeah, I really appreciate that. So, ladies and gentlemen, we're going to shift gears a little bit, why don't we? And I want you to imagine something here, Nzinga, right? You have a Ghanaian trader who walks into a market in Lagos to buy fabric. You can decide which fabric this is. They agree on a price. Again, you can agree on the price as well. And the Ghanaian trader proudly says, you know what, don't worry, I'll pay you right now. They do so. Pulls out his phone, sends the money. Guess the payment method? SWIFT. Then what happens? 5 minutes passed, 10 minutes pass, still nothing has happened. So the big question then gets asked, my brother, are you buying this clothing, or are you delivering a pigeon to send a message through America via Europe to Africa? What are you actually doing? Somehow the money left Ghana, took a sightseeing tour through Europe, stopped by New York for just a little bit of coffee, and then maybe, just maybe we hope, landed up in Ghana. So how exactly do we make this easier? Isn't that the whole point of us trying to figure out trade on our own terms? That's what we will need to do. Figure out this trade story on our own terms. The Pan-African Payment and Settlement System is meant to do exactly that. That is the point of PAPS, because it'll leave Ghana in cedis and arrive in Nigeria in Naira. That is exactly what we're looking for, Nzinga.
All right, in order to take us through more of this, please may I ask Mr. Mike Okbalu, the Pan-African Payment and Settlement Systems, to come onto stage and address us with his keynote presentation. Thank you.
Thank you very much, and it's really a pleasure to be here. I think the part of the story that he didn't conclude is that while it's taking coffee in Europe or America, it's also an opportunity for people to decide whether the trade can go through or not. So payment systems are beautiful things to have, but they're also an instrument of control. And what we are saying here today is we want to take our own destinies into our own hands. So let me start by thanking Roosevelt and his team for this opportunity. You know, in the PAPS network, we have 170 commercial banks across Africa, and we speak to different executives. And I think right here in this CTICC, we had a meeting about 3 years ago with Roosevelt, and it was clear to me that a lot of people mouth Pan-African, but Access Bank gets it. So for that, I say a big thank you to Access Bank. So I'm speaking today talking about trade, payment, and technology, and I want to say that the world is changing. There's the geopolitics around the world tells us that the world is changing. Europe has had its own time. Asia has had its own time. This is Africa's turn. But nobody is going to hand it over to you. You're going to have to decide that you want to prosper and build all of the platforms. So payments, trade, technology, they are no more just enablers of efficiency. They're actually the tools for sovereignty. And Africa has to take its place. So I have just a few thoughts. It's really been quite enlightening listening to Roosevelt and listening to the speakers before. So I'll quickly go into my slides. I hope this works. Now, this slide, I decided to start with this slide because this slide shows how PAPS, the vision that PAPS has. PAPS wants to be able to showcase Africa on a single screen. So from one screen, you're able to see all of Africa, and you're able to trade with all of Africa. And I'll explain how this is made possible. So payments power all of our lives, from the time you wake up to when you go to bed, from buying your coffee to your transportation, to every single thing that we do. Indeed, payment is a key part of life. So for every day that we wake up, we create value, we consume some of the values, and we exchange with the other person. The means of that exchange is payment. So payment really powers all of our lives. If you look at how payments is that invisible infrastructure that actually begins to power commerce, e-commerce, utilities payments, and everything. So the doctrine of comparative advantage means that some countries are better at producing one good and others are better at producing a different good. So payments now allow us to be able to trade these values among ourselves. So payment is that key invisible infrastructure that enables our lives. Now, what has been the issue? Now, if you look at how we have paid in the past, like the MC said, today there's the issue of a payment originating in one part of Africa going to the other part of Africa, having to travel halfway around the world before coming back to Africa. We don't send messages that way. We don't send goods that way. We don't even make calls that way. We don't call an operator in New York and say, connect me to Nigeria. No. So why should money move that way? So those are fundamental principles that we want to be able to address. In the traditional payments, it's costly. If you look at some of the most expensive payment corridors, they exist in Africa. So you begin to ask yourself, why should the poorest pay the most to make transactions? So all of these things are stacked against Africa. Again, you look at Africa, beautiful continent, 54, 55 countries and territories, and yet it's balkanized. So you have 54 different currencies that are not able to speak the same language. They are not able, you have 54 different ways of processing trade, 54 different ways of making payments, 42 different central banks. It was all, the odds were stacked against us. And that's the difference between 1.4 billion people in China, 1.4 billion people in India, and 1.4 billion people in Africa. So we needed to create a payment system that will actually ensure that Africans are able to trade with each other. So we looked at it, and we've created a payment system that will lower the cost, make the payments instant, allow the countries to pay in their individual countries, currencies, and make sure that those payments actually do not leave Africa before being completed. Now, the dream of the AfCFTA, it's such a bold vision. What does it do? You know, we want to create a single market of 1.4 billion people. To create a market, you have buyers and sellers, you have the goods that are being sold, you have the rules within which we sell, and then you have an acceptable means of payment. Now, what has happened is, because of the different currencies, we've not had an acceptable means of payment. That's one. Secondly, we had rules that were 54 different rules. What the AfCFTA has done is actually bring all of these rules, create protocols for trading goods, trading services, and movement of people, and so on, to actually facilitate these goods. So today, we are able to actually create a single market such that we can trade borderlessly between Cape Town and Cairo, and from Banjul to Nairobi. So, because sometimes when we talk about this continental payment, it sounds so abstract. It looks like we're talking about something that's in the air. But these are payments that power individual lives of people across the continent. Take, for example, a shoemaker, Kofi, based out of Ghana. He produces beautiful shoes. But he thinks that his only market is actually the population within Ghana. We want to encourage Kofi to know that his market is actually 1.4 billion Africans, and let him not worry about how he settles payments from his customers across Africa. So this is actually one key use case that has already we've begun to see the value addition of PAPs. For example, for Kofi, he needs to buy leather in Nigeria. Now, he spends about 5 days trying to confirm that his supplier in Nigeria has received the value that he paid. Now, those are 5 days that he would have used to turn around his inventory. Those are 5 days of value addition, which he's losing because he's waiting to confirm payments. Now, you look at a corporate. Today, when we finished implementing the PAPS system, we're speaking to a number of corporates across Africa. And one of the things they said to us is, we go to another country in Africa, we do business, we make money, and our revenue is stuck in that market. In fact, it's interesting. When you speak to some of the corporates, one of them told us that they've started now having to buy real estate in that market, because what had happened prior to that time is that every end of year they have to do a write-down because of exposures to exchange rates. Okay? So we have corporates who make money in one country and they are not able to externalize it. And I'll speak to how PAPS solves all of these problems. The next one is, we were speaking to a Minister of Foreign Affairs, and he says to me, I have this big challenge. I have diplomatic outposts across Africa. Every time I have to go and source a third-party currency to be able to fund those diplomatic outposts. But what they spend is the local currency in that market. So why am I faced with this challenge? So with the advent of PAPS, this same Minister of Foreign Affairs is able to actually now make payments to all his diplomatic outposts, and he's able to do so in his local currency. So what payments does is it helps to expand markets. Okay? When you know, for example, that you are able to deal in multiple countries without wondering how the payments are being settled, then you have more courage and the more impetus to be able to expand to other markets. And I say this very confidently, that when we launched PAPS in 2022, one of the banks that actually gave us the encouragement to know that we are on the right track was Access Bank. Access Bank has been a prime driver of transactions and actually enabling ecosystems that actually use the PAPS platform. So for that, I say a big thank you. So what is PAPS? PAPS is a financial market infrastructure built to the best of global standards. It's, we knew we wanted to be African, we knew we wanted to be sovereign, but we needed to build a payment system that other partners from around the world will be able to trust and be able to leverage. We didn't think that building the payment system is about isolating Africa from the rest of the world. And I always say this, I am not interested in de-dollarization. What we're interested in is that Africa needs to be able to use its own currencies to advance its own trade. And then when Africa trades with the rest of the world, then they can use those third-party currencies. I hope we can all agree on that. Absolutely. So we've created a payment system that is low cost. Today, we pride ourselves that we have lowered the cost of a typical payment, cross-border payment, by over 99%, over 98%. So if you take a comparable solution, you'll find that our cost is actually as low as is humanly possible. We have also made the payments instant. A payment will originate in Nigeria in Naira and arrive in Cairo in Egyptian pounds. And in between those transactions, we have our AML, our sanction screening, our fraud management. We have all the globally accepted tools to make sure that those transactions are clean and safe. Okay? Now, in those periods between Nigeria and Egypt, we have decided that we will guarantee that the transactions are completed in no more than 120 seconds. So today, you are able to actually initiate a payment in Nigeria, and it will arrive in the beneficiary's account in no more than 120 seconds. That was our commitment to the market. However, since we went live, we've been averaging about 12 seconds. So we've also said we do not want our transactions to go outside of Africa. So we've cut off all of those external interventions. As we have said, we have fundamentally a problem with decisions that impact the lives of Africans being made outside of Africa. If those decisions have to be made, fundamentally, they need to be made here on the continent. So we've reduced the cost, we have improved the speed, we've cut off all those lengthy correspondent relationships, and we have done all this while complying with global standards. So this is how we have built our system. Like I said, we've built a world-class system with governance, with trust, and with world-class compliance. Firstly, we have built a system that has world-class AML, world-class sanction screening, world-class fraud management, and we have also done so in line with the principles for financial market infrastructure. But we recognize that a payment system is not just about technology. Technology is actually the smallest piece. Anybody can create technology, but the governance that you build around this payment system is critical to its survival and to the trust that we have built. So first of all, we've created 4 governance institutions or organs around the payment system. The first one being the PAPS Governing Council, and it's a council that has 15 participating central bank governors as members. It also has a representative of Afreximbank, of AFDB, of AfCFTA, and of the African Union, because this payment system is endorsed by Africa's heads of state. We've also have the board of PAPS, which is eminent people across the continent. We have the payment systems oversight, which has the directors of payments from all of the participating central banks on it, and then it has the management team. What this does is encourages the central banks to, once again, take charge. We're not saying we don't want to be above the central banks. So the central banks in a college actually oversight what we do at PAPS. And we have gone ahead to certify it to ISO 27001, 27701, 22301. These are global standards around payments. But when you talk about a network, the network is as good as the nodes that connect onto the network. So we have also used our Mansa due diligence, customer due diligence platform, to actually review. It's not just enough to say that I am a bank in this part of the world. I want to connect into PAPS. You have to be able to scale our customer due diligence process. So today we are in 20 countries. We have 170 plus commercial banks and fintechs. We have about 16 switches across Africa, because one of the provisions that was given to us when we formed the design principles for PAPS is that PAPS is not allowed to cannibalize existing regional systems. So what we do is we have to be able to actually plug into existing regional systems. We believe that multiple payment systems can exist. What we want to bring is that ability for them to be able to interoperate. So that is what we are doing at PAPS. So we are connected to about 16 switches across Africa. Now, we have three key offerings. I've been talking quite a lot about the first one, which is our instant payment system, which allows transactions to originate in one local currency and terminate in the other local currency. The second one that we have is our Paps currency marketplace. The Paps currency marketplace allows corporates across the continent to be able to come in and say, I have Naira, I want Kenyan shillings, okay? They set their rates. And then once the system is able to match someone who wants Naira with someone who wants Ghanaian cedis, the person that wants Naira gets Naira in Nigeria, and the person that wants Ghanaian cedis gets Ghanaian cedis in their own country. So that's our second product. And interestingly, we have airlines and we have organizations that have told us that if not for the Africa currency marketplace, they would have closed routes because they have made monies in those markets and have not been able to repatriate. And of course, we do this in partnership with all of the commercial banks that are connected on our network. We do not hold customer deposits in different markets. It has to be through commercial banks. And that's the whole ecosystem thinking that we are bringing to bear as PAPS. The last product that we have is the PAPS card. We went to a number of different African countries, and I'm saying all of this around payments because I have said that without payments, trade does not happen. So when we make payments more efficient, affordable, and fast, it will have a ripple effect on trade. So we went through a number of African countries, and we found that the cost of domestic payments was prohibitively higher in countries where they do not have domestic card schemes. So what has PAPS done? PAPS has made the investment, created this card scheme with our partners, and we are able to give it to banks and whoever else that wants it. They can have it for free and be able to price, and then we're happy to have a commercial relationship around that. So that's our third product, and that is gaining significant momentum. So here, just to say that we're already beginning to feel the impact, I've talked about the reduction in the cost. We've also been able to reduce the time that it takes to process those transactions. And we have seen a significant decline in terms of the reliance on third-party currencies. So, of course, this can only grow with further adoption from other countries. So we are nothing without our banks and our participants. We are absolutely nothing. We do not interact with the customers. We interact with our banks, and our banks bring their customers to use. They have been able to take what we have created, extend it to mobile channels, extend it to their internet banking. In fact, in some countries, we are seeing people extend it to ATMs and agent locations. So these are the banks and our partners make us who we are. So there are a number of ways for us to collaborate with the banks, and we are collaborating in those ways with AfCFTA. There's opportunity for us to, first of all, banks to become a node on our network, then extend the value that we create together to their customers, and then also now be able to power other ecosystems. So there are merchant solutions who require cross-border settlements. Those merchant solutions will partner with banks in their market. There are stock exchanges that want to open up their stocks to other markets. They will partner with local banks. There are fintechs who want to connect to the PAPS platform. They will have to settle transactions through commercial banks. So there's a huge role, a number of roles that commercial banks will play in each of the markets where we've gone into. In fact, in one of the markets, partnering with a switch, one single commercial bank settles all transactions on behalf of the market. So the whole idea of PAPS is to create value for all the players in the payments ecosystem, which will increase the velocity, vision to velocity. It will increase the velocity of trade and the value of trade across all of Africa. So here I've really just captured that whole vision. When you look at Africa, and I'll really just tell a story. In 1963, when the African Union, or OAU as it then was formed, the leaders of Africa came together and they passed a few resolutions. And I would really encourage everybody in this room, go and look up the first set of resolutions passed by the OAU in 1963. These founding fathers were visionary. PAPS is actually one of those resolutions in 1963. They did say that for Africa to advance, it needed a Pan-African payment and clearing union. They talked about Intra-Africa trade fair. They talked about a number of things which today, we are actually now pushing towards. So we had a generation of leaders and visionary leaders. Unfortunately, we had a generation that dropped the ball. But now, all of the people in this room have a responsibility to actually take this ball and to run with it. That is the only way that we can create a single market, create a single or multiple infrastructures, but for PAPS, that infrastructure that will drive payment, and also to have a connected Africa. So I leave you here now with my final slide, which really just captures my thoughts. And I don't have any other thing to say but to say a big thank you again to AfCFTA for creating this credible platform where we can meet and we can discuss and move our continent forward. Thank you very much.
Thank you, Mr. Okbalu, the CEO of PAPS, and really giving us insight into the incredible work that PAPS is doing to ease payment flows and forex pressure across the African continent. Arabide?
Yeah, very, very important work there. And as I said, in relation to the story, even before you came up on stage, Mr. Okbalu, it's such a pivotal tool to be having if we're going to define trade for ourselves. And to be able to do that, PAPS is going to be so, so important for that. All right, I believe now we're going to be seeing a very short video, and this is just testimonials coming through then from our partners especially, and really to be able to say thank you to all of them. And again, if you go onto the app, as we made note of a little bit earlier on Event Mobi, ATC 2026 as the code for that. You can also go in there and see who all the partners are. Ladies and gentlemen, post this video, you will then be into our networking session, our first one for this morning. So we will take a short coffee break for 15 minutes or so, and we will see you just before then.
Please may we ask that you be back in the room at 11. So the partner video is going to play. We're going to go next door to the hall 6 to network for a little bit of a coffee, tea, interacting with the panelists who are here. We'll see you back in the room at 11 a.m. Thank you.
Last year, we sat here under one bold theme: empowering Africa. The African Trade Conference wasn't just another date on the calendar. It was a defining moment, a space where ambition met alignment, and Africa's trade future came into focus under the framework of the African Continental Free Trade Area. It marked the beginning of something bigger.
Attending the African Trade Conference in 2025 was quite important because it created an opportunity for us to meet business leaders, financiers at one point.
Le privilège nous a été donné par Access l'année dernière d'être parti à l'ATC qui s'est tenu à Cape Town en Afrique du Sud. Cette participation a permis pour nous de renchérir notre portefeuille de contacts.
La participation à la conférence sur le commerce africain a été importante pour notre entreprise car elle a renforcé notre présence sur les marchés, établi des partenariats stratégiques, amélioré notre compréhension du marché et accru notre réseau et notre visibilité.
Because conversations only matter when they translate into opportunity. What followed were connections that carried weight, insights that shaped direction, partnerships that opened doors beyond borders. ATC turned potential into progress.
It helped us to understand where we are standing and where we can learn and improve ourselves.
Attending this conference, of course, gave us connectivity, increases our network, increases our connectivity with all the attendees.
It created meaningful connections between logistics and financing that supports regional trade in essential commodities such as fertilizer, grain, and crude palm oil that we deal with.
With the support of AfCFTA PLC, ideas gained structure and cross-border ambition found real backing. Momentum didn't stop at the conference, it accelerated.
Grâce à AfCFTA, nous avons pu réaliser nos ambitions et AfCFTA a pu structurer, mettre en place des instruments pour que nous puissions développer notre branche de trade.
AfCFTA supported us in bringing various equipments from different parts of the world. We brought a lot of equipments from India and we brought a lot of equipments from China, and they also financed to support some of the equipments from Europe also.
So we've been working with AfCFTA for nearly 30 years, actually previous to when it was actually AfCFTA. And we operate in Rwanda and Burundi, DRC, in the region. And it's been quite helpful to work with AfCFTA because they have a footprint in Burundi, Rwanda, and it's facilitated our trade quite a bit.
We are very much confident that our partnership with AfCFTA will be long-term, for the reason that the consistency and timely responsiveness from AfCFTA on all our financial applications are in good order.
In trade, trust is everything. It's built on presence, on performance, on the ability to show up consistently across markets and moments that matter.
Well, AfCFTA, we've built a long-term relationship with AfCFTA. It's trusted, worthy, and also they've got well-known, efficient, and effective staff.
AfCFTA has built that network and that FI capability, both correspondent lines, operational excellence, and queries, which is most important for trade, right? You want to know at every stage where your trade is, where your material is, where your documents are, you know, when your confirmation lines and all that. And I think AfCFTA has done exceptionally well in that regard, that they are developing that capability and they have reached to a stage whereby they are supporting their clients not only in Nigeria but across border as well.
If trade flows seamlessly across Africa, businesses don't just expand, they evolve. They move faster, reach wider, compete stronger, and the future becomes less distant and more deliberate.
AfCFTA's trade rights across Africa can assist us in a big way, for the reason that we are present in Central and East Africa, and ease of doing business will be very quick.
If AfCFTA gets trade rights in Africa, it means our business also gets better and continue to grow.
Last year, we empowered possibility. This year, we're turning velocity into action. When you look back at the journey, from conversation to execution, one word remains.
Reliable.
An enabler.
Fiable.
The understanding partner and
reliable.
Very accessible.
Valeur sûre.
Enabling.
Strategy.
A trade partner that finds solution. A trade partner that finds solution.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers. We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets. We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent.
All right, ladies and gentlemen, thank you so much again for joining us for this next session that we're set to have this morning. Just wanted to ask if we could all please just settle down before we kick things off again for this next session. But just to share as well, ladies and gentlemen, I mean, there are oftentimes so many conversations that you get to have. And on a daily basis, I'm fortunate enough to also speak for a living. And even just speaking to ministers, the one thing that I often ask, and the one thing I still possibly do not always get the answer to, is whether policy is holding back any kind of growth, whether it be in technology, whether it be in creating jobs, whether it be in advancing the social ills and ensuring that they're done away with in whatever form or fashion. It's whether that is catching up. Because we often say that innovation happens and then technology or the policy follows afterwards. How difficult is it then for policy to drive that growth, to drive the exact message that it's supposed to for a holistic set of people, for a number of people, whether it be in the audience, in your province, in the country, etc., across the African continent and globally? That is possibly why the shift to artificial intelligence has been so difficult for the rest of the world. The shift with things like Bitcoin have been so difficult to muster up in the world. Why? Because the innovation has happened and policy has now followed. So policy is following the innovation, meaning that the innovation now is beginning to dictate what happens, when perhaps it should be the other way. But how many times have we also heard that policy and regulation is the stumbling block to the growth of certain sectors? The ability to get these jobs in certain areas, to advance economic development, being hindered by regulation, by red tape. And that's why this conversation then is so important. For us to be able to understand how do we ensure that there's what we're calling in this segment policy harmonization in order to advance trade across the African continent. Ladies and gentlemen, for this discussion, I'm very pleased to have for what we're calling policy harmonization for continental trade velocity. And I want to make sure that we all know that this velocity can also be called action. But the reason we're calling it velocity is just about how quickly we would like to see things begin to happen. Velocity is speedy, but that doesn't mean that you do it without care. It means that you do it understanding everything you need, but still moving forward. Ladies and gentlemen, the following ministers have been absolutely gracious in their time and have allowed themselves to join us for this next conversation. And I would like to ask if you could please give a round of applause and a warm hand to welcome for this conversation the Honorable Minister for Trade, Agribusiness and Industry in Ghana, that is Minister Elizabeth Ofosu-Adjare, who joins us this morning. We also have the Honorable Chipoka Mulenge, the Minister of Commerce, Trade and Industry for Zambia, as well as the Honorable Tiroe Wanenzema, the Minister of Trade and Entrepreneurship for Botswana. All right. Ladies and gentlemen, just to also share that this session is interactive. I don't want to be the only one moderating it. Please make my job easier. How about you ask the questions? If you have any questions on the floor, please raise your hand. I will try to consistently scan the room as well, so we could then get the pleasure of asking questions as an entire audience. They're not just here for me, they're here for all of us. And I think it's your questions that they're looking to answer most, not just my own. So really appreciate you joining in this conversation. Ministers, again, thank you so much for the time. Truly, truly appreciate it. And thank you so much for joining us at ATC 2026. Minister Mulenga, let me start with you. Is policy holding things back? Are we finding ourselves in a situation where it's easy to plan, it's easy to have all the framework in place, but we continue to struggle to implement? So is policy hindering us?
very much for having us. And let me just appreciate Access Bank for bringing us all together in this room and discuss these important issues that you've brought us here together. To answer your question, yes, policy is very important in making anything come together. It must be about consistency, its resiliency, its coherency, among many other things. So it is an important factor that we should all look into to make sure that we coexist and we enhance trade within ourselves. And what is very important, lessons that I've drawn over time. Zambia has got policies that we have drafted that are good for us to make sure that we enhance first local trade, local investment. But again, now we have to make sure that they are speaking the same language with our dear colleagues from Ghana and Botswana. And that's where now we have to harmonize our policies if intra-Africa trade must be enhanced. There should be deliberate ways of crafting policies that are speaking the same language with everyone else. But I'll tell you this because of the kind of role I play as a public servant, away from maybe my other colleagues who spoke earlier on the platform, technocrats. We should come up with a deliberate policy where it's not about competing about which country will do better than the other. It's about how we are going to hold each other. I think one of the speakers spoke about the recently very common proverb of saying, if you want to go far or fast, go alone, but if you want to go far, go with everyone else. Yes. So policy is important, and it's one of the chalk blockers of success in how African trade is. But definitely, we need to revise policies that are good for individual countries, also bringing in growth with other countries together. So there should be a one policy driven by Pan-Africanism that we should have.
Oh, that sounds so difficult. I don't know if you've seen how things are faring with the African Continental Free Trade Area Agreement. And it just feels as though it's almost impossible. One, you get people into a room, that is the hardest part. To get them to agree on anything singularly feels even harder.
Yeah.
What are we just very fixated on our own individual interests?
There are things that were spoken about earlier that are inhibiting Africa trade. We talked about infrastructure, talked about a payment system, among other things. Number one, we should be very deliberate. Individual countries will never see Africa grow. We should be deliberate about making sure that everybody moves in the same direction. Yeah. CFTA is a good instrument that Africa has come up with. But I'll tell you something, the growth or the success of CFTA should have a vision of everyone growing together. Obviously, we've got different economies, strengths in our economies. And there's no way we're going to say Zambia immediately will grow its GDP to be with South Africa because of CFTA. But we are at that level, but we should keep growing how South Africa and any other country grows. The biggest challenge that we have, which I don't think anybody spoke about, but I have observed it myself and even in my country, we need to draw strength from each other's comparative advantages as opposed to competing with each other. My country produces a huge amount of copper. And we've decided, okay, we're not going to export this copper, we will process it for Africa. Then you see another neighboring country that produces copper. They said, in the same way they are processing copper, we also start processing our copper. So Zambia now at the end of the day will not have a market within, because now we all begin to process copper.
Sure.
But let's look at what happened in continents like Europe, where we are trying to adopt the policy of a single market, of a single trading platform. Europe, look at Germany. Germany has become the mother of automobile industry for Europe. Sweden does their Volvos at a certain scale, not as much as Germany.
It's shifting, hey? Because the world shifts, and that becomes the problem. But then you also face cheap imports, whether that be from the likes of China or anywhere else, that could impact your own industry as well when it comes to copper.
I hear you. So the most important thing is, let's look at each other's comparative advantages. What can Botswana do that Zambia should buy from them? What should Ghana do that Zambia should support them? And once we begin to be very deliberate about this,
then we will grow our economies. But the biggest problem that we have seen that we have, and I think my colleagues and I, we may agree with each other or we may not, but we definitely have to migrate from this issue of competing against each other. Yeah. I will frown upon her jollof rice.
Well, don't start this now.
I will frown upon her jollof rice, which is African,
yeah.
And I'll be very keen to import Thai rice, which is even more expensive. Yes. Because it's my sister who's producing it, and I know that when I buy from her, it will increase revenue within the African scale. And I don't want to see her expand her wealth, but we should become very deliberate. Yeah. It was so disappointing when I was seeing those trade portfolios up here.
Yes.
We should be very deliberate to love to use Botswana salt inland, dress on with her fugu in my country, as opposed to these importations. So we should be deliberate about just come up with policies that make us have a desire to invest, not spend, to invest in each other's economy.
Minister Ofusajere?
Yes.
Your jollof is better.
Certainly.
Right, so that's...
I didn't say that.
But again, people said that the competitive advantage is the whole point. We needed to build a competitive advantage for all of us. Sorry, just some running repairs, so don't mind that. But we all said that having this competitive advantage, creating this ability for me to advance gold better, to be better at agriculture, for Kenya to be better at tea, for example, is what makes us so good. But how do we drive that and say, but it's for one Africa, it's for the continent to be able to create its own market so that we're able to build forward, especially with yourselves on the Gold Coast?
Thank you very much. Let me add my voice in saying a big thank you to Access Bank for continuing the way, because they started last year. We've been touting 1.5 billion people. And so what? We need to come together, harmonize our things, make sure that trade within Africa is doing well. And so I think this is a very good stage to bring policy makers together at this high level to have this discussion. So I say a big thank you to Access Bank and their sponsors. I'll continue. I'll take a bite from whether policy is a bane.
Yeah.
Africa does not lack policies. We have a lot of policies already. You know, policies are good, he said it, but we have them. Our bane is implementation of these policies in a harmonized manner. That is what we lack as Africa, and that is what we have to pay particular attention to make sure that we cannot have one law for all of us, but we are able to integrate our laws in such a way that is harmonious for us to deal with each other. We have a lot of things we can do together for trade. Harmonization, the way to go. I know we may get there, but it's so critical in terms of our implementation. Even though we tout Africa Continental Free Trade Area, you can go and sit in Kenya for 2 weeks of a product that has been certified in Ghana. Same will have to be certified by a Kenyan authority before your product enters that country. It's not their fault. They need to make sure that what is coming to their country is good. What do we need to do? They have a policy. Ghana has a policy. Zimbabwe has a policy. Zambia has one. We need to come up with things like harmonizing the standards in a way that allows you to bring your things there. So for policy, we all have policies. The most important thing is how we harmonize our policies to be beneficial to each other, and to make sure that our policies work together very lightly for all of us.
Does that mean you have to let go of something? Meaning in the sense that you're going to have to compromise here because you may not necessarily fully achieve the things you might want in order to achieve the centered goal of harmonization?
Certainly. Because if you are looking at, for example, mutual trade agreements, yes, you are letting things go. And that is the way to go. If you want to exert your pound of flesh, you will not go anywhere. But if you are ready to let go, that is the only way we can work together. Because if you sit and insist that every single item must be verified by you, it means that we are not going anywhere. And if you let go and say that looking at the standards you have. For example, we look at your labs, we look at your certification processes, and we know, I'm using Ghana as an example. So Ghana goes to Botswana and look at their certification processes, we look at their labs, they look at ours, and we see that they are up to standard. Some have EU standard like Ghana, we have EU standards. If Botswana has EU standards, then we agree among ourselves that now pharmaceuticals that come to your country, once our country says it's good, then you should take it, and vice versa. We cannot do all, we can pick some things and work with it. In the process, you have to let some go, and then you also gain some. Otherwise, the Africa Continental Free Trade Area will remain a business that we talk about. The implementation will never happen. You let go, and then you also take some. In that way, we are harmonizing ourselves and we are trading among ourselves.
I think very interesting. My worry is just how many people and how many countries are willing to give and take in that same way. And it feels like, and because of our history, unfortunately, that there's so much colonization that happened across Africa that we may fear being able to continuously give, because so much has been taken away from us historically.
I like this question. The Chinese says that a journey of 1,000 miles begins with one step.
Yeah.
I think that our journey to harmonization needs just 2 countries to start. If 2 countries start, others will follow. Because if we are waiting for 54 countries to agree, like you rightly said, it will be difficult to bring them under one roof, and it will be difficult to let all of them agree. I can imagine how hard you fought to get 3 ministers onto this roof.
Oh, you don't want to know.
I don't want to know. And so, obviously, it will be difficult to put 54 ministers together. But today, I think that 3 ministers too many. We are many 3. We can agree today to take some steps which will yield results tomorrow, and other countries will look at the benefit and then follow. And so this is the way to go. We should not look at all the 54 countries. You should start by 2 countries with the MOUs. Once the other countries see the benefits that are accruing to these countries, they will follow. And I want to leave here thinking that at least the 3 of us, we are ministers of countries. We have the power to start a discussion that will yield results in the way of implementation, and must start today. Thank you very much.
Minister Nzema, on your end, I mean, you've now got a country that is sprinting away with things, and I say that tongue-in-cheek because you guys are so fast in athletics now, world champions in many ways too. But it feels as though the possibilities from your own side are so vast, and you're looking at your own country and saying there's so much change that can actually happen, and fairly quickly. Right? Whether it's not just going to be about diamonds anymore, and that is exactly what your country is trying to shy away from. Is that the whole aim now, to try and find one area of commonality and being able to understand that Africa then is where we need to play as opposed to just the global sphere only?
Well, thank you. Thank you for inviting me. Let me also thank Access Bank for the meeting point. But I want to make this from a point of confidence, a vote of confidence. Governments have the easiest job in the room. Really? Following from the previous speakers, it is not like the governments of today are not like the governments of the 1960s where everything was done by government. Nowadays you have players who can do things on behalf of government. And the reason why I'm saying the government has the easiest job is that we just need to create an enabling environment. And that's the easiest job, actually, because everything has been done. I mean, policy, strategies. Let's take, for example, the AfCFTA, for example. This, they call it an ambitious project, you know, the connotation of ambitious. No, it's just a simple strategy that countries must pick up, use to their advantage. And that's why I come from a point where I'm saying it's easy for government, because the strategy is there, and we know the benefits of countries working together. We know the benefits of creating corridors between countries. And in reference to Botswana, well, in the past we've looked at ourselves as a land-linked country. But now we're looking at ourselves, in the past, landlocked. Now we're looking at ourselves as a land-linked. If corridors, if goods were to pass through Botswana from south to north, that creates an opportunity for Botswana to tap into those who are passing through.
I like that. So can we please repeat that? So from landlocked to land-linked.
Yes, so we're linking countries that are not,
I think
have
that's
no
a round
access.
of applause. To understand that thinking, that is great thinking, and I think it makes sense.
So the easiest part of government is coordination, or coordinating ourselves. Take example the Kazungula project that we are in partnership with the Zambian government.
Yeah.
Well, it was cheaper because we co-funded it. Zambia brought half, we brought half. So linkages also makes things cheaper, makes things seamless. Now we're moving into one-stop border post. That means we're reducing the time of trucks that used to be there for some days. Now they can just pass through easily and quicker because they'll be just stopping once and passing through. So those are things that coined my statement of saying the government has the easiest job in the room.
You know, I think I find it funny when you say that still, because it's often government that we then look to and say government must, government must. How many times have you heard that? When people are protesting on the side of the streets for whatever reason that might be, it is government should or must. And while you might want to create that enabling environment, it becomes so difficult to do so because there's so many people who have their own ulterior motives and own desires and need. How do you bring together one need within your own country to ensure, because again, you in place today, in a couple of years' time, there's another minister in place, ensuring that that is still a symbiotic relationship that then flows to the rest of the continent.
Yeah. Well, what we did in Botswana was an ambitious undertaking of Botswana Economic Transformation Program.
Yeah.
What we did was we brought key players in the room, and then they decided what needs to be done going forward. We brought the private sector, we brought the banks, we brought everyone under one roof, we brought the investors to say, we want to go in this direction. You decide how we go there. That means you decide the projects, you decide how you're going to fund it, and how to move. So bringing people in one room and agreeing to what needs to be done simplifies a lot of things, because now you don't have clashing visions of the private sector, the investor, the bank saying a different story. They were in one room. The BET brought everyone under one roof and then came up with a document that everyone now owns. And government has its role in that document, that for these things or projects to happen, government has to play a part that is already defined in the document.
Wow, interesting. Folks, if any of you do have any questions, please, again, like I said, do raise your hands. Do not shy away. We can certainly get the ministers to answer that for you as well. We do have a question right over here in the front. So please, if we could get a microphone. So to these two, we'll just start with the lady just in the front over here as well. Please, also, would you please introduce yourself as well to us?
Yes, I'm Jeanette Sutherland. Thanks to the organizers for this important session. It's very important. I started working in the development space some decades ago with an international development organization. And I tell you, almost 30 years later, and we're still hearing the same sort of issues with Africa and the potential there is. I agree with the need for starting with bite-sized actions, as the Honorable Minister indicated, but I think a more pressing question that one needs to look at is, how can you institutionalize these changes? Even if the three of you were to start to make some changes, what happens, not if, but when your administration change and you as a change maker is removed to ensure that progress continues? So these are some of the things we have to. I'm not a financial specialist, but I was quite impressed with the PAPS session this morning. And so I'm assuming that there's really substantive progress.
Sure.
And perhaps the organizers may want to consider to look at this as a model, and how can you use the persons behind the PAPs to help to facilitate some of these continental-wide changes, because what has been achieved so far seem to be quite impressive. And the issues that they had to struggle with to make, to advance to where they are now, I'm quite sure lessons learned can be applied to what we are trying to promote in terms of policy coherence and policy implementation.
Yeah, thank you so much for that. And
summarize?
Minister, yeah, so I mean, she's pretty much, it's a lead on from the question I asked you, Minister Nzima, as well, just with regards to even when your government changes, even when you change in office, how do you ensure that there's policy continuity? Because that becomes so important to ensuring that the vision that was put in place in 2018, 2015, etc., still continues through 2030, etc., so that the goal is eventually achieved. Minister Ofosu Ajaria, maybe if I can start with you on that one.
Thank you very much. In Ghana, fortunately for us, our constitution mandates government to continue good projects that has been started by previous governments. Again, we have UNDP. So when it becomes a national policy, we continue as a matter of course. I know it will differ from country to country, where countries are so politicized that a government starts a project and another government refuses to continue. But we in Ghana do not have that challenge that much, because Africa Continental Free Trade Area has transcended various governments. NDC, MPP, NDC, MPP, we keep following on the Africa Continental Free Trade Area. Each president who comes is very proud of the Africa Continental Free Trade Area, because we believe it's the way to go. It is the way to industrialize, because you have access to 1.5 billion people. So I think that even if you start a process like we have started, when government changes, the new government also takes it up and then continue from there. So for Ghana, we are fine. We hope that the other African countries that are not doing same will take a cue from Ghana. Thank you very much.
Just to add to that, you know, when governments make policies, it must be made for the people, not for the politics.
Yes.
And that will create continuity. For the example that I gave of BETP, it is not a political document. It is a document that belongs to the people. So it's easy for it to transcend through time.
And I think that's important, as long as they have access to it as well, see it, and they're able to understand it too. Because oftentimes what happens is some people might say something and say, I wonder if this works. And it's ordinary citizens, and they don't know whether it actually exists as well. So making sure that it exists. Minister Bolinga, for yourself as well, just in relation to the same note.
Two things that she talked about, what the three of us are doing to make sure that we do the same thing, and also about continuity. In my country, we have what we do as investment protection agreements. The private sector is key to driving our economy. We are coming from an era where our country had a serious debt mountain, which through the debt restructuring, we have managed to do that. And again, let me also thank the CEO for Afreximbank. Recently, when he visited my country, from the number of asks the head of state did, was also to deal with the fuel, debt issues and everything. And thank you for coming through. That is how Pan-Africanism works. Solutions within ourselves. Recently, the president of Ghana, 2 weeks ago, barely 3 weeks, paid a courtesy at my head of state through a state visit. Harmonization of standards. My Bureau of Standards, her Bureau of Standards, we've signed an agreement. Whatever is good in Ghana should be good in Zambia. This vetting processes, which is bureaucratic, we are cutting it. Investing in each other's country, that is what is so primary again, coming in from our head of state. For us to achieve what we want to achieve, before we look somewhere else, first we look through our neighbors. Zambia now, in Southern Africa, has got the biggest fertilizer plant. Where did we get or raise our resources from? Within ourselves and our friends from Botswana, Botswana Stock Exchange. If Botswana never came in to invest with us, we wouldn't have achieved this. Where's the first market that we have? It's Botswana, Zimbabwe, and others. So that is now Africa growing together. But to keep investment that we're talking about from the private sector protected and continue in its growth trajectory, we are signing what we call an investment protection agreement. This is not between the government of the Republic of Zambia and the investor. We are very deliberate about it. It's about the Zambian people and the investment. And public officers like myself have been very deliberate to delink any investment from political interference and influence. And we make sure that the civil society, the private sector, talk about it a lot, so that every public officer and private sector player understand that this investment is for the people. Any attack or influence that is detriment, it will affect the livelihood, even for an unborn child. And for continuity to be guaranteed, that's why we are talking about this investment protection agreements, which is policy again. So policies that are people-centered are easily embraced and foster development. So I think we are very committed and keen to making sure that policies that are consistent, that are resilient from both internal and external shocks, are embraced.
Yeah.
Thank you.
An easy way to hand over the baton, as it were, as well, I think. We had another question just over there. We're going to get to that question over there too.
Thank you so much. I'm Lee Gunkel-Kula from DHL. I look after Africa for DHL. It's no surprise to me that I'm seeing 3 forward-thinking ministers on stage today, and not the South African Minister of Trade and Industry. It would have been wonderful to have our own Minister of Trade also speaking about what we're doing from a SADC region perspective, even though we do have Botswana on stage as well. Having recently traveled to Botswana and Ghana, I need to recognize the 2 ministers of trade from Botswana and Ghana. Madam Honorable Minister, I was in Ghana last month attending the African Prosperity Network event where you were a keynote speaker. And the one thing that stood out to me about your talk there was really around the role of Pan-Africanism, from ideology to even implementation to move the continent forward. Now, even though as countries at an individual level we are struggling with our own needs, etc., if we don't adopt the spirit and ideology that resides within the Pan-African spirit, we're never going to see the connectivity or the interlinking between what AfCFTA can do at a continental level and what countries need to do in order to survive and thrive. So from my perspective, pushing this agenda forward through Ghana and other countries, like-minded countries, is important. Secondly, to the Minister of Trade from Botswana, I was in a meeting, a SADC meeting 3 weeks ago, and the one thing that stood out for me was really around the commitment of the Botswana government to partner the private sector through the BETP and other platforms for engagement. But the one thing that is lacking, ministers, and it's a plea from us to you as the private sector, is number 1, frequency of ministerial engagements like this. I know it's not easy to get all of your, or most of your colleagues together at a ministerial trade industry level, together to speak about AfCFTA and the opportunities there, and also the road implementation framework to make AfCFTA a reality for those countries who've ratified. And I think that needs to be top of mind. And the second one is that at an economic regional bloc level, we need one meeting with all of the economic regional blocs, together with the private sector players, to speak about these impediments, challenges, and opportunities with the right people in the room. And if those 2 things could happen during the course of this year, we will see this AfCFTA opportunity move forward with speed and with the right type of velocity to ensure that government and the private sector, it results in a win-win for both. And this can be done with the right kind of platform, communication, accountability, and transparency when it comes to engagements of this nature. Thank you.
Fantastic. You said you're from DHL, am I correct? That's the kind of velocity that our stuff gets delivered with, I guess. I think absolutely phenomenal. Minister Nzima, I don't know if you want to perhaps say...
but I think she was just giving advice and things that needs to happen for the velocity to happen. So I totally agree with her sentiments that we need to create a platform that talks to the private sector to open up things that might be barriers on their end. And I agree with her.
Yeah, Minister of Nigeria, apparently you spoke very well last week or when it was as well.
Thank you very much for coming to Ghana, and thank you for taking part in all these sessions. It shows that there are a lot of Africans that are ready for the integration to happen, for all of us to enjoy the prosperity. Like my colleague said earlier, if we don't compete but cooperate and see Africa as one marketplace where the prosperity of the other country will benefit the next country, that's the way to go. See Africa like Botswana. See the whole of Africa like Ghana. Don't protect your turf. Open it up. Let's trade together. Let's have a big opportunity to rather trade and compete with other spaces. I think that is the way to go. If we do that, there will be prosperity for all of us in Africa, because we have the potential. We've been told this morning, and we know already that we have the potential. We have what it takes to make Africa a prosperous place. If we are interconnecting, if we are removing the redundant barriers. I call them redundant barrier checkpoints because they don't serve any purpose. 3 barriers within 10 miles, what purpose is it serving? And so if you are able to remove all these redundant border checkpoints, if you are able to trade among ourselves freely, if you are able to allow each other into our market, that is the prosperity we are looking at. And I agree with you very well. Thank you very much.
Thank you so much for that. We do have a question just to the middle there. We'll come back to you, sir, if you don't mind. Just one to the middle there.
Thank you very much. Gaëtan Munkeni from AfCFTA DRC. Thank you to the Honorable Ministers of Trade and Industry for the 3 countries. And I wanted to do a quick follow-on the Minister of Trade and Industry of Zambia mentioned the harmonization of standards. And I just wanted to ask a question regarding when we introduced the conference, we mentioned that one key element, one key barrier to trade was access to information. So I just wanted to see and ask a slightly more operational question, going deeper than the harmonization of standards. Is there something that is done either on a regional basis, on a global basis in Africa to deepen this lack of information, be it maybe from a customs perspective or from a trade finance documentation perspective, instead of having a customer going via DRC to Zambia to Zimbabwe all the way down to South Africa, having to present different sets of trade finance documents, having to sort of harmonize that. So is it something that needs to be done within the regional framework, SADC, or is it something that can be done from a global perspective, from an African perspective? What is being put in place among the trade and industry ministers so that that becomes an actual reality? Thank you.
Yeah. Mr. Mulenga, maybe you might have any thoughts. I don't know if you have any.
Sure. Yeah, he's raised a very important point, especially that he's operating in a country very close to my country with different systems. And why I want to use the DRC and Zambia, because Botswana, Ghana, and ourselves probably will say we're coming from the Anglophone.
Yes.
And the DRC, you find that they come from a French background with a lot of different policies from us. But irrespective of this Anglophone, Francophone, we are one. And we have to come up with one facility that she talked about, harmonized policies. To move anything, right now, we were chatting with my brother from there. The Kazungula border I was talking about is a border that we share. And to move things from his border, destined for the DRC, the plan is for any truck to spend maximum an hour at the border. But you find that you spend 3 hours, 4 hours, maybe even 2 days. Why? Because there is this thing that we call bonds which are not being cleared by the DRC. Okay. This delay is only coming in because of non-harmonized policies. But the two of us, as well as my dear brother from the DRC, Honorable Paluku, we've been having conversations on if Botswana clears something, DRC immediately must observe it and pick it. So policy harmonization, efficiency of trade, we cannot run away from infrastructure development. So what is seen in Botswana, Zambia must see it easily, DRC must see it easily. We have come up with what we are calling a one-stop border post. Our vision is to migrate into a non-stop border post. So that the system that sees in the DRC, sees in Zambia, what is coming in from South Africa through Botswana must be picked and it moves. So we are not there yet to have one single policy, but we are making steps to get there. Because ultimately, there should be, number one, political will to get these things getting done. Number two, there should be now Pan-Africanism that desires that what is good for Botswana should be good for Zambia and good for the DRC. And slowly we're migrating to that. So it's deliberate will to make sure that we speak the same language and then policies are crafted which speak good for everyone. So I agree with you. We need to do it, but it's a work in progress. Thank you.
Interesting. Thank you. Thank you so much for that. I believe actually this question came first over here, if the gentleman with the shirt, and then we have yourself, sir. Thank you.
Okay, thank you. My name is Lai Kumalo from the SA Business Journal. My question is more or less connected to what has just been asked to say. Within the African Union, we've got like 8 RECs that are recognized, and they've got different policies, different custom regulations and all that. What is it that you are doing, or what is it that you propose we do to fight the fragmentation that is caused by the RECs as Africa? Because these RECs are overlapping, and when
you said RECs.
RECs, yes, of which we've got 8, like your SADC, your SACU, yes, yeah. So how do you then propose, or how do you then plan to deal with the fragmentation thereof?
Very tough one. I don't know, Minister of
I'll try. You know, the fragmentation is not even about different countries. The fragmentation is happening in the countries. Because you go to one customs unit where you move from agency to agency for your goods to be cleared. So in-house, we need to have some kind of one-stop shop and be mechanical about clearing. In Ghana, we have what we call the ICOMS, the Integrated Customs Management Service. It's a one-stop shop where your invoice, your certificate will come, and then what you have to pay is calculated for you, so it's easier. But once you move from the port, if ICONS makes life easy for you, you are talking about Togo. Once you get to Togo, what has to happen is that the fragmentation will have to be solved country after country. Then we can plug in and be willing to share data. If it happens like that, then it's the way to go. Because Ghana is settled. Togo has to settle in that same manner. And Ivory Coast has to settle in that same manner. Or let's say Accra-Abidjan corridor. We all have to make sure that the fragmentation has stopped so that one data will be used by all the agencies. For example, it is the same data that the Ghana Standard Authority uses or needs, that the Food and Drug Authority also needs, like National Security also needs, and then EPA also needs. But in countries, you have to move from agency to agency. If we are sharing data, so that you post one data and all these agencies uses the data, and then it is settled, we can move to the other countries and have the fragmentation ending. Once we end the fragmentation, we are sure that we are going to boost trade, we are going to save time. When you are doing business, 1 day, 1 minute can let you lose a huge contract. And so I agree with you that the fragmentation has to stop, but it has to start with the country so that we can plug in and have a seamless trade environment.
Yeah. Just to underline what Minister is saying is, you know, Botswana and Zambia had the Kazungula project, and because there is no alignment with other neighboring countries, now we have a problem of now trucks or movement being diverted to Kazungula. Well, we're trying to simplify things, we're trying to make things faster, but now because the route now is, everyone is diverted to Kazungula, now things are stuck. That is why we need wholesome reform of the neighboring countries to buy into one strategy where the routes are multiple, simple, cross-border facilities also makes it easy for people. Well, we made it easy, but if everyone now comes to that point, It's still slow. We still have 8 kilometers of trucks waiting because now everyone wants to use that facility.
Yeah.
So it has to be from everyone, and everyone has to participate in it.
Yeah, and that's the only way to ultimately end the fragmentation. I don't know if you wanted to add.
Yeah, so he talked about the RECs, the Regional Economical Communities. Yeah. The idea of SADC and COMESA is brilliant. But the biggest problem now has come in this. I'll go back to this word. I don't know how I can best deliver this message. We should be willing to grow each other's economy by supporting each other with investment or buying from each other. The RECs stipulate that there should be no trade barriers among the member states. But the biggest problem that has come in is this. When we see that South Africa, which is a member of SADC, is exporting cars into Zambia, and they should come duty-free, then probably Zambia wants to develop an automobile industry, and we say, oh, South Africa is too big, let me introduce a surtax.
Yes.
So that South Africa now will not easily compete with me. What do we do? Instead of South Africa bringing those automobile industry, they will not bring them. At the end of the day, what will happen? I will import them from Japan. I will have killed South African industry, and capital flight out of Africa is happening. We should be very deliberate. If South Africa is bringing cars in my country, I've got so much manganese, I should tell them, how can I support your automobile industry with a battery manufacturing plant?
Yeah.
AfCFTA support me with this. Then we keep the money within the same region. So the RECs are not performing the way they are supposed to perform because we are coming up with non-tariff barriers deliberately to choke each other's trade. In my country, and recently I sat with my brother there, must be a week or so ago. I was in Botswana just to discuss how can we get rid of these non-tariff barriers. I did the same thing with Zimbabwe last year. I sat with my older brother, the trade minister there. We discussed it. And I'll tell you how regional trade has helped our country. Just regional trade. Before we even talk about PAPS, where we're just paying from Zambia into Zimbabwe, Zimbabwe into Botswana, and next it will be Ghana. Our inflation, which was hovering over 23%, is now about 6.4%.
Wow.
Because we are trading within ourselves without further flights of capital with the outside. So the RECs must speak one language. If CFTA also is supposed to succeed, these taxes we are imposing on each other are as bad as not having RECs. So we need to drop all these taxes for ourselves. Taxes can be outside the region.
Yeah.
So if the RECs are to succeed, the RECs are supposed to give us the benefits that we're supposed to do. We need to encourage inter-country investment and business into business, meaning from G to Gs, among many other things. Then definitely we'll see that RECs are succeeding, Africa is succeeding.
Yeah.
Never compete against each other, but complement each other.
Sure.
Thank you.
We're going to just take that final question, if we'll allow, certainly. Unfortunately, time is against us as well here.
Thank you very much, Honourable Ministers. Thank you for visiting South Africa. My name is Jan Steyn. We are a local producer of emergency vehicles, and thank you to each one of your countries. We have supplied you some vehicles in the past. Thank you for your support. The Pan-African Parliament sits 4 times a year. How do they relate back to you in terms of policy? Because it's a Pan-African Parliament. It's supposed to have some form of power of coordinating these policies. That's my first question. The second one is, if we really want to grow Africa's production, manufacturing, and create jobs, we're going to have to find a solution against what we do against the Chinese strategy for Africa. So China comes and gives us low interest rate, 2-year free repayments, grace periods on our loans. They comply to the IMF's concessionality requirements, and they come together as government, manufacturer, and banks. We don't have that as Africans. In the manufacturing space, we stand alone. We don't get low interest rates. We don't get access to funding, to working capital. There's no exports incentives. We compete against the same duty tariffs from China. To add to what the Honourable Minister has said, if we want to grow Africa, we're going to have to protect Africa's ability to trade with each other. And we're going to have to find ways of getting an import tariff on non-African products if the same product is produced in Africa.
Okay. Thank you so much for that. I think in adding to that, just perhaps if we can actually add that possibly to a closing message too. If you can respond to that and perhaps share a closing message. Minister Nzima, perhaps if I could start with you in just perhaps adding to that, including the Pan-African Parliament, of course, which he was making note of, if there has any concessions.
All these things that we've been talking about are decisions that have been made. One speaker earlier talked about resolutions that were taken in 1963 and being implemented now. Africa's problem is not really that there is no opportunities or there are no set principles that exist. Well, we've been talking for long as Africans, but we have not been doing much in terms of implementing what we've talked about. So really our problems are not really that we're not talking or we don't have policies. We have them. Problem is implementation or putting them to boots on the ground. So I believe he's very right when he refers to what is it that you're doing at the African leadership level when you see that things are not moving. I think it still remains, that goes back to my question where I said if we look at things being simpler for governments, then we'll know the role of what government is supposed to be doing to make things easier for everyone for trade to happen in Africa or in the African soil.
Sure. Interesting as well. Minister Mulenga, let me get your thoughts as well.
Okay, I think on the Pan-African Parliament, I think the Minister has spoken about it. Let me just make progress on the aspect that he raised, a very important issue regarding the Chinese investment and its threat to Africa. I'll be very open with you. I think, look, I've not been I've been long enough in my office. This is almost 5 years. And I've interacted with China, the US, Europe, and other parts of the world on how they do business with us. China is not a threat to Africa. The problem lies with us. I'll tell you this. China will do what you ask of them. They have their conditions that they pose. It's about us to dialogue and negotiate with them. In the past, my country never brought in value addition investment in my country from China. All that we were doing was trading. Shoes, everything was trading. Policy direction was provided by my president. We have a mantra of 5 policies that we talk about. Through partnerships and joint ventures, invest, produce, process, market, and sell. That is what we believe in as a country. And every investment that is coming into our country, from China and all parts of the world, we have to work together through partnerships and joint ventures, through investment, production, processing, marketing, and selling. When we do this, there is revenue share with our people. There is skill transfer with our people. And this is happening. We are spending over $600 million annually in importation of fertilizer. We're not doing it anymore. It's a Chinese company that has set up, and we're in partnership with Zambia, Botswana, and China to produce fertilizer. We are in partnership with the Chinese companies, with ourselves, to produce car batteries. We are in partnership with the Chinese to produce steel, among many other things, something that people thought can never happen. So the problem is not China, it's ourselves as Africans. China is willing to do what we ask of them. The same thing with Europe and other places. But unfortunately, yes, there are other countries in other continents who will say, we'll not invest into your country until you do this. It's about us doing what is right for us. So ultimately, to conclude, Africa must have a strategy of its own on how we conquer the world. COVID taught us a lesson. The entire world, Asia, Europe, never shared their vaccines with us. Even if South Africa wanted to develop on themselves, they stopped them. They said, let's do it ourselves. They'll fend for themselves. So now a strategy must come. There's a war in Ukraine. How do we deal with the logistic aspect? There's a war in the Middle East now. What is our strategy? How do we do it? So I strongly feel beyond the parliamentarians sitting together, the trade ministers must also sit together to have a 50-year plan for ourselves, which everyone wants to partner with us must fall in line with our strategy. Thank you.
Fantastic. Wow. I just wonder how much of it is driven by fear sometimes. Yeah. How much of it might be driven by fear, because there's so many who are so scared to perhaps get in. And like I said a little bit earlier, because so many people have taken from your country. And I look at the DRC, for example, and I just think, and I don't want to talk for them, but I would imagine that there's a country look and say, people have been taking from us for so long, that now if I try to get a deal with anybody, whether it be an African country or not, I'm scared that all they're coming here is to take. And so that is the worry. How do we ensure that there's still that symbiotic relationship? It still goes both ways. So important here. Minister Fosa Ajara, let me finish off with you for the last word.
Yeah. Okay. I want to contribute to what my brother has said. I understand the questioner to be saying that Africa must rather take a cue from China, because he's trying to say that when the Chinese are coming to invest in Ghana, in Africa, they come with governmental support. But Africans, when they are investing, do not get any kind of support. And so we must take a cue from that. And again, Africa must protect Africa. And so in order to grow, you need to put measures in place to protect your own. He's trying to also say that if there is a product in Africa that we can produce, so I'm using Ghana for example, if our installed capacity exceeds what we need, and somebody is bringing in that product must be taxed to protect that industry. And I think it is right, and it is the way to go. And Africa must look for financing, patient capital, so that we can also grow. We get loans, short-term loans for long-term businesses. That's why I want all of us to give it up for Access Bank, because it is making deliberate attempts to make sure that access to financing is easy. Patient capital is what Africa needs. You cannot take a short-term loan for a long-term project. Yeah. So you are giving a loan for a year. Meanwhile, you need maybe 2 years to set up the factory. The factory has not been set up. How can you start repayment? And so this is what Africa needs, and this is what I understand him to be telling us. And I think that it is a way to go. Now, Kwame Nkrumah says something. When Ghana got independence, Kwame Nkrumah said that our independence will be incomplete until the whole Africa is independent. And so now, none of our countries will be financially stable until all of us are financially stable. And so in developing your country, you have to look out for other countries and see how we can cooperate so that we have a prosperous Africa for all of us. I thank you very much.
Fantastic. Ladies and gentlemen, that's where we're going to conclude this panel discussion, and I really hope that it's been helpful, it's been fruitful. And I want to, again, if you take nothing else away from even the whole day, it is one word that I'm asking you for: velocity. How do we put all of this into action? And let's make sure that that action appears now. We'd like to ask our ministers to please wait for us to just take a quick picture. Mr. Ogbonna, we'd like to ask if you could please join us on stage as well for this very quick picture. It's very fortunate that we get 3 ministers all in one room, as they said. Very tough task, but we really, really appreciate all your time as well. Ladies and gentlemen, again, our ministerial panel. Zinger?
Exciting.
You well?
I mean, there's so much ministerial insight
That's
into
for sure.
trade, into the solutions there as well. Really well moderated. Thank you.
Thank you so much. I think thank you as well to everybody in the auditorium for all of your questions. I think that's what makes it so engaging. It's the one opportunity we then have to actually speak to the ones who action all the trade, who actually are part of that policy harmonization if we're trying to make it happen. So very important that we're able to get that conversation. So thank you to all of you for being a part of that.
On our next panel as well, we'll make sure that it's interactive. It's short just before lunch. If you have any questions and perhaps you're too shy to put your hand up during the discussions, please remember you can download that app, use the code ATC 2026, and you can send through your questions and comments on there, and we will make sure that that gets answered. Now, at the Africa Trade Conference last year, one of the most consistent themes was the scale of Africa's trade finance gap and the impact that has on businesses across the continent. Today, we're going to move that conversation forward by exploring practical financing models and partnerships that can unlock liquidity and really strengthen Africa's supply chains. Simply put, how do we strengthen Africa's trade finance ecosystems and build more resilient supply chains across the continent?
Yeah, ladies and gentlemen, this brings us to our next panel discussion. My lovely co-host, Nzinga Qunta, will be moderating this one. We'll be speaking exactly to that point. How can we accelerate trade finance and supply chain resilience across the continent? Ladies and gentlemen, our panelists are
Ms. Namisuku Burke, the Head of Coverage, Southern Africa at the Trade and Development Bank. Mr. Florian Witt, Divisional Head, International and Corporate Banking, or BHF Bank, and Chairman of the ICC Global Banking Commission.
We then also have Ms. Natalie Luat, the Global Director for IFC, Dr. Isaiah Ratumba, who is the Head of Department at the Limpopo Economic Development for Environment and Tourism as well.
And finally, Mr. Marcus Wade, Chairman, CEO, Xendo Group. I'm just going to be seated over here. Arabile, thank you so much for helping me do the introduction. Thank you. A very good morning. We can all be seated and begin. Thank you all so much for your time on our panel today. I think the best way to start is by asking just one assessment of a very broad question, one sentence, to say, what is your assessment of trade in Africa or specific part of the continent? Perhaps, Ms. Burke, I'll start with you. Just a global overview, one sentence, and then we'll go this way.
Good afternoon. So my broad perspective of trade in Africa is growing. I think what I see from the commercial banks, from a DFI perspective, is that they are beginning to deepen their products.
Thank you.
They are beginning to deepen their...
One sentence, and then we'll get into the deeper discussions later. Perhaps I can ask you the same question. Everyone will have the same question.
Yeah, for me, trade has always a flip side on the equation, that's investment.
Okay. Ms. Lord?
I would say that trade is not a story waiting to happen, it is actually happening.
Doctor?
Trade is growing in Africa, albeit very, very slowly, and the challenge is always the issues of tariff and non-tariff barriers.
Thank you very much.
I would say that trade requires innovation in order to give the continent what it needs.
Okay. All right, Ms. Burke, let's speak about your short-term lending window as TDB, giving short-term working capital and trade-related solutions for up to 3 years. Just take us through why this particular financing model, and then also risk mitigation tools to really unlock trade finance.
Yeah, thank you for that. So from trade finance perspective, what we thought was to expand that definition of trade. I know we look at short-term, maximum 12 months, but from TDB perspective, looking at the market, and most of the countries being hinterland with, with the large, with long transition cycles, we thought to expand it to go up to 3 years. So our definition of trade finance in TDB is anything that can go to a tenor of 3 years. In terms of risk mitigations for those sort of transactions, TDB usually views the commercial banks as partners, so TDB comes to complement the products that they're already offering. As I indicated in my opening statement, the trade is growing. We've seen a lot of intermediation by the local banks, so TDB comes in to complement their efforts. We have seen that most of the challenges that the local banks are facing is ticket size. Where does TDB come in that scope is through the master risk participation agreements, where we sign those through our FI strategy. We allow the banks to be the face of the customer locally. TDB comes in to provide more capital in terms of over and above their SOL limit, but also providing unfunded and funded risk participation through the master risk participation agreements. We've done this with several institutions across the region, and we find that it has quite a lot of big uptake on that product.
Dr. Otumba, perhaps I can come to you now. Part of your mandate is economic growth, specifically in Limpopo. Just take us through a high-level overview of Limpopo provincial economic development plans and how you see trade really growing there.
Limpopo province is one of the 9 provinces in South Africa, which is well positioned because of the location, sharing international borders with Zimbabwe, Mozambique, and Botswana. So our point of departure is that this province, in terms of trade and investment, is the gateway to the SADC region, which is a free trade area for Southern African products, and also for the exports from SADC that go through the north-south corridor. So Limpopo province always leverage on that position to ensure that we attract investments, both from the continent and abroad, to ensure that we build resilient infrastructure in terms of transport network infrastructure for the transportations of goods and services, and ensure that those of our products, our entrepreneurs, are able to tap into the markets using various platforms such as pavilions and otherwise, so that we can increase the share of Limpopo's economy to the South African economy.
Okay. Ms. Lard, Dr. Otumba is speaking about that geography there and the opportunities for trade. I wonder, as the largest development group focused on the private sector in the world, there must be so much insight that you can offer and talk about how programs can reshape the geography of trade.
Yes. We represent IFC, and we are risk mitigating trade in Africa by facilitating the relationship between the confirming banks and the issuing banks. And as we discussed this morning, the trade finance gap is still hovering around $100 billion US. It's extremely significant. So what IFC does is make sure that we are able to provide the right risk coverage in the most the countries where it's most needed. And that implies a change in trade corridors, because we are trying to facilitate more intra-Africa trade, which in periods of uncertainty and external risks is really important to reorganize the trade flows. So approximately the 50% of the work that we do is between what we call emerging market countries to emerging market countries, south-south. And we've seen the intra-Africa trade increase by 78% over the last year. By doing that, we are helping adding more countries to the map and changing the dynamics and the geography of trade.
Mr. Wade, I wonder if I could ask you what Accendo is doing that's innovative in the trade financing space to try and help unlock those trade finance needs.
So there's 2 things that we're doing. First thing is we're trying to give importers the credit period for goods that they're importing that matches the cash conversion cycle or the economic cycle of the goods that they're importing. So we offer up to 10 years credit on imports, which is very different from what the current market does, which is 180 to 360 days, and then it's refinanced onshore. The second thing we do is we partner with local financial institutions and governments and companies to finance infrastructure for up to 15 years. In both cases, what we do is we are working with local financial institutions who can take the security locally over the project, over the imports, over the receivables, and allowing them to support it on an unfunded basis. So finally, we have local institutions who are now empowered to finance national development. In a capital-efficient way, which is important because a lot of the banks are still restrained by capital.
Yes. Mr. Wood, you can give us some unique trade register data with a focus on Africa. We know it's not a homogeneous continent. There's so much happening there. Can you just give us some insight there?
Thank you. I think it's something that needs to be shared more intensively across different audiences, and that is about what for risk we are speaking. If you approach somebody who is not familiar with Africa, usually people think it's something very risky, Africa. The data do not confirm that. Financial data do not confirm that. I just take one example, but there are also examples from the development financial institutions with the GEM initiative you have raised, which is confirming more or less the same view than the ICC. And today I have two hats on. I'm here for my bank, but I'm also here as the chairman of the Banking Commission, as you rightfully said. And the ICC has developed together and the initiation by development financial institutions and the WTO in 2008, the so-called trade register. 25 banks are contributing, 13 million transactions in the trade finance space every year. Deutsche Bank, Citibank, our bank. And when you compile this data, you will see one thing. Trade finance with emerging markets has a single A rating. The probability of default of trade finance with emerging markets is a single A rating. So equivalent to the French Republic. If you dig deeper and look by continent, you would realize that in 2024, and most probably also in 2025, we are just compiling the figures now, the probability of default of trade finance with Africa is a triple A rating. So equivalent to Switzerland, Netherlands, Finland, Germany. The four remaining countries, I think, that are still triple A rated. Okay. So the appearance of African risk in the trade finance sector is completely wrong in international markets. And of course, a European bank like ours, I'm coming now to the banker's role, we are benefiting from that. Because we are playing this risk arbitrage that somebody somewhere in the world thinks I'm dealing with Africa, I need a confirmation of a letter of credit, an African bank issues that, and we are putting a confirmation margin on that because this information is not available. Don't want to kill my business, but and I'm sure if we kill it, there will be other businesses for our bank. That's a trajectory of a good economic situation. But I think it's important to mention that there are credible data available that show a complete different picture of the risk in doing trade with Africa.
Ms. Burke, if Mr. Witt is speaking about that data, I wonder what data you are seeing that could help us answer the question of how to build more resilient systems.
No, thank you for that. I think what he said is quite true. We've seen a similar program in Malawi, where the World Bank has actually indicated that they gave $60 million to Malawi banks to be able to facilitate confirming banks like TDB and others to participate in the market. Why? Because of that low risk rating. So we are seeing it pan out on the market. In terms of resilience, I think capacity building is key. What we see in the market is that, yes, banks are doing that trade, are coming into that space of trade finance, but capacity building, I think, across the continent is important. From TDB's perspective as a DFI, what we've done is that we've set up a TDB Academy, which looks into capacity building of the financial institutions. What are the products we're looking at? We look at the whole value chain of the supply chain, looking at, how do you assess a collateral manager? How do you assess a stock monitor? How do you assess an insurer to come in and help facilitate that whole trade from beginning to end? We've done similar trainings in Malawi. We've also done something with an MOU with Afreximbank as well. So we're trying to broaden that capacity building to ensure that the banks are structuring the right products for the customers.
Mr. Wade, if we're speaking about those innovations and the right products, just going back to your earlier point, how is this improving liquidity for businesses that support particularly sustainable cross-border commerce?
So I think there's a couple of things to look at. First of all, by giving importers the credit that they require rather than what is normally determined by the market, it allows them to repay for their goods in a timely fashion rather than being undue pressure. If we're looking at the infrastructure financing, the fact that we're able to deliver it so quickly allows project owners to pay their contractors on time. And as we know across the continent, a lot of contractors have delays in payment from the project owners. So overall, the prosperity that one can put into an economy just by allowing that cash flow and allowing project owners and importers enough time to pay, you benefit from the multiplier effect. I'm a great believer that actually what we should do is everyone should be self-sufficient. So for the first time now, we're able to empower Africans to finance their own infrastructure and their own trade, which is something that hasn't been done before. It's normally financed by external capital.
Dr. Otumba, if we can go back to that mandate of economic growth, we're speaking about capital, people on the continent being empowered, as Mr. Wade just said. What is that mandate of economic growth and that entity that you have, how does it work alongside national departments and other entities in South Africa in facilitating trade and opportunities? And where are you seeing the bottlenecks and opportunities, even if it comes to our neighbors that you were speaking about earlier?
Yes, because I come from government administration, I'll speak about the government role in enhancing both the regional and continental free trade regime. From the perspective that on both aspects that I challenge to growing trade, you got the issues of tariff barriers, which I think the larger proportion of African countries have made deposit to reduce those. But I think the challenge is mostly on non-tariff and beyond the border barriers, those that are unseen, unreported, and they are within the confines of the jurisdiction of government. So I think that if there is a clear commitment from the regional integration agenda as well as the continental one in terms of how do they deal with the non-tariff barrier, the cumbersome customer procedures and so forth, I think that will go a long way in enhancing the free trade agenda in the African continent. And of course, I think the link between trade and growth is very, very important to note that on average, over the years in Africa, the trade proportion of GDP is almost around 45 to 50%. So that means that trade is very, very important. And therefore, the agenda for trade reform and increasing intra-trade in Africa is very, very important for all governments. So we play our role from the national government, from provincial government, using various tools of international relations, including twinning agreements and bilaterals, so that country to country and as a region, we enhance trade between countries.
Okay. Ms. Lord, Dr. Otumba speaking about the importance of the different partners when it comes to trade and growing economies. Give us insight into the role banks play engaging with MDBs and how this improves liquidity for businesses.
Yes, so IFC as part of the World Bank is really focused, as I mentioned earlier, on supporting banks so that they have more capacity to enhance trade in their markets. And that's because they have to manage a lot of constraints on RWA or limits or just balance sheet management as a whole. But there is also a role to play directly with corporates. And we see that there's a lot more discussion on supply chain finance at this upcoming GTR. So the reason is that it's really important to facilitate the financing of suppliers. Strengthening the relationship between corporate buyers and their suppliers is essential, especially in Africa where these relationships have not been established for a long time. So you need to support the suppliers because their cash flow management is crucial to their viability. So it's one product that we think is really going to unlock a lot of opportunities in Africa. because supply chain finance is the only reliable source of working capitals for many small suppliers, and it can mobilize liquidity, which is what they need. So if you take the global network of international banks, the strength of the African banks, you can really support corporates as well as small suppliers in all of the countries in Africa. So SMEs will benefit, job creation will benefit, and you'll see a radical change in how these businesses can get financing.
Mr. Witt, I think a theme that's emerging from this panel and the discussions that are earlier on as well is the importance of different sectors working together in order to deal with the challenges of trade financing, the infrastructure gaps, and the like. From your experience and the data that you've seen, what is a suggestion that can practically assist with the issues that we're talking about today in terms of how and who works together?
I'm a banker, so of course, very often I come to the conclusion that in the center of a problem must be a bank, or must be the banking sector, because this is usually the entity, or this is the sector that is bringing money from surplus entities to deficit entities, and the deficit entities are investing it into infrastructure, into trade finance, and so on. And the fundamental of a bank, what is a bank? A bank is actually a prediction machine. Prediction organization tries to predict, and then out of this prediction makes a decision. Prediction is my loan into this company a good loan? Most probably yes. Decision, I grant the loan. To point to the two topics you mentioned, trade finance and infrastructure. On infrastructure, of course, this is something where banks need to have a good understanding of their governments, and the governments have to have a good understanding what infrastructure is for. And I can tell you, I'm living in Germany. For some years, our government was not so clear about what the value of infrastructure is, and some of you who are traveling to Germany may realize it by taking our railway, for instance, which is a big problem because it's completely underinvested. So that is infrastructure is very much bank to government relationship. To the corporate side, to the international side of the bank, I'm coming back again to this prediction. And what is required for good prediction is good risk understanding, and to not only to be conscious about risk, but to precisely understand the risk, and to be aware of your initial risk perception and to understand what is driving a risk perception. And there I can only say Africa has done a lot internally over the last 10 years, 15 years by raising big banks, which have complete different capabilities than they had 20 years ago. Afreximbank is one of many good results of big groups that have been built over the last 10, 15 years. In East Africa, you have Equity Bank. You could name ANCIA in West Africa, then the American banks, South African banks. So that, I think, is a good example. And just to finish, on the international scale, trade is international by definition. It's cross-border. The move of Afreximbank going into Europe by establishing a branch in London, in Paris, and now acquired something in Malta, I think is a bold but a very smart move, because from there you can determine a lot of the international trade and bring your own risk perception into the game.
Okay. Thank you very much. We have a few minutes left on the panel, and I'd like to turn to the audience now to ask if anybody has any questions for our esteemed panel. If you do, please may I ask you to raise your hand. A mic will come to you. Please may I ask that you keep your questions concise, as there are a lot of people on the panel. We'd like to get through as many as possible. I can see a gentleman in a suit there. If a mic can be brought to him, or you can just stand and project.
Okay, thank you very much. First of all, thank you for the word, and Thanks to AfCFTA for this wonderful opportunity that you brought to us. My name is Lucy Mario, and I'm representing the Independent Continental Youth Advisory Council for the AfCFTA. And also I run the company called Neuro Growth Labs. So my question goes straight to the panelist. Your topic speaks more about accelerating, but the biggest issue in the continent is not actually accelerating, but is access, right? So if we would like to facilitate access to trade finance, especially to SMMEs, how do we then create an ecosystem that allows them to easily access those funds? Thank you.
Thank you. I'm not sure who would like to volunteer to take that question about increasing access that was posed by the gentleman. Okay.
I can start?
Thank you.
This is a very good question because that is our objective, is to make trade finance more accessible to SMEs who are, essential to the growth of the economy and the creation of jobs. So at AfC, we find that it is a multi-pronged approach that is required because we organize trainings to explain trade products to these SMEs. Most of them have no knowledge of the products they can ask for. And most of the banks also need some training to understand how the trade instruments can be less risky than other products that they normally offer to SMEs. So we think that if you continue to introduce those products, you will have a better understanding of the strength of the trade products, which will allow for more access for SMEs. We also support professional associations, and we hope that they can serve as capacity building partners to disseminate this knowledge. Because at the end of the day, it's not just access to finance, it's access to knowledge.
Okay. Any other questions in the audience? Please raise your hand. Let us know who you are directing them at. There's a lady in the third row. Yeah, there's a question.
Perception is important. In some cases, or in most cases, perception is reality. It was quite interesting to hear that the default risk of emerging economies in Africa is lower than is perceived. My question to you is, why is this perception as it is, and what is the responsibility of these African economies in changing this perception, because it has a major impact on access to finance?
Thank you.
Information. Perception is always driven by what is available as information, and I think in the entry keynotes, our colleague from BCG said that there are still information asymmetries appearing, data is not available. That's why we built this trade register. And it was built exactly to do that, to enable to show a differentiated picture about the risk that is in the financial world. And usually people only look at the sovereign bond rating of a country, while the trade finance business, the ones who were in that business knew it. We knew that default rates in my bank, my Africa portfolio is for a long time AAA. My German corporate portfolio not. It's not a AAA rating. So I was aware about that, but the general data lacked. That's why we put this data together and are now publishing it. I would love to see more African banks participating in that scheme. And then there is something, and that's why I appreciate the momentum from the African Union and a lot of leaders of African countries to create their own rating agency. I mean, the rating agencies we have in the world are looking through a Western lens. And the Chinese rating agency will look through a Chinese lens. So where is the African lens? And it's not a given that the risk perception, the lens a European has towards a risk is the right lens. So that's why I think it is part of the equation of becoming independent and creating its own destiny is also to work on the risk perception, and part of working on the risk perception is creating an own rating agency, and hopefully also the African banks participating in the ICC trade register.
Okay, Ms. Lord?
Just a few words. You know, Africa has been very penalized by several downgrades in the last few years, and so it gives this perception to global or developed market financial institutions that the risk is higher. And in reality, we are seeing these banks withdraw from Africa, but the way to look at it from a perspective of Africa is to see it as an opportunity. An opportunity because you know the reality of these markets much better than most international banks. So there are opportunities to grow your own network, which is, you know, what Access and other banks are doing, just to take the place of the banks that are withdrawing. So we do a lot of work with regional banks because we believe that they have a strong knowledge of their own markets. And knowledge is, again, you know, what can make a difference.
Mm-hmm. And if I may add to that, because this is a very important point, and I like that, Nathalie. I have a lot of discussion in Europe about the French banks leaving West Africa at the moment. And then people are saying, well, they are leaving because the risk is too high in Africa. That's not true. They simply lost the market. Because in the last 20 years, guys like Access, like UBA, like NCIA, like Chorus, like EcoBank, and others came on the scene, were as professional as them, or maybe even more professional, not having a legacy IT, understanding the market better, having capital capacities, good regulators, must also say, some good moves, for instance, in Nigeria and so on. So they are not leaving because the risk has increased, they are leaving because the others got them out of the market. Okay. That's why they are leaving.
Okay, we've got about 5 minutes left for questions before we close the panel discussion. I'm checking if there are more questions. A mic is being passed to you, so thank you.
Good afternoon, everyone. My name is Ola Ishola. I'm the CEO of Sky British Enterprises from the UK. We're a trade facilitation company. Thank you so much, Florian. It's good to see you again. And I really appreciate what you mentioned about the statistics around default in trade finance. It's important to me because the information is not there out there. And in the morning, one of the facilitators told us that capital, information, and trust are very essential. The interesting thing is capital follows information and trust. So if there is no trust and there is no information, there won't be any capital. Now my next point is, I'm a very strong believer in don't assume everybody will do something, you do it. Okay. And one of my takeaways that I would like to see after this program is to see something like an ATC project that is going to be taking some of these points and then run it, because these initiatives have to be run by the private individuals and companies. It can't be done by the government or even other sectors. Access might probably say, I'm a made in Access person, so they might probably want to say I'm putting a lot of work on them, but the truth is, the greatest initiatives and ideas in the world have been driven by private sector. And now, so we would like to see an ATC project platform that's going to push the government. We listened to the public sector some minutes ago. They like to push the government into doing things that they need to do. Okay. And then also, talking about this, the information will need to be sent out and then probably collaboratively with ICC Global Commission so that they can ring in the ears of the people that are thinking of their money being lost when they put it into Africa.
Thank you very much for your intervention.
I'll be very happy to see such a platform when we leave here. Thank you so much.
Thank you very much. I'm taking the last question before we wrap up the panel. If anyone has any final questions, you may lift your hand and the mic will come to you. I'm just scanning the floor. It seems, okay, there is a lady underneath the jib. Thank you.
Hi, good afternoon. This is Shannon from GTR. Good to see you all today. Thank you very much for the session. So, supply chain finance has seen rapid development across a lot of developing countries. What's holding it back in the African context? Maybe, Natalie, a question for you.
Or anyone else on the panel that feels that they can take it on? Natalie?
So maybe I can start and others would add. So it's the relationship between the buyers and the suppliers in Africa that we see is slightly different from what you could see in other markets. African suppliers are used to wait for payment for a long time. And so what the banks are able to propose is earlier payment for better cash management for these SMEs, and that's something that needs to be accepted by the buyers, clients of these banks. So it's new product for many banks in Africa, and you see that that market is starting mainly through global banks who have done this elsewhere, and also platforms. So we are very interested in looking at the development of specialized platform who focus on development of supply chain finance in Africa. And believe me, we anticipate that this is going to be an extremely useful tool to grow corporates in many markets here.
Okay. Anyone else like to tackle that question? Yes?
Yes, maybe just to add to that comment. I think what we've seen, government does play a critical role in developing the supply chain in Africa. We've seen an example in Zambia where the government has stipulated that they need local contractors to be able to supply to the mines. So it creates a need. It has created a market for those products to come into the market. So government does propel that. From a TDB perspective, we've also, like I indicated earlier, capacity building. I think there is an element of supply chain happening, maybe very basic level invoice discounting, but the more intricate structures, I think, around big anchor buyers is something that I think we'll see going forth, particularly with these big players. The third point and my final point is I think Africa also has aggregators, but not very strong ones. We've seen commodities moving from Malawi, Zambia, Zimbabwe into South Africa to be able to make baked beans, for instance. And those are growers in these African countries. How to then facilitate from a transport corridor perspective? So from TDB's side, we're trying to create platforms and working with fintech to be able to see how we can then harness that information of who are the buyers, who are the sellers, and create a market, a virtual market portal.
Thank you. Thank you so much to our panelists. Really enjoyed your insights. We're wrapping up. I'm going to ask for a one-word answer from each of you, starting with Mr. Wade and going that way, ending with Ms. Burke. Just one word. What's the most important thing needed for practical financing models and partnerships that can unlock liquidity and strengthen Africa's supply chain? I think you've got the most pressure because you just have to come with one word and you're the person who starts.
Innovation.
Access.
Potential.
Perception.
African branding.
Oh, no. Thank you very much. It's time for lunch. We'll see you back at the room in 2 o'clock. Thank you so much for your time and attention.
Thank you so much.
Stay for a photograph.
Okay.
They're just asking if you can...
In the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today, employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today, employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today, employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today, employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today, employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites,
Your mic is...
No, okay, fine. Ladies and gentlemen, we'd like to ask if you could please move a little bit more forward. If you could sit in the rows in front of you, please, so we're a little bit closer as we begin our next session. Please, if we could ask that you all sit a little bit closer, please. Please move forward before we start the next session. Good. Okay.
Thank you.
All right. Ladies and gentlemen, welcome back to ATC 26. We'd like to ask that everybody that is now considered late to be sitting towards the front of the auditorium, please, so we can get through to the next session. We just want to ask you to please move forward. I know it's perhaps a time when a few people might have left. There are a few empty seats. If you could please move forward where possible, we really, really would appreciate that. We're also willing to wait for you, so there's no harm, no fuss. We'll wait. Pretty please. All right, we certainly hope you've all had a wonderful lunch and networking session, Zinga.
Absolutely. We could hear that Hall 6 was buzzing with trade experts networking and having discussions with each other as we continue the discussions that were on stage and moving them outside Arabile.
Yeah, very, very important to be able to actually do that as well. We've had a good lunch, as we said, that networking session important. AfCFTA, again, thank you so much for allowing us to host the Africa Trade Conference 2026. It's now time to get back to the business of trade and growth and how to build and grow the African trade ecosystem. Again, that key word being velocity, turning it all into action. Africa is certainly powerful. It's innovative, to say the least. It plays itself out when it comes to that innovation in so many different ways, particularly in our trade, in our economies, in technology, fashion, and so much more.
Absolutely, Arabile. While we look around to find ways to deepen intra-Africa trade and those discussions we've been having earlier, we've also spoken about the global picture and how we're not insular as a continent. There are opportunities to strengthen trade beyond our continent. And our next speaker speaks to just this point. We are honored to have a special address by Governor Albert Bryan Jr. from the United States Virgin Islands.
Hi, this is Governor Albert Bryan. I want to say a good day to the distinguished leaders, honored guests, and partners gathered for the Future of Afro-Caribbean Trade Partnerships Conference in South Africa. I want to extend a warm greeting on behalf of the government and the people of the beautiful United States Virgin Islands. I regret that I am unable to be with you in person for this important occasion, but please know that my absence does not diminish my belief in the urgency and the promise of this work. You see, in today's global economy, regions that build strategic partnerships, expand trade corridors, and align investment opportunities will be the ones that shape the future. For Africa and the Caribbean, this is not simply a matter of economics. It's a matter of vision, of connection, and of recognizing the extraordinary power that exists across our Atlantic when our people move with common purpose. The Virgin Islands carries Africa in its soul. Our culture, our history, and our identity are deeply tied to the African continent. That shared bond gives us more than a memory. It gives us the foundation on which to build tourism partnerships, commercial exchange, energy cooperation, digital innovation, and lasting prosperity for our people. The U.S. Virgin Islands is uniquely positioned to help lead that effort. As a U.S. jurisdiction, a free port destination, and a natural gateway between Africa and the Americas. That is why I want to warmly invite each of you to join us for the Virgin Islands and Africa Tourism, Culture, and Trade Summit, taking place July 8th through July 11th, 2026 in St. Thomas, U.S. Virgin Islands. Come to build partnerships. Come to explore opportunity. Come to help us turn shared heritage into shared progress. We look forward to welcoming you to our shores. Thank you, and may this conference produce bold ideas and lasting results. From the U.S. Virgin Islands, we appreciate you and we appreciate your business. Have a good day.
Yeah, thank you so much for that. I think very importantly, by positioning itself as what is a strategic bridge, especially for the Atlantic, the U.S. Virgin Islands is actively formalizing trade and tourism partnership a lot more with African nations, particularly ones like Ghana. And that's to really create a modern corridor that is for the exchange of raw goods, digital services, even cultural tourism. In fact, during recent high-level delegations, the governor that you actually had just seen, Governor Albert Bryan Jr., emphasized leveraging the territory's unique tax incentives and transatlantic digital infrastructure, and that is to transform the U.S. Virgin Islands into a premier processing and logistics hub for African exports entering the broader American market. So what a way to really enter in that regard. And one way that they've decided to help bring us all together again is they will be having an after-summit mixer that will be happening on the third floor mezzanine. That's happening today at 5:30. So you don't want to miss that one. All right, folks, thank you so much again. That's the message then from the US Virgin Islands, and I think our trade conversation happens beyond our own borders, and that's the whole point here too. I think in the initial part, there was a lot of looking inward almost, looking into Africa and finding a way to ensure that Africa itself bears responsibility, finds its own ways, and becomes the bearer and the owner of this trade conversation. We might want to move it a little bit more global in this context too. Where do we fit in that global sphere? How best do we find the best examples, the best places to trade as well? So many exciting opportunities. And one of those, as we heard from Mr. Ogbalu a little bit earlier, is going to also be around payments. And while we've spoken about PAPS, there's still another way to continue to do that, and it's exciting innovations and changes in this payment system that could certainly grow trade across our continent. With that, ladies and gentlemen, please let's hear from Nega Ume, the Director for Key Relationship Management for Africa, Asia Pacific, and the Middle East at MasterCard.
Good afternoon, everyone. Thank you so much to the Afreximbank team. We're here today to discuss this. Something very prominent this afternoon, or the whole of today, is that the trade business, the payment business in Africa is beyond Africa. We've been speaking a lot around intra-payments. We've been talking about intra-trade. We've been speaking about inter-payment too. But our observation from where we sit has shown us that African payment has gone actually global. We are seeing it from a small pace, but we are seeing it wider than that. As we go ahead, you will understand where we took that perspective from. There is no trade without banking. There is no trade without exchange. There is no trade without payment. That takes us to the next slide, which is the reason why we are here. How are we going to make this more comfortable? How do we change the experience everyone is having? How do we move this to a next level? If we quickly move to the next slide, we will see that the reason why people exchange goods and services, which is the core of trade, is the convenience, and it didn't start now. It started right from the medieval period, and we have actually migrated to higher. We've seen that the fintechs, the digital framework is changing to eat into the payment industry, which the banks are only known for. And today we believe, from what we'll see in the subsequent slide, that is actually beyond what one institution can do. AfCFTA has done great work around this. These are the numbers we are seeing and the impact of the different traditional digital fintechs and the global ecosystem has rendered, and the promotion to drive this trend that we're seeing developing, which today we are looking at how to take Africa beyond Pan-Africa and make it globally. As we move ahead, you'll see the opportunities we have identified, how we believe we can work together to change this narrative, which everybody has established today exists. This is what we're used to now. This is what it used to be. It's exchange. Exchange of values, exchange of cash, exchange of ideas. So trade for us is beyond the physical, is beyond the values. There are other things around security, there are other things around offerings, cutting edge that we should bring to play. So we'll go ahead to say what the opportunities we have seen. The opportunities actually goes between digital payments, payouts, the gigs, disbursement, cross-border transfer, embedded payments, subscriptions, off-network transactions, P2P payments, B2B payments. All this needs funding, and we do it from a central location, taking into consideration the comfort that comes with it. There's no mainstream solution that serves everything. That is where collaboration everyone has spoken to comes to play. There's one too many complex instances. That means it's not one size fits all. In some situations, you find out you need to create some bespoke changes and values to create the impact you want. The next is the cost, which comes very confusing to the end user, be it the merchant, be it the MSME person in clothes, be it the consumer. But what is important is what is our vision, what is the mission, How do we change this narrative from being Pan-African to global, which is why all of us are sitting here today? I think there's no need asking questions around our vision. It has been clear. We've all spoken and flogged it together. The mission, how do we establish this, becomes what we are all going to work together as we walk along. This is MasterCard's take on this. Is there any possibility that will raise the velocity around this? The answer is yes. It is clear that 86% of African payments are in-country. Payments can scale to retail liability beyond deposit banks. How do we achieve it? Global payment solutions from a profitable through every ecosystem player. Could it be the cobbler that my colleague has spoken to? Could it be the end receiver? How do we change it? This is not what we can do alone, which is why we are strong believers that collaboration is the new partnership to raise the velocity we are looking at. How do we focus on the opportunity we see today in Africa? We'll have the domestic play, we'll have the global play. Today, I heard one of my colleagues mention that the corresponding banks are leaving Africa. And as he rightly pointed out, it's not because of they are concerned about the security or what they are noticing, but we have grown so well in Africa. I'll give it to Afreximbank, a Pan-African bank that has been leading in this, to do what they are doing and do better. Today, corresponding banks have to come in between payments even to Africa, but that bridge has been breached today by the work we have done with Afreximbank, leveraging on Access Africa. So you can move intra-African payments seamlessly, affordable, transparent. You can order further move it globally. What this does is that it's now creating us in the middle of payment and trade ecosystem, which goes beyond inter-Africa and intra-Africa. It's now a global mission. And together we are achieving this and more to do as we go ahead. Cross-border payment hasn't changed, which is the crux of trading. It has always been there, but what has changed? The transparency, the effectiveness, the convenience that comes with it. Is there opportunity to grow it? Yes, that has been established today. But how do we grow it and move it faster than we think? That is what we'll see in the next slide. This is the global pie. This is where growth is necessary. We can see what B2B business transactions are contributing today, $150 trillion. We can see what the consumer business transactions are contributing, as it were today. Can we see what the business-to-consumer transactions are contributing, consumer to consumer? This validates the position that the potential lives here. We have it in Africa, and we can do more. And of this, you'll see how much Africa is actually contributing to the bottom. To the next slide, please. This is the addressable market in Africa, which makes it very interesting. While a bank can participate in every payment platform, there are other supply chains that are necessary. You can see the energy payments, you can see the supply chain. Remittances are fragmented. How do we want to close this? 97 companies from parental to share origination, while only 18 correspond on receive side. This provides the opportunity. Yes, there are banks, corresponding banks leaving us today. We'll have the weight, we'll have the skill. Why won't we quickly move in and be in between and do the work they are doing and tap into this opportunity? Be it remittance, be it merchant, be it agri-imports, mineral exports, energy, inward tourism, ICT inputs, services payments. It's an intra-continental flows that also have global impacts. I think this is a pie for us to eat from an African perspective, and we can lead this space with what we have. This is the bridge we are looking at, taking African trade, business, and payment to the next level. 91% commerce in continent flows through MSMEs. All finished goods in the continent are imported from 6 countries and exported, as the case might be. Of all the $100 million revenue business in Africa, is headquartered outside the continent. African business earn more than 1 million annually outside the continent. Why don't we bring it home? Blended yield, more than double the global average. captive network with possibility of banks and other ecosystem players can change this narrative. We have a lot outside. With the velocity we are speaking to, we can bring this back home. Let's go ahead. These are the macro trends we are seeing. This is the GDP CAGR, blended cost of cross-border payments, standing at approximately 2%. In a market where 68% of finished consumer goods are imported, imagine if we begin to leverage on our strength to grow this. Favorable politics, it has been relatively stable, funding and investment oasis, and peer positioning. We all have what it takes. AfCFTA has the Pan-African spread, has the knowledge, has the services, has all it takes. That is the reason why they are here and leading this. Well, how do we plug in? Remember our mantra that collaboration is new partnership. How do all of us here work together, irrespective of the strength of our country, to take this home and take this global? These are the things we solve if we take this challenge and move it as fast as we want to. Instant. We don't need the corresponding banks anymore. We do it on our own pace. Instant. I heard Mike speak to 12 seconds. 12 seconds can actually turn to 6 seconds with all the necessary collaboration we need. It's convenient. Business in class. It stands out. Revenue remains in the circle where we are. Very transparent. There's no hidden charge. There's nothing extra on top. It is clear. And most importantly, it's not cutting anybody's head. It's low cost and value is guaranteed. This is the challenges we can work together to actually resolve today. Less loyalty, which forges out of poor customer experience. More competition. We're actually not competitors. How can we come together, collaborate to leverage on each other's strengths to move things forward? Decreasing margins. Are they really decreasing? I don't think so. Because the law of retail says the more people that play in that space, more to play with. Increasing regulation. There has been a long talk around increasing regulation and how we can solve that problem. If we can go to bed with this solved, we are good to run. More capital controls. So we don't need to look for those funds. Remember, we are now the ones in the picture. Corresponding banking is totally out. AfCFTA is in the middle. He is the issuing, he's authorizing. There's nothing to struggle about. Whether there's war in Middle East, whether there's war in America, we are all covered because we are doing the work we need to do ourselves. The ecosystem place cannot be overemphasized. Like I had mentioned before, collaboration is the new partnership. Leveraging on everyone's strength will solve this problem for all of us. And of course, geopolitical instability is not stopping us. Instead, it's an opportunity for us to do more. These are the native players we have today. And this is what they are doing over time. Imagine if we come together and leverage on each other's strengths, what this does for us. This is reality, a pie on the table. We have moved further than this, but how do we begin to optimize our strength, what we have to change this narrative? This is the reflective results of what has been achieved, cash versus digital, and that is where we are going. We don't need to carry cash anywhere we are going, which is the narrative we have been singing all the time. You can see how it has been growing over time. Digital is taking over. How do we take this 55% to 85%? That is the reason why we are all sitting here. This remains the pie on the table for us to change. Our focus is to be the OG of payments. This is what everybody is saying today. What are the risk outliers? What are the yield compensations? What are the vacancies in cross-border intermediation? I keep recalling or referring to this because there's a strong opportunity there. We can do a lot without any corresponding back, and we'll still be providing the relevant support and experience we need. Complexity will be totally removed because it's within our control. Like I said before, it's not just the digital players, it's not just the bank. Everybody will benefit from it. There's low single digit, there's bank. Payment-related revenue embedded across multiple divisions can sit within our space and with which we will walk through. This is a sure, guaranteed thing we can do together, only if we can speed up what we are doing, build trust, leverage on our strengths to achieve what we need to achieve. This is the African opportunity. We must be connected. We must establish relevance. Collaboration is not a question. The vacancy left by global banks in the name of real versus perceived risk is an opportunity we should leverage on. Pan-African and international presence, which the Access Bank is known for, it's something we should consider and build around it, working with all the ecosystem when it comes to payments and trade. Proactive regulation, but to find a scalable solution is important. We know the reason why the regulation is there, but what is critical is that it's not choking us, but it's adding the values that we need to get the speed and achieve what we want to achieve from Africa and global perspective. The comparative yield for sustenance, which is a border of everyone, is guaranteed because more is guaranteed. We see more and we do more. These are the inherent advantages we have in Africa today, which does not exist in other places. We have multinational bank spread, which we always applaud Access for. The balance sheet has access to G10. Why are we looking for currency? Why are we looking for fund? Why are we looking for settlement? It's just there in our nose. The second one is diversification. Inherent DNA mix into corporate and retail banking does not exist globally, in quotes. You have a fully fledged commercial bank or corporate bank or fully fledged retail bank. That is what we are used to. But we have a DNA mix that can solve all the problems based on the strength and capacity we have. What does this leave us? Presence of cohort-based centers for product excellence. It exists today. Brand equity recognition, leveraging on everybody's strength. This is the advantage we have that other people we're depending on do not have. And this is what will take us to the velocity we are looking for. Where does MasterCard come into this? We're here to actually promote intra-African trade. We're here to promote real-time, very cost-effective basis, global trade. We are here to help you make sure that payments are received in local currency because it's beyond the global currency, be it USD or GBP. We are here to make sure you have a profitable retail customer segment. We're here to help optimize the FX inventory, which is the basis of trade. We are here to help you have a dedicated diaspora channel to move your business. Should we want to take advantage of the corresponding banking that is leaving our market? What does this promote? Intra-African trade, everybody has spoken to. Global trade corridors, diaspora remittance, multi-currency opportunity, private banking, cross-border investments, and cross-border collections. These are pipelines and use cases we can leverage on to drive trade. What are our critical learnings? Building global payments require outside-in approach through distinction, leveraging on everyone's strength. Payment business needs insulation, it needs autonomy, it needs investment and long-term success. This is what we should have behind our mind. JGov gestation requires careful initiative sequencing. Talent strategy must align with objectives, consolidated accountability. We can't just be speaking velocity if this is not in place. Geographic concentration, regulatory navigation acts as a catalyst to drive operating-based selection. What works in A cannot work in B, but we can leverage the strength of A to move B forward. That has been re-emphasized today. Distribution dependencies is a sure. It can be done independently. Pricing is not a product, but for a segment. How do we want to move it forward? Technical alignment is very important. Modernize, provide single door assets that provides multiple experience that we decide is also a success factor and a catalyst for the velocity we are looking for. That is where we are, and I'll end by saying that we can do it. We have gone beyond the opportunity. We have gone beyond thinking what can be done. We can do it if we can believe in ourselves. All we need to do is to check out all the tasks we have put and put things in place to run this. Thank you and have a very good day, everyone.
thank you very much, Ms. Ume, for your intervention and speaking to how trade velocity requires those global payment solutions and requires collaborations in order to shore up that digital backbone. Now, the United Nations Trade and Development Organization says that African economies face disproportionately higher shocks when it comes to, and risk when it comes to geopolitical shocks because of their dependence on external markets, something that those of us in the room know, and they've called for stronger regional trade networks to reduce African economies' dependence on those external markets and unlock the at least $3.4 trillion worth of potential trade in terms of the Africa Continental Free Trade Area Agreement. Just how is it possible to do that? Our next panel picks up the conversation had on this stage last year on how to change those dynamics using infrastructure and logistics. If I can invite my panelists to the stage, please, Mary Ann Oldfield, the Chief Commercial Officer at Africa Global Logistics, Herman Venter, the Managing Director at DHL Express South Africa. We are also going to have Alfred Idialu, the Chief Country Representative Officer from Deutsche Bank, John Ndawula, the Vice President Financial Institutions at Africa Finance Corporation. Have I mentioned Mr. Venter? I have. So we have Mary Ann Elfield, Mr. Clippy Murray. Oh, there we go. Thank you very much. We can be seated. Hi. Thank you all so much for your time this afternoon at Africa Trade Conference 2026. Let's begin. I'm going to pose the same question to all our panelists. Just give us context as you see it of the structural challenges impacting trade costs and logistics on the continent. Ms. Oldfield, I'll start with you and we can move this way.
Yeah, thank you.
Just in one sentence, I forgot to add that proviso.
Not possible, in my opinion.
No, we're going to try.
I think the biggest part of the trade logistics and the financing cost is the huge cost of trading and logistics within Africa and on the continent.
Mm-hmm.
I'm aligned to that view. I think it's really around how do we find the efficiencies in the border and customs processes, how do we digitize it to make sure we remove a lot of that manual paperwork and challenges the traders are facing.
Okay.
I think building trade corridors is critical.
Yeah, so from AFC's vantage point, it would be infrastructural challenges, but also the high cost of capital.
Okay.
I think I align myself with them, and it's hard to be the last on the side because they've taken everything. But I think also to have the correct partnerships. I'll go with correct partnerships and better partnerships will help.
Okay, Mr. Venter, perhaps I can come to you. The Economic Commission for Africa says that e-commerce is growing at an estimated annual rate of about 40%. What opportunities are there in that when it comes to digitalization as a whole and reducing the cost of trade that we've just spoken about?
So I think it is fundamentally linked to making it easy to do business and removing some of that administrative burdens that especially SMEs face. I think it should be about that global access to trade and making sure we get more of the African products into global markets. It is around how do we get occasional SME traders to become regular traders by removing some of that administrative burden and putting it within reach for them. I think a lot of time they just see it as such a big challenge that they can't even move into that space. And I think it's such a critical part of the African growth story, because if we can get SMEs to grow and it's inclusive, we'll make sure that we have resilient economies that are inclusive and it can build forward. And I think that's where the opportunities lie.
Mr. Murray, Herman's talking there about digitalization and the opportunities. What are smarter logistics systems then? What does that mean and where's the potential there?
I think there's a lot of that one can address, but I think in essence, we have to digitalize many of the obstacles that we currently face. Cross-border trading, customs and excise, like Herman has mentioned, customs transparency. Also digitalizing, that only, if you do that, it also builds trust. for investors to come, for people to know and understand how to trade within Africa. And I think that's just one of the points that I can mention, that if you can uplift those systems, that will help. But that also takes, and if I can go to my point, partnerships. Governments need to start to work together with each other. They need to enhance same systems. They need to also open and be transparent so that you can enable those trades through better systems.
Better systems, it sounds like from the discussions we've been having earlier on today, there's always the money involved. So I'm going to go to the banking people now. Mr. Irialu, the AU says that a lack of infrastructure hinders economic growth in almost every country on the continent by about 2%. Can you give us insight from Deutsche Bank's experience? What are the major challenges that are still faced due to lack of adequate infrastructure and that financing around it?
Right. The gap we see today in financing infrastructure is about maybe around $100 billion US. It's not peculiar to Africa to have such a gap in financing infrastructure. Europe, for example, has about 2 to 3% gap in financing infrastructure from where it's supposed to be. Data has it that Europe's supposed to put 5 to 6% of the GDP, which is about 16, 17 trillion. But currently they're putting about 2 to 3%.
Okay.
So just to say it's not peculiar to Africa. My message today is maybe we shouldn't be so upbeat and lamentatious about the gap, but focusing on the steps we're taking to close the gap. Baby steps, but by all means, take them.
Okay.
We have examples, spots on the continent. The West Corridor being financed, for example, the Lagos to Abidjan corridor. It goes all the way. On the West Coast, we have on the southern part, from the northern part of the south down to the deep south, we have, for example, not just roads, but rail on the eastern part, the standard gauge rail. So for me, these are baby steps. My message is let's keep taking them. And that includes both the international financiers, like my bank, local players like Access, the DFIs coming together to make it happen.
Okay.
If I can add
Please,
to
I was
that.
going to bring you in because you are part of the solution.
Yeah, I think that's a point that touches AFC and AFC's activities. One of the earlier speakers made a point that if you compare China, India, and Africa, 1.5 billion people in each of those. But if you compare China and India with where we are, they are way ahead of us. One of the challenges that comes to us is connectedness, right? It is the reason we can be so competitive at producing raw materials. But when it comes to trying to add value to those raw materials and selling them intra-Africa, within another African country, then you find that the commodity that is coming all the way from China is essentially more competitive than a commodity that's coming, say, just across the border. So connectedness is one of the issues that we have to tackle from the infrastructure perspective. Then there is, of course, the industrialization, just basically adding value to the raw materials that we have in so much abundance. We're not going to transform ourselves from a wealth perspective by continuing to sell raw materials. So we must have a strategy to build industries across the African continent in a competitively advantageous way such that we're able to take our people out of poverty.
Let's bring you into this conversation, Ms. Oldfield, because your work as AGL focused on national and cross-border distribution, warehousing, storage, customs brokering. So you're quite well placed to give us insight into the role of infrastructure and growth and that interconnectedness that Mr. Ndaulo just brought up.
Yeah, thank you. And I wanted to come in there. An interesting thing for me as well is we speak about the industrialization and the processing of the actual commodities and minerals resources that we're largely getting out of the African continent. And there's a frightening stat that says above 70% of our minerals and resources goes out in its raw format. An equally frightening stat is that we're transporting rock. So the large cost of logistics throughout Africa and on the corridors, that's creating, we speak about green corridors, logistics being a major play in terms of not being green. We're really transporting rock. So the more that we could reform the resource into a more finished product, yes, it grows the economy, but from an infrastructural perspective, from a logistics perspective, we'll do a lot to start to neutralize what we've got going on in the corridors today, where we've got hundreds, and I really mean that, running on any corridor at a given time.
Mr. Fente, if Ms. Oldfield's speaking about logistics, let's carry on picking up on that. What's Africa's opportunity right now in a world that is changing so quickly, where even when there's crisis, there's opportunity? So in a changing global supply chain in 2026, what is the opportunity for Africa?
I think there is massive opportunity, but I think the opportunity will only be unlocked through execution. The opportunity is there, but if the quality of the execution on the infrastructure and how that impact is on what is happening in the world from a geopolitical point of view, even the localization, nearshoring some of the activities, I don't think as a continent we'll be able to leverage it. And it is around how do we make sure that there's frictionless logistics. And it is that link between what we're doing in the private sector, what government's doing from a policy point of view, and the infrastructure investment that follows in that. And how do we create that connectedness between markets or processes, limiting the administrative workload and making sure that that resilience is in Africa. But it is going to come down to our ability to be reliant. Through global infrastructures and through trade, people want to be able to rely to make sure that there isn't an impact on manufacturing or on supply chains and the ripple effect that that can cause. So if we don't build resilience in our infrastructure, don't build resilience in our supply chains, I think that reliance on us and that is required to run efficient businesses won't be there, and this opportunity can pass us by. So I think it's about how do we grab it where the opportunity exists now.
I mean, as Mr. Ediaro, you were saying earlier on, it's not a unique to Africa issue that there's infrastructure funding gaps. NEPAD says that Africa's infrastructure needs about 130 to 170 billion annually. I think you put the figure about $100 billion. So what is the role of Deutsche Bank in helping finance infrastructure on the continent, just very practical ways that you are working now so we don't complain too much?
In summary, we do what we can. Well, like I hinted earlier, we try to collaborate with local funding partners. We finance projects. Now, the challenge there is not an international bank like Deutsche Bank piling up tens or hundreds of billions to do this, but how do you do it? Or let's say in simple banker terms, when you want to get a loan, the bank wants to see a certain level of skin in the game.
Mm-hmm.
And that skin in the game is what I think the focus should be. How do local partners come in, financing partners? On what bedrock are you placing this financing in terms of policies, in terms of modernization, digitization in the ports, for example? What do you see that is already laid down to make things move smoothly? Because you can finance all the roads you want, but like John said, if you're not connected, you still have the AfCFTA building a whole system, but if there's no connectivity, it still remains fragmented geographically. So I dare to say the money is there. How and where do we put it?
Mr. Ndolo, perhaps you can also give us insight into the work that AFC is doing. I know that there was the African Heads of State and Government launching that Africa Infrastructure Financing Facility. You were part of that in a coordinated Africa-led platform that's meant to move these projects forward and to allow finance. Just give us more insight into the work that you're doing as AFC.
So AFC is going to be 20 years old soon. We've been obviously involved in the financing of infrastructure. The other thing that we want to place emphasis on is to try and tackle the high cost of capital across the continent. So one of the things that recently we've been able to achieve is a second rating from S&P, which gives us 2 ratings. So that means we can, as a DFI, we can raise funding at a lower level, which we can then, which benefit we can then pass on to the project which we finance. So that is the first thing. The other thing is that we want to be innovative in tackling what everyone has spoken about today, which is the Africa Risk Perception Premium. So one of the things that we want to do is to deploy our strong rating to de-risk projects, but also financings that involve trade or that involve sovereign borrowings, etc. So that we credit wrap, essentially lend our rating. We all know that the average rating in Africa is B. So if AFC, which is rated A, adds its rating to a debt issuance, then the cost of borrowing is optimized in that regard. But the other thing that we also want to do is innovatively, as far as tackling the risk pricing premium is concerned. When we go out, the feedback that we get is that the debt issued in Africa is not liquid, right? There's no secondary market for it. Like if a lender wants to lend into a project, they're going to have to hold that debt to maturity. Unlike in other parts of the world where if you have the money today, you can buy, and then tomorrow you sell in the secondary market. So we are thinking about innovative ways of developing such a secondary market on the African continent through instruments like repos, etc., whereby the debt that is issued by African issuers can then be traded more effectively, which will help to lower that cost of financing. Yeah.
Mr. Ndawula, speaking about risk, that's something that you know about as CMI. You control, manage, and mitigate commodity risk. Can you just give us some insight into your work and very practical, perhaps, tips or insights that you have?
Yeah, so as a collateral manager, we've been working on the continent for a few years now, and in enabling trade, structured trade commodity finance on the continent, and also helping and working together with clients and finance, but to financiers that has the appetite to finance commodities. But for us to carry on and for us to ensure that we make sure that this grow and there's also cost saving, it's better for us to then also look at and make sure that there are systems in place, better systems in place, and also working togetherness with between governments in Africa to open borders, to have ecosystems and also free zones placed at strategic places that can make transport and logistics and all these things easier for us and thereby also save costs and make it also then a better place to be.
I'd like to take the discussion from the stage to be more collaborative. I'm also opening up my app to check if there's questions there. There's a gentleman from Vodacom that had said he had sent questions earlier, so if you would like to please put your hand up, let us know who you are and which panelist you would like to answer a question. We will bring a roving mic to you. Can I just see if there's any hands for questions on stage while I'm checking on the app? Okay, there. I couldn't find the app. Okay, our last question is from Thomas Printer, but I think he was from before. I'm just checking that there's no questions in the audience before I bring it back here. If you do feel a bit shy, remember you can log on to the app, ask the questions, and I'll answer them on stage. There's a question at the back, the gentleman with the blue shirt.
Good afternoon. Antonio Patiguana from AfCFTA Mozambique. From what I've been noticing, most of the complaints, if I may say so, are very similar to the banking industry itself. The involvement of the governments in swifting out your process, and which step would you consider to be from 1 to 10, for instance? Because in the logistics itself.
So is there a specific question, a specific panelist that you'd like to answer that question?
No, it's for all panelists.
Okay.
Not all of it was audible to me.
Right, can I ask you to please repeat your question, so not all of the questions were said to be... Yes.
In banking company, we already have said that government involvement, for instance, I can give you an example. There is a payment system within SADC region, which is ACDCR GGS, which pretends to make the payments instant. But being from Mozambique, it's not possible to make such a payment because we need to check documentation first. So the difference between the laws in the countries also has impact on how swift the process will be. So within the logistics, what do you consider the level to be of the involvement of the governments between 1 to 10?
Okay, very interesting question. Thank you very much. So who would like to tackle that?
How much government do you like?
I'm looking at you, Herman. I think it is a very interesting question because, you know, from a logistics perspective, and I was listening to the discussions earlier today, Herman, I don't know if you're going to agree with me, is when we're getting involved, we're right at the end of the process, the payments are done, everything's concluded, and then we're getting involved at the last part. So it's a tough one to say from a logistics perspective, how would that payment be processed through the system to enable a country like Mozambique to receive or to use the payment systems. I do believe that perhaps the answer lays within a collaboration that sits between the banking environment and the payment systems environments and logistics companies like ours and yourselves, Herman. Perhaps that gives an indication of where we're at and what we could do, and certainly a bit of food for thought for us.
Yeah, I think if I understood the question correctly, even beyond just the payment systems, it is for me around the absolute integration of the ecosystem. If you've got this chain of elements that works and a single element is weak, either in rail or freight or a customs process, the whole system delays and it ripple effects through the whole one. So I think it is about that partnership and understanding the entire integrated ecosystem from start to beginning. And I think that partnership and the best trade routes and the best trade corridors is where there is this very close partnership between government and the private sector. And it ranges from making sure there's regulatory and policy, clarity, consistent application, and efficiencies in that, and then also where the private sector brings in the skills, the knowledge, that global connectedness that we can bring into it. And where that transparent partnership is with the right approach, I think we can get the results. So I don't think a single role player can do it on their own. And I think to the question of on a scale, where do you put it? I think it depends on the project and this phase that it's in. On significant infrastructure, yes, government will be meaningfully involved in that process. And others, I think the private sector can do it really well. And I think as we talk, we can build on that.
I agree with Herman, and I even have a practical example, personal example. I spent most of my life living in Frankfurt, Germany. I just relocated to Lagos to start my new role in January. So lifting my household means putting things in containers and shipping them to Lagos. That was done on the 21st of December. Ship docked in Lagos 16th of January. I just packed out my container last week. So the question with government is, I would say government should fix things and get out. Let the infrastructure be smooth, let the logistics be smooth, policies, regulations, things work, and then watch it contribute to your GDP. The private sector is going to take it from there. So as long as we have these hurdles, hiccup, customs maybe not working very efficiently, we might think we need the government to be there, but maybe at that point, it's the stumbling block. Fix it and get out.
To link up what both of you have just said, Malfred and Herman, is, yeah, I agree that the involvement of private sector is absolutely crucial, but we will never get rid of government involvement. And you clicked on the key topic, and that's customs. The customs and the regulations, the policies that sit around that move between countries. And, you know, if we think about the frameworks that do exist already within Incoterms and all sorts of other fancy words that we've got, we can't work independently of one another. And coming back to what Herman says, I love what you say in terms of finding how do we eliminate the inefficiencies that exist today within the customs environment? How do we digitize? How do we automate? How do we start to integrate into a greater environment that allows for a more seamless transaction to happen? You know, when you speak about your personal circumstance, Malfred, I think it's every logistician's nightmare when you hear private goods or personal effects is what we would refer to it as, because the opportunity for something to happen in that chain is just so big. But it does then go back to speaking to the infrastructure and what does or doesn't exist to be able to create the seamlessness. And if you've got that, how many other companies have got the same restrictions?
Yeah, absolutely agreed. Checking for other questions on the floor. If you have a question, please may you raise your hand and mic will be brought to you. When it comes to you, please let us know if there's a specific person that you would like to answer your question or it's posed to any of the panelists. I can see there's no hands so far. I will check back in a few moments, and I'll also keep on checking our app to see. But this conversation about the public and private sector and the collaboration that's needed to bring down the cost of trade and to deal with the green corridors, logistics and infrastructure, private sector and public sector want very different things. We see it in whichever part of the continent you're on, there's always going to be at odds, because at the end of the day, most private companies want to ensure that they're making their money, and government needs to enable and create an enabling environment for business. But there is a need to work together, and so perhaps I can ask each of you who have experience in this, how do you work with government? You don't have to, and it's not an airy-fairy, we all need to get along, but how do you deal with that tension?
If I may go first. So AFC is a multilateral, it's a DFI.
Yes.
So, you know, the governments and government participation is a key ingredient of the work that we do. We start by getting governments to be members of the organization by signing on to our establishment agreement. So they basically recognize our immunities and privileges, but also our preferred creditor status. And that goes a long way towards enabling us to raise the capital that we then plow back into those same countries. So that's a key assurance. But even at a transactional level, the previous question was about payment systems. I come from Uganda, and this mobile money thing started small, and it was not regulated at the time, and then it blew up, and everyone was asking questions. Okay, there are certain pain points, but who do we seek recourse to, right? And that's where they started thinking about a sort of regulatory framework, which responsibility was then allocated perhaps to the central bank. So the government participation is always going to be important, but the governments, they need to let the private sector come in with what they do best, which is to innovate.
Okay.
I'm happy to share my view. I think government and the private sector is not that far apart. I think we want to achieve the same things. We want economic growth and a resilient economy. It's good for my business if we've got a strong economy. We want to create jobs. We want to do things the right way to make sure the right fees and tariffs and things are paid to the government and the taxes are collected. I think what we're looking for is a frictionless process. I think if we partner correctly and we create that trade and access to global markets for businesses in Africa, I think we'll all benefit from it. And the necessary income and taxes that the government need to invest even more in infrastructure, we want to partner in that. We want to make sure we do things the right way and get that efficiencies. But as we build that speed and execution in our logistics networks, and we make sure it's an enabler to what we're trying to do in the continent, not an inhibitor, I think we make a huge difference. So I think we we're closer than we think. Yes, there's prioritization that might differ and the how that might differ, but I think we are closer, and I think business wants to partner. We want to work with, and I think the opportunities is there. And as the economies grow, I think both parties, the government, the people, and the businesses will benefit from it.
Maybe I can see you nodding very seriously along to Herman,
from my background and where we've specifically focused, just to give you also a practical example, in certain jurisdictions we are playing a role in fumigation. Certain jurisdictions we need to get into ports. But it is difficult to get there because trying to enter that market or trying to get access to those to the ports and certificates to enable you to grow this business and to help your stakeholders. Sometimes the regulatory constraints that are there makes it just very difficult, and that causes time being lost, and it just adds to the costs. And it adds to making it difficult to actually operate. Where if it is seamless, if we can work together with governments and make it more transparent, I think that will also enable and make these opportunities more feasible.
If we, picking up on what Herman was saying, in that governments and private sector essentially want the same thing, going to your example, why is it then not so simple to deal with government and say, there's this challenge, we want to reduce the cost of trade, fix X?
I think it's unnecessary processes.
Okay.
There's a lot of unnecessary processes. There's a lot of mistrust. There's a lot of things that happen and did not maybe happen according to what government wants it to happen, and then all they do is instead of making the process better, they just actually try to make the process harder. To eradicate and to get rid of maybe something that went wrong in the past, where my belief is if we can just be more transparent, we can trust each other, then obviously that will make the turnaround time, it will be better.
Okay, understood. Marianne?
Yeah, I appreciate what you're saying there, Clippy. I think you've touched on some very salient points in terms of the struggles that we have. Perhaps I'm being very optimistic in my thought process, but when we look at how government has started to partner with private sectors, and you spoke about access to the ports and what's happening on the ports, we're seeing for the first time in South Africa after many years where private sector is starting to partner. For example, here in Cape Town, AGL have got a concession to run A-berth. We haven't seen that level of partnership before, and within Africa, we today run 22 ports, and I think that is a very key deliverable in the partnership between government, regulatory, and private sector. We understand that the challenges that we face as in this instance as a country, and I'll expand that to a continent, and we have what it, in terms of the skills and the expertise, to deliver on change. We spoke about the sum of all parts earlier, and it's, Herman, I think you referred to, it's many things that we need to do to create the perfect outcome. I believe that we are starting to see that, albeit slowly. We're not seeing it as a massive shift in life and tomorrow we wake up and everything's changed, but we're seeing the interaction with the ports. We're seeing Transnet starting to work on railways. Small steps. We're seeing customs integrations happening with private sector. So while I believe that when we speak about velocity and vision with the motto of the specific conference, we need to adopt the same thing with our approach in logistics and get that vision being the objective and the velocity, the speed of how we're doing it, to see some real change that perhaps you will also see in your field, that you can start to tangibly feel it.
Mm-hmm. I'm about to close off the floor for questions as we wrap up our panel discussion. I'm checking if there are any hands in the audience who would like to ask questions before we wrap up. Okay, one more question in the second row.
Just a quick question, perhaps to the last speaker. Is there a contradiction between small steps and velocity?
Optimism hitting in. I don't think there is a contradiction. I think there is a definition where we've seen we've come from, and from my small experience within the logistics environment over the last 30 years, we didn't have what we have today. So we are starting to see that. Are we seeing it at the speed, the velocity, coming down to the definition of velocity, that we want to see it? No, we're not. That change we have to continue to work on, and we have to continue to promote that change. For me, the begin is the hardest part, is to start to break down those areas of distrust, of transparency that I think, Clippy, you referred to. And so perhaps like a snowball, we'll start to see that velocity and that momentum building. And the change has to start with us. It has to start with us sitting on the stage with our partners, the ministers that were speaking this morning, and to get that collaboration with that single united objective.
Okay, there's one more question in the back, and then we're going to wrap up the session.
Thank you. There has always been perception that in the development of infrastructure in Africa, the concessions between government and private sector, in private sector building the infrastructure and the government use the recovery model of the cost through user payer system is not sustainable. What is your view with regard to that? Could this be the cause of the slow progress in infrastructure development in Africa?
Dr. Otumba, is that based to any specific person, or anyone on the panelists can ask it?
Anyone?
Thank you.
So for infrastructure, first and foremost, there must be viability. What makes, for instance, a highway project viable is for it to be able to repay itself through the tolls that are collected. So I think this ability of a project, whatever it may be, to generate cash flow in order to service debt repayments is a key ingredient for the project to be attractive both to equity holders and also to debt holders. So it must be in place for the project to succeed. That is my thought.
Okay, thank you very much to our panelists. We're going to wrap up. I'm going to start with you. We're going to end the panel, as I like doing, with a one-word answer to a question. What is it going to take to reduce the cost of trade on the African continent? Just one word, each of our panelists.
Collaboration. Guarantees.
Corridors.
Ecosystems.
Intentionality.
Thank you very much. Our panelists, a round of applause, please, for them as we end this panel discussion. It's time for a short break. It's 26 minutes past 3. Please may I ask that we're back in the room at 3:45. Adabida is going to be moderating a panel on building competitive African SMEs for regional and global markets. If I can ask my panelists to please stand, take a group photo. There is coffee and networking in the room next door, and we'll see you back in the room at 3:45. Thank you.
Operations. We are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one, but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB gas plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri gas plant, a vital link in our gas production chain. Kwale gas plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber, and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
We are IHS Towers, one of the world's largest operators and developers of shared telecommunications infrastructure. Independently owned with a portfolio of tens of thousands of towers across multiple markets, we are connecting people across Africa and Latin America. Engineering excellence is at the heart of our business. Right from where we began in Nigeria in 2001, with one single tower and one single solution, to today employing over 2,000 people and offering not one but 6 solutions. With co-location, new sites, in-building and distributed antenna systems, small cell, fiber and rural telephony, we're helping more and more people to stay connected every single day. Innovation is our lifeblood. We're investing in the latest technologies to deliver cutting-edge solutions for the world's leading mobile network operators. Sustainability is key. We're utilizing renewable sources to deliver greater efficiencies for our customers and help protect our shared environment. Together, we aim to contribute to a more prosperous future. Connectivity is critical. We're delivering mobile communication coverage to millions of people across the emerging markets, supporting the implementation of nationwide digital agendas. Practical solutions are our business. Combining the power of technology with our integral infrastructure, we are helping to build the networks of the future, working with our customers to bring mobile connectivity to the emerging markets.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. Ebocha Oil Center, with a liquid export capacity of 120,000 barrels per day. Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.
Out, so you do not want to miss that award ceremony that's going to happen in this final session of the afternoon. Ladies and gentlemen, if I could ask that we could come back into the plenary hall so we can kick off our final session of the Africa Trade Conference 2026, brought to you by AfCFTA. All right, ladies and gentlemen, it's a good afternoon to you one more time to hopefully get us right through to the end. We promise to try and keep it as lively and as entertaining as possible, without the entertainment part, of course. But the conversations are still going to be very critical and important. Please asking whoever's left off to still please come through to the front so we can have another conversation. We need your engagement in this one. We really do, because it's actually, this session is about you. It's about your entities, your businesses. How do we make them shine across not just the continent, but certainly globally as well? And for us to be able to have these conversations, we're going to need the input of everybody that is here so far across today. So we'd love to get all of you to be part of this conversation too, so please do join us. And please, if you have any comments, questions, queries, etc., do not be shy to share those. I'm hoping as well that the networking sessions next door are going very well, even if they're here, outside, wherever they may be. Very important to be able to complete those as we get to the end of today. It certainly has been an enterprising day, a day where hopefully solutions have been turned. And as I said, one important word, velocity, has been the key one to really be looking at. Because without it, we're not getting things in motion. That's the whole point of all of this, right? We start off with finding out what it was that was our vision last year. And even today, we can still formulate ideas and put together thoughts that we want to achieve going into the years that come ahead. But from here on, we need to get velocity into it. So that's why this is so important. So again, we're just going to ask and just finally get everybody that is towards the doorway to come join us in this conversation, please. Would love to pretty much get started as well, so we can close things off for you too. We don't want to keep you here too long, but would love for you to be a part of the conversation overall. All right, so hoping that everyone is mic'd up and ready as well, because this conversation, as I said, we're going to try to compare, maybe, yes, but really talk as well, just about the strategies, the capabilities, and even the support structures we could all be putting in place to empower the small to medium enterprises on our continent. Not just so that they become great regional players, but so they become great global players, in fact, as well. How can we focus on things like finance, the access to finance, and more? Technology, which continues to change on an almost daily basis. Capacity building. What is it that they need in order to grow and become bigger? And even market entry strategies. How exactly do we make sure they have a foot in the door in the right market so they can build on all of their trade capabilities? Ladies and gentlemen, with this, I'm hoping that we'll be able to shape future discussions as well, but also talk about your entities, your businesses, whichever they may be, so that we understand exactly how to ensure that that front foot steps even more forward from here on. Ladies and gentlemen, our panelists for this conversation, thank you so much for joining us, is Building Competitive African SMEs for Regional and Global Markets. Our panelists are Kafuwe Bimbe, the head of SME Banking at AfCFTA African Subsidiaries, Ahana Anaba, the head of Trade Products at Finverity. Then we have George Wilson, the CEO of Arm Africa Trade Fund, Joel D. Ramaboy, the Permanent Secretary Ministry of Trade in Botswana, Cleola Kunene, the Head of SME Development at the Johannesburg Stock Exchange. Alrighty, folks, again, as we said even in the previous sessions, if you have a question during the session, please do raise your hand. We'll try to get to it as soon as possible. You don't have to wait for the end, but I will try to start us off for this conversation. And one has to note that when you try to put together a small business, one of the important things that people always talk about, or people that I've conversed with, they often say, well, I don't have the money to get myself started. Do you know where I can go to just get funding? I just want to get funding. And so then AfCFTA comes into play here. This is where you say, can I actually go to AfCFTA and get some of this money? Or can I go to any multilateral institution for that matter and get any of that money as well? So that becomes the big question mark. And maybe that's where we should start. Why don't we start then with Mr. Bimpe then and say, are these players correct in thinking that in order for them to start their small businesses, the first thing they should look at is funding?
Yeah. You're right. So the first thing they look for is funding, and about 40% of SMEs that have been researched on, surveyed, they indicated funding. However, funding is not the ultimate. Funding, of course, is not the issue of liquidity from the banks. It's about perception, risk perception. It's about informality. It's also about structure. Funding normally follows structure, right? So what we want SMEs to do is to move from the informal environment to the formal environment. By so doing, it is easier to risk assess them and be able to give the funding. You will agree with me that SME funding is structurally complex, and we will advise that by the time they are getting to us, they are at least within the digital space. And then it is also about partnership. We have partnership that we can use to support them, especially where we don't have patient funds. We partner with a lot of our DFIs to be able to give them. But what I would say is, for SMEs, yes, we'll fund those SMEs that are starters, right? But what they must do is they must have viable businesses that can enable them pay back, and they will need to have proper structures. What we will do is that we have capacity building projects. We have a lot of programs we have, and we'll be able to fund them well.
What's a viable business? Because, and I don't mean specific in terms of it sells this and that, but what I mean is, if I come to you with an idea, right, and I'm looking to expand this business, and I believe that there's so many efficiencies that I could solve through my business, and there are so many areas that could actually be covered through it. And I believe that, and let's just make an example, I'm selling millies, right? I'm selling corn across the continent. I believe that there is an avenue for this in many parts of the continent, and I just need the right backer for my business. Yet my risk profile is averse. I do have a viable business. I have the business plan. I have the idea in place. But because I haven't sold anything as yet, I don't look like a credible business at play yet. Why is it that I'm unable to grow from that early seed stage?
Okay, so what it is you need to have market for your business. Even though you have the right things, you have what you want to supply, but the market uncertainty is there. So what we do as a bank is also to connect both the suppliers and the people who are purchasing. By so doing, we can have visibility over your transaction from end to end, and then we can support you in that journey. So it is not as if we are affiliated. What we want to do is it possible for us to structure risk in an intelligent manner to enable you pay back as and when you take loans.
Interesting, actually, then. Okay, Ahana, let me come to you. If we're looking in the space, we're looking for funding, we're looking for financing, what have you found to be those stumbling blocks that a lot of these SMEs actually stumble upon, and the teething problems that they get themselves into, unfortunately, before they're actually able to grow?
Yeah. I think maybe let's take a step back. So when we say SME funding, I think SME funding is something we hear a lot, but what is SME funding? There's different types of funding for different purposes, funding at different stages of being an SME. And so what I'll focus on here is really what makes, in my opinion, us to have competitive SMEs. I think, it's all well and good to raise money to start a business idea, and you've started and you've grown the business to a certain extent. But I think all of us here work on the continent, so we do understand what payment cycles are. Working capital is a big constraint to many businesses. And you often hear about, what is the value add of this particular SME over other SMEs? Why should I fund this SME and etc.? But my pushback would be, if I can't fund my working capital, where would I find that liquidity to invest in building value? And I think that's really where we should actually anchor this conversation. If working capital continues to be a constraint, and remember we're talking about SMEs in Africa, which I would argue makes up more than 90% of the companies on the continent, if all these companies are facing the same working capital constraints and are not investing in building value, then we have a problem. And I think as a key stumbling block that we need to look at, I think that's one of them. You mentioned something about having the SMEs within the bank and seeing what those transactions look like. I think that's another element where I think we can actually make quite a lot more progress, because looking at SMEs as just their entity itself makes it quite difficult to talk about working capital for SMEs. But the truth is that a lot of SMEs are in value chains that we have some visibility into. So, instead of looking at SMEs as just the companies themselves, we can actually help SMEs by looking at them more within an ecosystem, and how do I finance this particular ecosystem? And I think it is something that is quite urgent, because if the existing SMEs are constrained and are not adding value to themselves, they're not going to grow beyond SMEs, and new SMEs are not going to come in, because then it just becomes too risky and difficult to scale. And what happens is, if I'm having working capital issues, my payment times are being delayed and etc., I'm going to increase my price, and I become not competitive, and I'm not adding value. I'm going to be selling more expensive. I'm not going to be adding as much value as maybe other global competitors or regional competitors, and we get further and further deeper into that problem. So I think one of the main stumbling blocks I would bring up would be working capital.
If you're trying to ensure the right risk profile for those, right? If you're thinking about that working capital, and you're looking at how exactly do I create the right working capital for an entity that I still feel is still pretty risky. Early stages maybe, or even mid stages for that entity. Not fully entrenched or developed as much as it wants to, because that's why it would need the working capital, I would assume too. How exactly do you create the right model for that? Because it feels that now with the banking institutions we currently know, the way banking kind of works, it might be difficult to kind of see that moving forward. So you have to reconfigure, I would think, the way you measure the risk profile of SMEs.
Absolutely. I would actually argue, I'm just going to not be controversial on here, but I would push back and say it's not that difficult. Because I think that the truth is, with SME banking is difficult, yes. But a lot of SMEs are still funded, sometimes by the same bank, via like a personal loan or an overdraft. So we are still taking said risk, maybe with additional collateral, making it more expensive, and not necessarily suited to what that business is doing. But if we look at things more from an ecosystem perspective, I mean, a lot of the bankers here are going to be looking at corporate clients as well as SMEs that are in the same ecosystem. So we actually have some data that is more useful to us in terms of de-risking some of the SMEs that we're financing. And that's really what the finance industry's job is, to structure products with the information that's available to us. So that there are many products that actually do reduce the risk. So for example, supplier finance. I have a big corporate and I have a lot of different SMEs all asking for the same thing. Instead of giving them all individual overdrafts, I can put in a supplier finance program. Distributor finance could be similar. It takes quite a bit of work, yes, but we are in the era of building lots of data. a lot of the transactions today are digitized, so we can start collecting some of this information to help the SMEs, and I think that is quite a critical point.
Mr. Ramapoy, what have you seen, particularly in your ministry in Botswana? It feels right now like a lot of vibrancy, a lot of change, a lot of desire, and it's youth-led in many ways too. Has that helped, that driving force, to ensure that we see SMEs as a different kind of business, as a different way to grow the economy?
No, thank you very much. Definitely, we are an economy which is in the transition mode, as the minister has talked about BETP earlier today. And this transition mode is intended to position SMEs, or to optimize the potential of SMEs to drive technical innovation and economic development. And I'll play a devil's advocate for a moment and argue that funding is not a problem per se. The problem is what is actually being funded. And I'll explain why. When you look at our current financing models, they do not necessarily take into consideration the specific needs of the entrepreneurs at different levels of the business development. And I'll give an example. There are at least 3 levels of business development. It's ideation, it's growth, it's expansion. Okay. But when you look at the current financing models, they are more restricted to growth and expansion and neglecting or ignoring ideation states. And I'll put an argument here and say, a business starts with an idea. And that idea must be IP protected to derive commercial value. That is, before you can even think about setting up a business and getting it operational. And what is important at this ideation stage is 2 key pillars. IP assets management, which is IP rights protection, and issues of qualities and control. But when you look at the current financing models, they don't cover these 2 aspects. So I think what I'm trying to emphasize here is that the current financing models ignore the ideation states. But that's where innovation starts.
Would that solve everything, though? If we just figured out that first stage, that idea stage, would be able to, you think, ensure that SMEs are the building blocks of future economies?
Correct. And the point I'm trying to drive at here is we need a paradigm shift in our financing models. We should not perceive SMEs as being risky. Sometimes, yes, in financing we talk risk, but the fundamental question is this the real risk or is it the perceived risk? Yeah. I think we need to unpack this so that we give the SMEs the requisite policy interventions for them to be able to transform Africa. I'll give this some context. Having listened to what was discussed earlier today, there were 3 startling statistics. 77% of exports are primary commodities. This means that we have got a serious resource case that we need to deal with. 3% share of global trade, which is Africa. Yeah. And most importantly, the share of total trade, 15% of total African trade, which means Africa is not trading with each other. So these statistics imply that, yes, they are a problem, but at the same time, they're an opportunity. As we speak about empowering or building the capacity of the SMEs, they should help us to resolve or provide solutions to these 3 problems. And I'm saying this from a policy point of view in the sense that, and I'm worried about the 77%, because what it means is that we are exporting raw at the expense of industrializing our economy. We are doing so at the expense of job creation. And most importantly, we are doing so at the expense of innovation. for those companies or countries that have advanced, there's this mantra that says, you innovate or we perish. So where we are, time has come to optimize the potential of SMEs, to disrupt the status quo. Let's optimize that potential to come up with those technological innovations that will help us grow, but enabling them to tap into the opportunities that come from our primary commodities.
Yeah. Okay.
That's my position. But unfortunately, like I'm saying, where we are, we don't have the financing schemes that support innovation because it is still perceived to be risky. That's my submission.
Cleola, let me come to you. I mean, you've been agreeing a lot with what you've heard there from Mr. Ramapoy. Is that to say that the Johannesburg Stock Exchange, which itself has an Alt-X, which is an alternate exchange in some ways, that looks at small businesses as well, that there are many ways to be looking at SMEs and not always just considering them as just risky?
I'll start with raising 2 points that I absolutely agree with my fellow panelists. Firstly, if you're not investing in innovation, you're going to be paying for someone else's. It's that simple. Yeah. If we look at, for instance, Africa's got some of the best IP and innovation. It's all leaving our shores. Why? Because we don't commercialize the innovation, right? And I'll give a tangible example of South Africa. South Africa, actually, the IP for the lithium battery, which is in every single cell phone, came from here. We didn't commercialize it. South Korea did, right? iCloud services, AWS, came from Cape Town. We didn't commercialize it. The Americans did. Why? Because they were willing to pay for failure, for mistakes. So when you look at capital structures, when it comes to SMEs, we look at SMEs as we're paying for survivalists. We're not looking at it as we're paying for a competitive advantage and the future of our economies. So someone has to pay for the mistake. So when you structure capital to make it affordable, because capital is very expensive, you have to look at who carries the risk for the mistakes and then who benefits from the growth. Where government comes in and institutional comes in is saying, can we afford to mitigate the risk to guarantees or insurance or different structures? And then where the private capital comes in is then to supplement in terms of the growth, where we're talking about working capital, etc. But somebody has to pay for the mistakes, because if you don't have capital to actually pay for it, you pay for it down the line. And we've seen this as Africa the most, right? We've seen this with raw materials. We didn't process it, it was just taken off our shores, right? It's not unique to any African country. And now we're seeing the same thing with innovation. We're seeing the same thing with SMEs, small and medium enterprises, where they are being capitalized by people who can see the commercial viability. We only capitalize where the growth is already existing. So mostly debt, very little VC, and almost no ideation capital.
Is that not because we have too much to lose? Or too little to lose, for that matter, in some cases? I'll say this because I was speaking to another lady from the IDC, actually, the Industrial Development Corporation here in South Africa, and they were vehemently saying, listen, we are very risk averse. Yes. Right? We don't have that much, but we need to invest at the same time and build the industries that will drive the future. But we will struggle because of our risk averse nature.
Well, there's good news and bad news. I think the good news is that we do have institutions like IDC and other institutions that are going into that space, right? And that we've seen the types of capital evolve. I mean, if you think of capital historically, you could just go to your bank, right? Now we've got DFIs playing a role, we've got alternative capital solutions. So even if you look at trade credit, etc., there is now there's behavioral, right? Where they look at your behavior, etc. So capital in itself is evolving, and how you assess risk is evolving, and it's evolved at a rapid rate. Technology's played a fundamental role, but also the fact that we have so many SMEs, right? So many entrepreneurs. I think Africa's got about 22% of the world's entrepreneurs are here, right? It's phenomenal. However, we only get about 0.6% of the capital. Why is that? It's because we're still young in understanding how to mitigate that risk, and we're still very young in alternative types of capital. So we haven't really fundamentally matured in the structures that we can basically implement to help us do that. So yes, IDC as an organization is still young in what they've done. They haven't yet learned how to successfully pick a winning horse, as it were.
George, how do you pick a winning horse?
So I've got a slightly different approach, should we say. The real exam question is, what do the SMEs need in order to thrive? And not just start up, but thrive and survive. They employ 80–90% of the employees on the continent. They contribute 40% of the GDP, and the real issue is that they are being starved of the working capital. Their businesses, we're talking about SMEs and MSMEs, their businesses are buying and selling goods across the continents. That's it. There are 41.7 million MSMEs in Nigeria alone. Wow. There are 135 million MSMEs across 54 countries on the African continent. Each one of those SMEs has at least 1,000 invoices a year. It is the provision of trade credit to those invoices that is the answer to the exam question. And that is what they are being starved of at the moment, and that is what is stopping them from thriving and surviving. The only place where those SMEs can get trade credit is African banks. There are some trade financiers, but in large part, Tier 1, Tier 2, and Tier 3 banks provide all of those African SMEs with credit, and that's what they need in the working capital cycle, and that's what they're being starved of. The trade gap, $120 billion a year, is what's holding them back, and what they need in order to improve and thrive and grow Africa and grow the AfCFTA, intercontinental trade, all of these requirements. The only entities on the planet that can touch an African SME is an African bank and an African NBFI. They're the only ones that can take local currency security over their receivables. They're the only ones that
measure the risk as well.
KYC them. Now the risk is an important and interesting point. They are not being starved of credit by the banks because of the perceived risk. Okay. Right? And the reason why I say that is in the last 10 years, the refusal rate has gone up from 20% to 40%. An SME has come to their bank and asked them for working capital, and the bank has refused, not because of risk. The actual risk of default in those same 10 years has gone down from 4 to 2%. So it's not the risk. That's often what's cited, but the reality is that the banks don't have the liquidity, and SME trade is not profitable for the banks because of regulation, which I think we're going to come to. But that is the real source of the issue. That's what's holding them back. So we need to provide them with more liquidity, often in local currency, not just dollars and euros, and they're not getting it from their banks, not because the banks are evil. These access and across 16 countries in Africa, is doing this very, very job, and so are all of the rest of the banks. They just don't have any spare capital and liquidity to invest in SME trade because it's locked in government bonds, basically. Sure. And there's a structural, the point is it's structural rather than commercial risk, friction.
My worry is then if we're going to look at them and say, okay, we need you to supply all these things, including the liquidity, you're not profitable to the larger banks at this stage, is that not a short-term view? Is that not too short-term a view to be looking at SMEs and saying, if we think that their risk profile isn't the reason we're denying them, it's because we actually don't have the liquidity, well, you could grow the liquidity over time. And over time, that same SME is actually going to give you that profitability that you perhaps were looking for because they'll be able to pay it over time. Are we not looking at better or more favorable terms that need to be actually held up for these perhaps? What do you think, George?
So my answer is probably that's not the issue. Yeah. There's actually plenty of liquidity in Africa. There's plenty of homegrown liquidity in Africa. Yeah. The problem is that it's currently trapped, largely through regulation, but it's currently trapped in the pension funds, in the insurers, PIC, African insurers, institutions. African institutions have $1.4 trillion of liquidity just locked in government bonds. The banks themselves have $1.4 trillion worth of liquidity locked in government bonds, which they have to buy through regulation. Yeah. Once they've bought the government bonds, there is no spare liquidity.
Yeah, they've locked.
They can only get the capital from their equity and their deposits. Once they've used those deposits and they've used that capital, there's no extra to invest in SMEs.
Sure. Ahana, that makes it difficult.
It does. And just to, I guess, circle back to the question you asked about whether it's short-term. Yes, absolutely short-term thinking, but also just not productive. Right? Like if we've said most of the companies in Africa are SMEs, they employ most of the population, and we are looking to be innovative, we're trying to be, more value additive, that answer just doesn't get us anywhere. If we say, as a banker, I'm happy to fund 10 big corporates every year, I'm going to do 10 big deals, I'm going to make my target, and I'm okay. I mean, all of those big corporates also buy from SMEs. So if your SMEs disappear, or they become, your input is not as good, or the pricing is just not as competitive, it becomes very difficult to grow an economy, really. And as the financial services industry, that's really what we have to be supporting. So it becomes very difficult, yes. But part of it also is because the problem has been kind of discussed over and over and over again, and the solution is not straightforward. It requires that we all work together. And I mean, if we're in a commercial discussion, we're all talking about working together, but realistically, we don't work that closely together. We actually need to, because the data, some data is there. Yes, there are gaps, but you can't really see the big picture if everyone's not contributing to the solution.
What do you think is holding that back? Is that fear?
Partly fear, partly short-term thinking, but then also partly, I guess, I think someone mentioned about patient capital. You have to be patient. SMEs don't grow into large corporates tomorrow. You have to be willing to sit down and say, I am going to take this bet on this particular sector, this particular group of SMEs, this particular ecosystem. I think that's one of the things that is actually quite interesting about Access Bank. That was one of the bets that they made. And if you've seen the change from the asset base from when they started to now, you can see the difference. Equity Bank is the same. There are quite a few banks who have taken that view of, I need to make SMEs a serious and intentional focus, and you've seen how that's grown. Yes, it means being a bit more innovative with the products. Yes, it means being, investing more in technology so I can actually see my data and turn things around quicker. But it's something that is definitely worth it, because otherwise, how do you get to the big corporates?
Well, Joel, they said regulation is the problem. It becomes a problem in the end. How does regulation perhaps ease up, if possible? And I know you were speaking about quite a few examples.
I'll put it this way. Yes, I agree. Regulation can be a problem, but it's a question of how that regulation was framed from the beginning. Because there are two fundamental questions that need to be answered if you are to design and implement a regulation. The first one is the beneficiary. Who are you doing it for? And as I said earlier on, SMEs at different levels of business development require specific support. And with that in mind, you'll find that in most cases, those who are supposed to be the beneficiaries are not necessarily involved at the decision-making table, or when those regulations are put together, they're not there. And we have demonstrated to the rest of the world, we have got the youngest minister, I think, in Africa. How old is that minister?
In Botswana, is that your mineral minister? Yeah.
This is a way of saying
84.
most of the SMEs are inherently young people. On average, I think Africa, the population is getting younger and younger.
Yeah.
And time is now for the same population for whom these regulations are meant to support, to enable. They must be there when decisions are made. That should be the starting point. And secondly, the question is, what is the purpose of that regulation? In most cases, the mindset for our regulations adopt a protectionist approach, as opposed to using regulations as enablers. Yes, sometimes you may have those regulations very good in black and white, but the implementers now use them as the brakes to stall everything. So my argument or my submission is the problem may not necessarily be the regulations per se, but the mindset of the implementers. And I want to believe that there's any one government that comes up with regulations to stall economic development. All the regulations are intended to enable or to make it easy for SMEs to go into business. So if that is the mindset, why then should it be a problem when we come to implementation? I think for me, it's now the human behavioral aspect, which is the implementers. So the solution is change of mindset.
Kifui, is that what's pretty much happening? Is the mindset's changing a little bit to how you're viewing SMEs in total?
Yes, it is changing because if you look at it traditionally, people would like to take collateral before they even advance loans to them. But currently, there is an evolving trend where we are looking at cash flow so that you do not need to provide collateral before you grant them loan. And I think we have a shared responsibility. Sometimes we talk about a loan, but it is not only that one. Finance is the oxygen, but we also need to look at various systems that support it. It's just like an athlete. You have oxygen, but you need training. You need systems around you to be able to operate well. So I think the solution lies in shared responsibility, regulation, IT deployment, discipline in terms of the SMEs themselves, so that they will be able to access funds and grow.
I mean, my worry then, Cleola, is that we could lose some of these small to medium enterprises when they get bigger. I mean, just look at the UK. If they look at ARM Holdings, which is a massive chip designer, they lost that to the United States in many ways. Yes, it's still a UK company, but it's listed now in the United States, right? They have Vasitech as well. They have Wise, which is another major firm as well. So they could lose, and we could have the same issue, where if we don't support our businesses, our small, medium enterprises, we could lose them, clearly.
And it goes back to the issue that I raised earlier on to say, what are we financing? Listen to the proceedings today. There is a lot of interest in infrastructure development.
Sure.
But what I see as the missing link is the soft infrastructure. The focus is predominantly on hard infrastructure. But there's less emphasis on soft infrastructure, because as we speak infrastructure development, we should be focusing more on infrastructure that enables or that promotes or supports the IP system. We should be focusing infrastructure that support issues of inspection, testing and certifying.
Yeah.
Because these two combined will improve the competitiveness of the products more so that we are taking to the export markets.
Yeah. Okay.
So when you speak infrastructure, I think the message is, let us not neglect this part, because it's a complementary aspect to building competitiveness of the SMEs.
Yeah.
So funding is not a problem per se, as I said. Thank you.
Fiona, let me perhaps get your view on that.
No, 100%. So If you look at the stock exchange, it is the largest exchange in Africa, 19th largest exchange in the world. It has a significantly deep liquidity. Our liquidity in terms of market cap is 4 times bigger than this country's GDP.
Wow.
So it is, when I say significant, it is significant. Yet, when you look at who's investing in mid-caps, it's individuals, not institutional capital, very little institutional capital. So what we've really done is not just look at how do we reduce the barrier to entry in terms of regulation for companies to enter. We've worked with government to stimulate private capital, right? So it may be a contradiction to think of an exchange in the private capital space, but we've introduced private capital and facilitating private capital because we know that without private capital stimulation, we're not going to see these mid-caps grow. We're not going to see small businesses become large enterprises, and we need large enterprises, as someone mentioned, for the entire value chain to work. But we also need to unlock more institutional capital. The insurance industry alone, just here, and we can talk about Africa broadly, is worth over 4 trillion. Just the insurance industry. That goes into institutional capital. Who are the people that have most of the insurance? Individuals. So if you gave people a choice, and which is what we're trying to do, why financial literacy also so important and plays a role in unlocking capital for SMEs, is saying now you have an opportunity to invest in a small business. And that is part, maybe a little bit of a different angle that we've taken, but as I said, we've also worked with government to really make sure as an ecosystem we also develop, we provide market access. Sure. We look at it in terms of not just from a startup perspective, but as companies scale, how do we ensure that they fast track that scaling through every aspect, but especially unlocking various types of capital?
Very important. Folks, I'm going to open up the floor as well to you guys. This is probably a segment that would have a lot of questions. I have a question right at the front there. I think Oliver is raring to go to ask a question over here. If I could ask our panelists if we could try to keep the answers short, just so we could get as many questions in as possible as well for this one. Please, if you could stand up and just introduce yourself as well.
Thank you so very much. It's working?
Yep.
Arabire, and to our panelists. This is a very interesting topic for me. But I just want to make a few comments and, of course, very short, and a question. First of all, I think we can appreciate what Access Bank is doing in terms of their women program and youth. We need entrepreneurs. We need more entrepreneurs to grow our economies. Without entrepreneurs, nobody gets paid, including the state. So I think what we need to do is to handhold each other, to handhold our entrepreneurs. So if we can all come together, the banks, financiers, educators, and so forth, we can be able to mitigate the risk, but empower more entrepreneurs and grow our economies. So my question, or maybe a question, maybe it's more to Access Bank, to maybe elaborate more on what they are doing in the entrepreneurship space, especially among the youth, so that more of our delegates can benefit from that. Thank you.
All right, yeah, that's to you. What are you doing?
All right, thank you. So what we'll be doing is, we have critical things, capacity. Do people even have capacity? It's not only about funding. So what we do is mostly we try to build capacity. We have engaged some of the big 4 firms to support in building that capacity. We have also partnered with other well-meaning institutions, for example, SMEs that are export-ready and those that have the potential to start exporting. What are we doing? We have partnered with DHL, for example, to build their capacity in that regard. In terms of credibility, for them to also be able to do business and grow, there is a need for credibility. So what are we? Trust is an issue. So what are we doing? We are also exposing them to doing business in transparent way and digitalizing their system, moving them to digital space so that they will become more transparent. We also build capacity in, we get the firms to also help them look at their financials and present their financials in a way that is acceptable to the world. And then the next one is connectivity. How are we helping them in terms of connectivity? How do we integrate them into the system, payment systems that we provide for them seamlessly, and other platforms for them to network, right? Because market is also an issue. So you look at us trying to provide market quality. We also create the platforms for them to showcase the kind of quality products they have. For example, last year we partnered African market in Dubai. And what did we do? Because sometimes they stereotype them, we sponsor some of them to go there and showcase the product they have, just to let people see what they are capable of doing, and also to get the visibility that they require to be able to expand. So we are doing a number of things. And like I spoke about earlier on, supply chain finance is something we are doing so that they'll be able to leverage the credit strength of their anchor companies or large buyers. We also looking at alternate credit scoring, so like I said earlier on. So we are doing a number of things, but like I said, it's a shared responsibility. And they must be disciplined and take advantage of all the platforms we are providing for them.
Yeah, understandable. There's another question that we have, I think, just behind over there. Yes, please, ma'am.
Good afternoon, panel. My name is Maki van der Merwe. I come from Regenesis Business School in Sandton. And I'm not even going to add on or comment on what the panel has already discussed, because everything that you have highlighted, it is so very true. What I want to do today is to challenge the business. I want to challenge the room to say we have had conversations since this morning, and with every conversation comes implementation. The policies that we were talking about, to make them flexible, we spoke about velocity, we spoke about the risk. I'm saying to you today that there are implementing partners out there that can make SMMEs work, who can reduce risk for businesses that are ready to invest in SMMEs. So Regenesis has partnered with AfCFTA. We have big deals going on. That just shows how confident we both are in each other. That just shows the trust we have built with each other in such a short space of time. Because why? We've got an ecosystem. I heard the lady speaking about an ecosystem. Our ecosystem incubates SMMEs. We incubate them from ideation. We incubate them and then we develop them. We've got programs specifically designed for SMMEs or business people, because we know a lot of business people run their businesses from the back pocket. They pay school fees, they pay their bonds, and then they want to service the purchase order. That's what makes them fail. And that's what's making the bank say, we're not prepared to fund you. So we put them through our ecosystem and make them bankable. We have a post-funding support system where we have a pool of lawyers, pool of accountants, pool of HR specialists that make sure that they are compliant and they are bankable. That's why Afreximbank today says, we are confident in you, Regenesis. Take the SMMEs on and grow them, scale them for what? Regional and global markets. So we also have the RIF, which is the Regenesis Fund Management, which makes sure that the monies that we get are safe and we can account for them. We've got committees in place that takes accountabilities. We are inviting the House that we can implement your social development programs, your enterprise development programs, and every other programs that needs financing. and we will take away the risk. Thank you.
Thank you so much for that. Actually, really, really appreciate it. I think, look, no matter what, I think those are the deals that are absolutely necessary. And I think, thank you for letting it be known as well. Because no matter what, those spaces are going to be where our small businesses need to work in order to create exactly what we're talking about, creating giants for regional and global markets. Another question
I just want to add on that as well. A good point that you mentioned is implementation, which is absolutely important. I think we discuss a lot, but implementation does take work. And I think it's a good point highlighting the institutions that are actually being intentional about implementing. So for example, and I actually didn't do an introduction, I forgot about that, but I work with a company called Finverity. We do supply chain finance technology, and sometimes implementing systems is going to be something new in country. So for example, we've worked with a bank in Tanzania that was the first bank to do supply chain finance on their own in country. And that took a lot of investment on our side, but also on the bank side to sit down to build said programs. Same thing in Kenya. We work with the bank who was the first local bank to do supply chain finance in country. And again, it takes a lot of time, a lot of effort, working with different partners. And that is, I think, a good challenge to the room, that we do need to put our money where our mouth is and actually implement some of these programs and pull in the missing parts, because there will be parts that we can't do ourselves. And that's where it becomes an open conversation to pull in the partners that can provide said solutions.
Yeah, I couldn't agree more. Definitely couldn't agree more. We have a question still just on that side.
Good afternoon, everyone. My name is David. I work in Access Bank. So my question is to you, George. In your comments, you talk about liquidity and capital as the major issues for banks to lend to SMEs. So don't you think that the problem for banks may not actually be liquidity, but maybe financial market development, deepening the financial market? For example, outside South Africa that does about $5 billion every day in repo markets, how many banks, how many countries can actually do, how deep is the repo market? Because if I buy bonds, I buy treasury bills, there must be a very deep repo market to unlock liquidity from the balance sheet. So don't you think the problem is not banks buying securities, but the availability of the repo market, how deep that market is? Thank you.
I'm sorry I didn't hear all of your comments, but I think your question was, is it not that there isn't sufficient liquidity?
Sorry, George, I think we're having a problem with just your microphone. If please use that as well. Sorry.
Probably can't hear me either. I think your question was, is it not that there's a shortage of liquidity, but there's a lack of market depth in the relevant market? So the lifeblood of SMEs is liquidity. It's that short-term credit, 90-day, 120-day, 30-day credit that they apply to all of those invoices. The only place that they can get that liquidity, and it is liquidity, it's credit, is from their banks, in reality. Now, their banks are just not giving them the liquidity. It's not that there isn't a sufficiently deep market. It's that they've already used all of the available liquidity that they have to fulfill their regulatory obligations, their global regulatory obligations, which say you as a bank, you Access Bank, must buy government bonds, and you must hold those government bonds for perfectly sensible regulation, which is very, very sensible for international investment banks. It's just disastrous for SME trade finance in developing markets in Africa and for transactional banks in Africa, because there is only so much liquidity. They literally can have their liquidity from their tier 1 capital and from their deposits. And once that has been used, and once they've bought the government bonds, which they must do through regulation, there is no spare liquidity. And even if there was some spare liquidity, there are other competing businesses within that same financial institution which again, probably for regulation, are going to return better profits for using that very scarce liquidity. Now that's the real source of the problem, and I think there are a number of banks, in the audience, and what we really need to do is drive more liquidity into the banks and make sure that it's directed at the SMEs and they don't just go off and buy more government bonds. Honestly, that's the issue, and there are ways of doing that. The first prize would be to unlock all of the liquidity that's trapped in African institutions, African pension funds, African insurers, and allow the regulations to allow that private capital to flow into the banks in order for African financial institutions to fund African SMEs trade finance.
Yeah.
That would be the first prize, and to unlock, if it's possible, and I really think it is, the trapped liquidity that the banks have the banks are full of liquidity. Again, it's just trapped on their balance sheet in government bonds, and the African financial institutions, because of global regulations, have become, instead of financiers of the real economies and SMEs in the real economies, they have become government financiers.
Sure.
There are ways and means and innovative solutions that can deliver that kind of transformation.
And it's those innovative solutions that we're going to need. Dr. Joel, I've actually been told that time is up, but I'll give you the final word if that's okay.
No, I wanted to add on to what he has talked about to say. Sometimes liquidity is not a problem per se, because there's a saying that numbers don't lie. If you look at research findings, about 80 to 90% of African SMEs will fail within 5 years, which means that mortality rate is high. I want to believe, and I'm inclined to believe, that these are SMEs which were funded by banks, but still they failed. What is the root cause? We need to dig deeper. So this is why I'm saying we need to adopt a balanced approach to come up with a solution that will address the problem that we're currently being faced with. Thank you.
Yeah, look, I couldn't agree. But again, it still goes back to what you said then, George, because it's the innovative ways to actually do this. Because if you understand that information, you take that data and understand why exactly that is happening within 3 or 5 years, you might be able to fund them better or fund them in a more strategic fashion, for example.
Sorry, just to add to that as well, I think it's an excellent point, because underfunding a company is the same as not funding said company. So some of these SMEs are financed by the bank, and I have X amount of limit compared to what I actually need to grow. Yeah. So I'm still constrained, and I'm still going to fail. So I think that there are some attempts to finance SMEs, but if we dig deeper to understand really what do you need to scale, and if the solutions are not tailored for that, you may as well not finance them, and they will still fail because they don't have the capacity to. So I completely agree with that.
Yeah.
I know that you are out of time, but I just want to say that where we've seen it work really well, and I can give tangible examples, is that where it's the development arm working with the financiers, and then where you have other institutions, especially government institutions, coming in to do first loss or guarantees and to mitigate the risk. So the capital becomes cheaper, there's more flow of capital, especially alternative financiers. They play a bigger role, in fact, in financing SMEs than banks do, because they are just a little bit faster, etc. But absolutely, it does work, but if the ecosystem does it together.
Only if the ecosystem works together. Whew. There was a lot at play there. Trying to manage all of this was a little bit tough, but panelists, thank you. Really appreciate it. But it's this vigor, right? It is precisely because of this that if we don't have these discussions, that it's not going to work for SMEs, and their growth will certainly not be at play. Again, thank you so much to our panelists. Really appreciate all of your time here as well this afternoon for sharing your thoughts. Just a very quick picture, if we could take one as well then this afternoon. You're allowed to get closer. We may disagree, but I promise it's okay to take a picture. George, Hannah, thank you so much. Really appreciate it. With that, ladies and gentlemen, I'd like to bring back my co-host, Nzinga Qunta. Again, a warm round of applause, please, for my co-host.
Very good afternoon once again. It's now time to celebrate the incredible work companies, businesses, our partners have been doing across the continent. Arabile.
Yeah, so we decided we'd spend some time, and we did this as well last year, and this was very important to quite a few businesses too, right? The award ceremony to celebrate outstanding contributions to African trade, recognizing everything from innovation, leadership, achievements in advancing regional economic integration, all of that being so important. So we've got awards that we then will be handing out.
Should we start now?
I think we should. We're actually going to ask Mr. Ogbonna if you could actually join us in handing out a few awards as well this afternoon.
Which side?
So you can come up this side, but the award will come through that side.
I think you're going to do the honors of the first
I shall name the
award,
first
Arabile.
one. So you just collect the award from that side, and then the person will come down and take a picture. They'll just collect it they'll give it to you on that side, from that side. Yeah, no, you can wait till the middle. They'll come through and give you the first award. All right.
Okay, just before we go ahead, maybe we should speak about the manner in which we are going to. Arabile, you can go.
Yeah. So what we're ultimately going to be doing during this presentation then, folks, is the awards are situated on that side. We'd like to ask you to please come up on stage over here and head over to Mr. Roosevelt Ogbonna then to receive your award. The awards would be handed to him from the other side. You can pose for a quick picture as well. And of course then, if you could head down back through that other side of the stage. So ladies and gentlemen, we're going to get straight into the awards, I believe, and we're going to try to keep this as seriously important as possible. Please do not shy away from clapping. But
All
you may have
right.
received other instructions, and that's why Nzinga had to meet the important people.
Okay, because we've got Mr. Ogbonna on stage, we're going to start with the African Icon Award. It's one for visionary leadership and an enduring contribution to Africa's energy and business landscape.
All right, well, so
And the
as
award
you
recipient
said,
is?
the winner for the African Icon Award is Mr. Wale Tinubu, the Group Chief Executive for Oando PLC. So Mr. Tinubu could of course not be here, so in absentia will certainly be sharing his award here tonight.
All right, we can call now the SME in Trade Award. That is for outstanding contribution to expanding SME-driven trade and enterprise development in Africa.
And the winner for the SME in Trade Award is the SARD Group Limited in Sierra Leone. Congratulations again. And our next award, ladies and gentlemen, our next award then is the Intra-African Trade Award, Nzinga.
Intra-African Trade Award to a company that's helping conserve scarce foreign exchange, strengthen regional energy security, and create new opportunities for intra-Africa trade and industrial value chains.
And the winner for this award is Dangote Petroleum Refinery and Petrochemicals, Nigeria. have somebody to collect that award for us today. So we move on to the next award, and that will be the Women in Trade.
Women in Trade Award is awarded for exceptional leadership in advancing women-led enterprise and driving business growth across multiple sectors. And the award recipient is
Madame Nicole Kaji, the Kaji Group in Cameroon. I think, if anything, she deserves another round of applause. Yeah, she comes up for Madame Nicole Kaji. Of course, Madame Nicole Kaji not here to join us in person, but still, the award is certainly to her.
Our next award is the Green Trade and Sustainability Award. Arabile.
Yeah, this award is for its commitment to sustainable commerce and environmentally responsible business practices. Nzinga,
And the winner is... And the award goes to the Vinmart Group in the Democratic Republic of Congo. A round of applause, please, for them. The next award is the Emerging Leaders in Trade Award for demonstrating exceptional leadership and innovation in shaping the next generation of African trade. The award goes to National Pride Energies from South Africa.
Mr. Ogbonna, thank you so much for that. Really appreciate it again. Thank you so much for helping us with those awards. All right, for the next set of awards, we're going to actually ask Mr. Nzima if you could please join us on stage to help us with the next few in the Ministry of Trade, of course, for Botswana as well. We'd like to get a few other awards out of the way. So we'll wait for Mr. Nzima. Thank you so much. Really appreciate you helping us with these ones. We may have called you just haphazardly as well, but we apologize for that. Don't worry about it. You don't have to say anything specific. You'll be helping us hand out what is the next award. The next one is
Public Sector Trade Reforms Award, Arabile, for decisive fiscal and financial reforms that have strengthened macroeconomic stability in that country. The award recipient is...
You're going to have to hand it over to somebody else and not to your country. It's the unfortunate part. It's the Ministry of Finance and National Planning in the Republic of Zambia.
The next award is for Regional Trade Value Chain Champion Award.
Yep, this is for their pivotal role in strengthening regional value chains and expanding trade finance across the African continent. The winner is...
The award recipient in this category, African Export and Import Bank, also known as Afreximbank. next award is the Innovative Infrastructure Financing Award. Arabile?
This is for pioneering innovative financing solutions, particularly those that unlock critical infrastructure investments across Africa.
And the award recipient is the African Development Bank.
Your final award that you'll have to hand out, Minister. All right, and this one is the Climate Finance Leadership Award.
It's for global leadership in mobilizing climate finance and advancing sustainable investment across emerging markets.
And the winner for this category is the International Finance Corporation, the IFC. All right, Minister, thank you so much. Really appreciate it, allowing us to bamboozle you as well with this one. This affords us the opportunity to bamboozle one more minister, because it's not often that you get all of them in one room, of course. Minister Mulenga, could we please ask you to please help us hand out the next set of awards?
All right. Our next category is the Champion of Intra-African Payments Award.
Now, this award, ladies and gentlemen, as we just wait for the Honorable Minister in the Trade for Zambia too, this award is about transforming Africa's payment landscape. And that's for enabling seamless, efficient, and secure cross-border transactions. You can take a guess who this might go to.
And the award recipient is the Pan-African Payment and Settlement System, PAPS.
And our next award, ladies and gentlemen, is the Industrialization and Economic Transformation Award.
For strategic investments in infrastructure and industrial development that are reshaping Africa's productive capacity.
The winner in this category is the Africa Finance Corporation, AFC. Thank you so much for that. And
final award in this category of awards, Arabile, the Economic Development Impact Award.
Yeah, that's for the entity's sustained impact in financing trade, infrastructure, and private sector growth across the continent.
And the award recipient is the Trade and Development Bank.
Minister Mulenga, Nonga, thank you so much for that. Really appreciate it as well. Thank you so much for also joining us across this day.
We are almost at the end of our program. It's been an incredible day of insights. Thank you to all the participants across our continent and across the world for joining us both in this room and on our virtual stream of the Africa Trade Conference 2026 by Access Bank. We really appreciate your time, attention, and insights today.
It's been an absolute honor for the both of us to be able to host this, especially for 2 years in a row, and this being a very significant year as well in the lifeline of this. But before we do head off completely, of course, we have Mr. Sher Komapai, the Executive Director for African Subsidiaries at Afreximbank, to just share a closing word. But just a note to all of you as that happens as well, that we'd like to invite you to the networking room post all of this, of course, to interact with all of you.
And just before Mr. Komapai comes onto stage, that is where Arabile and I conclude our MC duties. It has been a pleasure and a privilege to be your host. Thank you so much for today. We really appreciate it. Good afternoon.
Good evening, everyone. Good evening, ladies and gentlemen. I think today for me has been very enriching. It's been a day of thoughtful discussion. I'd like to thank the honorable ministers here. It's a pleasure to have you. Industry leaders, a number of my colleagues. I thank you for being part of the African Trade Conference 2026. It's been a privilege to host policymakers, and I think we spoke a lot about policy today. DFIs, we saw them come through. Business leaders, entrepreneurs. I think your presence for us reflects, the momentum that we're seeing around the African trade future. What today reminded us is that African trade, all right, we only accelerate if we put together all the things that we spoke about today. We spoke about policy, we spoke about finance, we spoke about infrastructure, and we spoke about, the businesses themselves. When we convened this conference last year, the idea was that we wanted to move from talk to execution, from vision to execution. They say that vision without execution is delusion. And I think that for us, we want to execute. There are 4 pillars that came through today for me. Policy. And I think we spoke about policy around, how do we harmonize policies in various countries? How do we, within the countries themselves, ensure that things are not fragmented? All right? How do we create, no tariff, take out no tariff barriers? How do we invest in Africa? The second is around infrastructure. And I think we talked about it in 2 perspectives. Around the payment system themselves. And I think when you listen to Paps, what Paps is doing, when you listen to MasterCard, what MasterCard is doing. Now, clearly, what we're saying is that we want payment. Without payment, trade cannot happen. So trade has to be paid for. So things around, how fast can we go? How efficient can it be? How transparent can it be and lower cost? We talked about finance. And I think, that's really one of the things that's very important. How do you finance trade? How do you finance SMEs? And I think we had that conversation, the last panel. And for me, it's around, and I think the conversation around liquidity, I was thinking about, okay, truly, is it that it's no risk, and it's a good perspective to look at how to finance. Logistics and fiscal infrastructure is very important. Trade does not move because policies exist. It moves when roads, ports, rail, and the corridors function effectively. So we can have the policies, but if we don't develop the right infrastructure, it's not going to happen. At Access Bank, we do this because we are deeply committed to Africa. We are deeply committed to African development, African trade, and we believe that we have the convening power to do this. Over the next 12 months, we are going to make some commitments. Around the first is trade finance. We want to mobilize about $2 billion to support trade and SME in Africa over the next 12 months. On the payment side, we'll continue to work with the likes of Paps, and I think today we are in 8 countries. The idea is that we move and work with them into the other countries that are available. For logistics, we have to deepen collaboration with DFIs and regional partners, because that's one area where things can change so that to reduce the cost of logistics across. We'll continue to work with the AfCFTA. There's work that's going on around the AfCFTA itself. How do you make it happen around the container-free area? Let me leave you with one thought. Let this not be a talk shop. It's really what we choose to do next. The type of partnership that we can build, the investments that we mobilize, and the African business that we grow to succeed. The opportunity before us is significant, it's enormous, it's extraordinary. We are 54 countries, 1.5 billion people, average age 19. What happens there is really about the choices that we make, the collaboration, I think we use that word a lot today, and execute. Madiba said, it always seems impossible until it's done, and we will do it. This conference is not just to inspire us, it's to commit us. Let's turn ideas into investment. Let us turn policy into progress. And I think one of the sessions that I enjoyed today was the Ministerial session from a policy standpoint. And I think I'm going to put on the spot the ministers that what they said about the 3 countries working together will also follow up to ensure that it happens at least from a deliverable from this conference for Access Bank as well. For us, the idea is that we want to turn trade potential into shared prosperity for the continent, because that's what we think we should do. We have the convening power, we have the network, both in Africa and globally, and the idea is that, we need to create the prosperity that Africa needs. Thank you very much for being part of this conversation. Safe travels, but let us get to work. Thank you very much.
For over 30 years, Oando PLC has been more than just an energy company. It began with a dream to provide energy that powers homes, fuels businesses, and drives development across Nigeria and Africa. From our early focus on downstream operations, we are now evolving into a major force in the upstream sector. A Bocha oil center with a liquid export capacity of 120,000 barrels per day, Brass Terminal, a state-of-the-art terminal that serves as a central hub for crude oil export. OBOB Gas Plant, a state-of-the-art facility with a processing capacity of 1 billion standard cubic feet per day. Obanbiri Gas Plant, a vital link in our gas production chain. Kwale Gas Plant, with a gas processing capacity of 150 million standard cubic feet per day. Opai Independent Power Plant, a 450 milliwatt facility dedicated to power generation. Behind every success are the humans of Oando. Our commitment remains steadfast to lead Africa into a future of sustainable energy. Oando PLC, energy to inspire.